All right. Let's see. Let's get everybody on. Shit. Got to figure out what that loose connection is. Good morning, everyone. I'm your host, Cousin Bidding, coming to you from theclosingprint.com. We got about 5 minutes to go. Looks like okay, the White House, Trump and oil companies discuss steps to continue the Iran blockade for months if needed. Okay, that news just coming out a few minutes ago. We did have housing starts. Didn't affect the markets much, it doesn't look like. We're flat to slightly lower. Futures are flat to slightly lower. Okay, we got about 30 stocks green at the moment on the NASDAQ 100. S&P 500 looks pretty green. A lot of unchanged. About the same amount of advancers as decliners, with quite a few unchanged as well. So sort of a mixed open at the moment. We're flat, looking for some direction. Okay, what happened there? Okay. Let's get ready for the opening bell. Oh, you know what I want to do? Let's check and see. Oh, I won't do that here. I'll do it elsewhere. Let's see. As of the most recent filings in early 26, the Pelosi portfolio has undergone a significant roll forward transition. They have essentially moved from deep in the money options into common stock shares while simultaneously opening new leveraged positions that don't expire until January of 27. Okay. Okay. Alliance Bernstein, they're still in that. Vistra Energies, they have 5,000 shares now. Alliance Bernstein, they have 25,000 shares. Amazon, 5,000 shares. New options, they have leaps on the 20 call options, exercise old calls, blah, blah, blah. NVIDIA, 5,000 shares. So Mr. Pelosi, who runs this portfolio, I assume, can see what he usually does. He starts with deep in the money options. If the options work, he exercises, takes the shares, makes profit, and then bought new January 2027, 120 calls on Amazon, the 150 call on Google, the 80 call on what? Exercise old calls, bought new January 27, 80 calls on NVIDIA. Okay. Deep in the money. All right. So we're about to open here. All right. So I don't want to miss the open. Okay. Okay. Make sure. Mic check. Everything cool. Make sure. Mic check. Everything cool. Okay. So check the monitor. Everything's fine. Okay. Let's get ready for the opening bell. First 15 minutes. I'm not doing much of anything except taking profits off the table. NVIDIA pulling back a little bit. Okay, we're about to open right here. And we're open. All right. Let's see what Trace is doing this morning. Trace. Okay. Got a little bit more red on the screen. Oh, that's Charm. Okay, I don't want Charm. I want Gamma. Okay, a little purple. All right, so positive Gamma is good. Got a lot of a lot of longs up here. All right, give it a few minutes for the markets to settle down. ARM Holdings, gapping up. ARM Holdings. Let's see. Robinhood. Okay, starting to rally. Robinhood. Okay, so we'll take Robinhood off at 50% profit if we get there. Right now, currently closer to the 70 strike puts that we have. Hopefully, we see buyers coming in. We see some buyers come in and push this back up towards the 50-day, the middle of the Bollinger Bands. Okay, let's see. Turn up the volume here on this. Okay, NVIDIA is dropping a couple of points. NVIDIA, ARM Holdings, chips pulling back some more. Okay, all the New York Fangs are down at the moment. IWM looks like it might slip some more. IWM, no follow through. Okay, let's see how many stocks are advancing. I would imagine we've got more decliners, just judging by what futures are doing. Okay, so we have 195 stocks advancing, 305 stocks declining on the S&P 500. Okay, give it a few minutes for the markets to shake everybody out, figure out what sort of direction we're headed. Apple. Okay, so we have tonight a lot of earnings. People probably want to get out of the way. There goes SOXS. Semiconductors fading a bit more, it looks like. Okay, what's Bloom Energy doing? Frano stuck it out with Bloom Energy. That gapped up big. All right, so if you sold the 250s, you made $8, but you missed the rest of this. I would imagine this is going to fade a little bit. All right, so immediately right out of the gate, people selling a few things. That New York Fangs taking a hit, ARM Holdings down a bit. Microsoft, Microsoft look for a bounce. So, with earnings tonight, a lot of big tech expecting good guidance and good earnings, but the markets are sort of ahead of them, it seems like, making people contemplate their positions. So, what we were saying yesterday and Monday is that we need to pay attention to the New York Fang. Okay, what's this doing? It's at highs. We've rallied for 5 weeks. This is week number 5. We're fading. RSI is pulling back. So if you have any hedges, SOXS is one for semis. SMH. Okay, still hanging out there. Not doing too bad. Maybe we just hang out in this area. For now, it's okay. Semis. Let's see what junk bonds look like. All right, this will tell us what risk on. Okay, starting to see a little bit more risk off. Let's see the volume. All right, so judging by the volume and the fact that we are holding above the 50-day, it doesn't look like these deep pocket investors are too active at the moment, and yeah, price is holding up here. Okay, so that looks okay. Let's look at advanced decline. I would imagine this is all pointing lower. Advanced decline. Yeah, everything's pointing lower at the moment. All right, so backing off. So today is one of those days where we'll probably be below VWAP again. Okay, like yesterday, we talked about the preceding weeks from February into March, that every day we would wake up, markets would open, and then we would immediately proceed below VWAP and stay down there the rest of the day. So we're below VWAP right now. Yesterday we were below VWAP most of the day until about 1:30, 2 o'clock. Managed to get back above. We're still in this pattern overhead. Not the worst condition. Let's look at the New York Stock Exchange, and then we can start to develop some sort of game plan for today. NYA. Okay, that continues to fade, but it's above the 50 days. So technically, we're above fair value, intermediate term, and short term. We're above the 21-day so far. That could change. But given what junk bonds are saying, the fact that we get a little breath, we got earnings tonight, not really that bad. Not really that bad. So we just sit tight right now and see if we get any kind of bid in the markets after moving lower. People reacting, knee-jerk reactions, not usually the best strategy. Okay, what else do we want to look at? All right, we looked at advanced decline percent. Okay, let's look at the NYSE a little bit more closely. NYSE. We do know that breadth and volume, capitulation volume, okay, we're closer to an area where we'd want to be selling. That's why it's red, versus buying, which was the middle of March, end of March, when we were buying. Okay. Okay. All right, so we had our first red elder stick yesterday. Advanced decline is flat. It's not dropping like it was in early March, okay? We're above zero line. So this is neutral right now. So it looks like we should just wait and see. Wait and see if we get a bid. We do know that semiconductors are ready for a pullback. We also know that energy has been strong, so energy is probably a good place to put some money. Maybe you go hybrid energy where you buy something like Baker Hughes. Baker Hughes is in energy and also pivoting towards AI infrastructure picks and shovels by manufacturing and selling gas turbines for data center use. So that's holding up fairly well. Baker Hughes. Energy looks good. Financials were strong yesterday. Coming into the week, financials neutral. All right, so that's a pretty good rundown there. Let's see what's going on here. We've got NXP, semiconductor, gapping up. Now, these are helping the semiconductor index. There's some like ARM that are pulled back. NVIDIA pulled back. What's Micron doing? Micron. Let's see. We got Seagate. No, that's Constellation Brands. People drinking. That's Seagate. Sorry, Constellation Brands is STZ. STZ. I always get these backwards. STZ is Constellation Brands. Okay, so that's fading. But Seagate looks okay. Storage looks good. They're probably going to keep going. All right, let's take a look at the weekly. Seagate really extended. So if you're taking anything, you're probably a better idea to trade deep in the money options instead of options highly volatile at the money or just out of the money. Not a good idea. Deep in the money makes more sense. You got a recent breakout. This will probably keep going. Okay, you got a channel. All right, these are stocks that are up today. Okay, channel breakout. This is one of Dan Zanger as well as Mark Minervini. They like to trade this channel down after it breaks out. That's one of theirs they like to trade. The other one they like to trade very much, I haven't talked about this much, but I do know that the both of them, Dan Zanger and Mark Minervini, like to trade flat base, right? Flat base, especially if it's a long base like NVIDIA. Okay, NVIDIA's got this 10-month base. Imagine the Pelosi's. They've been sitting in options since last year, January of last year. January, I think they added in March. They had NVIDIA from that point, and all we've been doing is moving sideways. All right, so this is one pattern that Minervini and Dan Zinger both like to trade. They start off with deep in the money options. Same thing Pelosi does. Look for the breakout. We're starting the breakout. So once this gets going, we could see a very nice gain in NVIDIA. It's been unappreciated for months and months and months. So if you're thinking about anything, you got to pull back right now on NVIDIA, Microsoft, Apple starting to bounce. Maybe you think about putting some money into this long term, right? So I would say like January options or further out. That's what the Pelosi's have currently. They have the 80 call, all right, which is deep in the money. They also have 5,000 shares. Okay. Okay, so this is what they got so far. All right, so this is the Pelosi's as of January. Okay, Alliance Bernstein, Vistra Energy. Let's look at Vistra Energy. Vistra Energy. That one was looking pretty good, right? Vistra, VST. Weekly, I was looking at weekly. Okay, that's all right. Alliance Bernstein. That's looking better, Alliance Bernstein. So they have that's one of their bigger positions. 25,000 shares, pure equity play, new position as of January 26th. So they've been in this since January 26th. So let's go take a look. The weekly January 26th over here. Okay, January 26th. So they're pretty much even right now, but they have 25,000 shares. So what does Alliance Bernstein do? It sounds like a Alliance Bernstein. Sounds like a financial firm of some sort. Let's see. AB. They had earnings on Tuesday morning. Provides investment research, management services. That's pretty interesting when you think about it. I wonder if they get any kind of feedback from Alliance Bernstein to the Pelosi's. Provides research, investment management services. I'm just waiting for the markets to bounce. Okay, I'm not doing anything at the moment. Okay, futures. We're still down 17 handles. So anyway, Alliance Bernstein is one that they're in. Okay, NVIDIA. I got 20 call options of each one of these. Amazon, Google, NVIDIA. Those are the three horsemen. Microsoft and Meta probably do something eventually. But Amazon, Google, NVIDIA. I mean, YouTube and everything else that Google has. Been using Gemini for a while. Let's see what that news was here. Okay, we've got Bank of Canada, rate decision, 225 previous, and forecast was 225. Bank of Canada, for those Canadians in the room. Okay, so BOC, Canada. Rates, HODL at 225. Previous, 225. Estimate, 225. No change. Bank of Canada rates, okay, you got 225. Okay, I don't know what the Canadian economy is like at the moment. Okay, futures starting to push a little bit lower right now. Okay, futures pushing lower. Okay, so looking at everything that we have so far, the potential for a pullback, we want to stay above 7,000. 7,100 was the level yesterday. Where are we right now? 7,120. So we need to stay above 7,100. Let's see if they test 7,100. Okay, 7,100 over here. Okay, 7,100 would be right at that trend line. So I'm going to keep this trend line right there. So if we break this trend line, then you can look at potentially 7,000 if you want to go short. Okay. We don't really talk about shorts that much, but if you lose 7,100, then you got to start thinking short term, more weakness. Okay. All right. So the New York Fangs is starting to catch a bid. We got Google tonight. We got the big tech reporting tonight. Okay. So earnings for the week. Oh, we got Microsoft, Amazon, Meta, Alphabet. Okay, Wells Fargo off a little bit. Schlumberger looking for a bounce. IWM, no follow through. Okay, so that's not good. We were looking for IWM small caps to lead, but not the case right now. So the 10-year yield, 10-year, is that moving higher again today? All right, so 10-year is moving higher. So that's the reason. That's the problem with junk bonds, or rather with small caps. That's not helping. That's not helping. CoreWeave, that's moving a bit higher. CoreWeave, for those of you in CoreWeave, CRWV, CoreWeave, a little bit higher. What are the metals doing? USAR, CRML. Okay, Baker Hughes, what's that doing? Baker Hughes, all right, flat. NXP Semiconductors is up, big gap up. Seagate, we talked about. That's up. Western Digital is up. Okay, those are popping up, but notice the wick on the top of the candle. So people are selling into the pops. Okay, Robinhood moving back up. Robinhood. Yeah, experience to your pocketbook. The CEO's talking about Brian Nickel, new CEO, used to be over at Chipotle. Starbucks is a different sort of experience. Yeah, it's an experience of hitting your pocketbook. You buy a medium coffee, it's $7. If you buy any kind of paste or anything, it's like $10, $15. You bring 2 or 3 people in, you bring a family in, you spend $100 easily. Well, not $100. Usually about 40, 45. You get my point, though. They're really expensive. That's the experience you got at Starbucks. A lot of people joke with me, why do you go to Starbucks? I don't. My wife loves Starbucks. Something about her. Okay, she can't stay away from Starbucks. Okay, ARM Holdings. Okay, we're starting to see a little bounce. So people throwing away shares, it looks like. Semiconductors, people are scared that semiconductors will pull back more dramatically. We got quite a few semis that are up this morning. What's Micron doing? Micron, I'm not doing anything yet. I want to see if we get a trend after 10 o'clock. That'll come in the way of hedge flows. Okay, we want to see what hedge flows tell us. Are we going to get a trend day? We're going to fade all day. We're going to stay below VWAP. What are we going to do? So we can plan around that. Micron is climbing up the list. All right, so I just out of the corner of my eye just caught Micron. Micron climbing up the list. We just bounced. Okay, Micron yesterday. Doji today. We're trying to take out the high. So let's see what Micron's doing here. Micron. Micron, I have the 525.30, 525.30. So we need this to move a bit higher, 525.30. I'm all the way out in September right now, 525.30. I might go take profits in these once we get up to 530 and buy deeper in the money options on Micron. Just looking at the pattern on Micron. Okay, so I was telling you this morning, I don't talk about this very often, but Dan Zanger and Mark Minervini, they both trade these. Okay, so you got basically a ascending triangle that broke, or a flat base that broke. It broke down. So you can look at this as a triple top, but once you get the breakout, now you have the direction and the volume speaks. All right, so you can see that most of this is buying volume, institutions. You can see very clearly see the base. Okay, here's the base. So you want a big run up into the base. Okay, same thing happened on Nvidia. You get the big run up, and this actually starts way back in 25. You got a big gain. You get a base at highs. It breaks out. Continuation. You know institutions are active. Just judging by this volume by price area here, all of this right in here, that's the base. So did it break out or did it break down? It broke out. So our direction, we should assume, is going to continue. That institution's going to continue to buy Micron. No reason to believe that they won't, judging by price action. So we want to be long Micron. I'm currently long. I know it took me 2-3 minutes to explain that I'm long Micron. But what I plan to do is once we hit 530, that's my maximum strike. I'm going to sell that position, probably start buying shares, buy a few hundred shares of Micron, start selling covered calls perhaps. Or I could buy deep in the money options. Okay, instead of buying spreads, I'll start buying maybe the 400 strike, something like that. Something like a 60 or 70 delta out in January or maybe even June of next year. Leaps. Not doing anything right now. Brian Nichols is still on talking to the Yahoo spokesperson, opening bid. I forget the guy's name. Anyway, so Micron looks good. Futures, NVIDIA trying to bounce. Futures are bouncing. We're 11 off 11 handles.
So the good news is we've made tremendous progress on throughput and hitting these time metrics. And then what we're also doing is we're setting our teams up with process and equipment so that they can continue to build on that great throughput. You know, we'll be in short order rolling out a new Mastrena, which is our espresso machine, where you'll be able to get 4 espresso shots in like less than 30 seconds, which today that takes closer to like 80 seconds. So we're going to try and set our teams up to be successful, to meeting the customer with the customization that they want, and obviously the speed that they want, and then ultimately in the environment that they want.
Brian, I cannot wait for that schedule ahead to roll out. I'm certainly excited that's coming tonight.
What's on the penny stock list here? Penny stocks, nothing worth looking at. All right, TEM, that's one that Pelosi likes. Tempest AI, that's not going anywhere. NVIDIA is down. Inside day again. All right, so we had an inside day yesterday, NVIDIA. Inside day again. This is Harami for now. So we're looking for a direction. Okay, Google. All right, Google. I realize I'm like all over the place right now. Google, looking good. Earnings tonight. Let me look at my Google position here. Google. Okay. Google for earnings.
And that's the model we're after, and that's what we'll continue to do. My experience has been it works in all environments. Sometimes the environment's a little harder.
Okay, Google. Microsoft with a nice bounce on Microsoft. What's going on there? Microsoft. Okay, we got buyers at the low of the day. Microsoft. Boy, I hope they don't disappoint. Last earnings, they gapped down. They talked about their spend on AI data center. They beat, but the spend, markets didn't like it. They sold off into February, March. All right, we got a sort of a W bottom, a lower low. This is another one that Minervini and Dan Zanger like to trade. Okay, so you get a W shape with a lower right leg. So you got this pattern here. You get the W pattern, right? Got a lower low, and then the markets take off. What do? They break out above the pivot. All right, so this is not unusual. Most of the more well-known traders, investors, like William O'Neill came up with the idea many moons ago. Tom Bukowski, same thing. A lot of the things that they talk about, same people talk about, the ones that do well, Dan Zanger, Minervini, etc. So you got this W shape. Once you take out the middle of the pivot, that's telling you what direction to anticipate. The bulls are definitely in control. So we need to see earnings create this kind of a pattern and breakout on Microsoft. They got earnings tonight. Okay. Nice bounce. There goes Amazon on the move. Amazon tonight. Okay, my Amazon position's cooking with gas right now. All right, Amazon. I'm going to hold on to this through earnings probably. Amazon. Okay, so we got basically a multi-year top and breakout on Amazon. Is Bezos selling any more shares? No. There was a while there where he was trading right around what? It was 100 or 90 or something like that a few years back. Finally broke above that. There goes Amazon. Google's looking good, going vertical. There goes Apple. Apple's on the move. Okay, Apple looking good. Apple got an upgrade from UBS to new target was 277. Not too far away from that. We still need to get green on the day. Nvidia's having trouble. Netflix looking for a follow through. Netflix. Okay, this is day number 9 on Netflix. We're looking for Netflix to get back above the 50-day. Had a hammer yesterday. Do we follow through? Obviously, we take out yesterday's low. That would be a break unless we hit the low and then turn back up and create a bullish engulfing at the low. All of these are things that you should consider if you're in Microsoft and you're thinking, or Netflix, you're thinking past next couple of weeks. I'll be looking for price action to take out yesterday's high and eventually the 50-day before I start adding to my position. ARM Holdings, not too great right now. Number one stock on the NASDAQ 100 and S&P 500 is NXP. NXP, that broke out, big gap up. It's a doji now, so this is something you might want to consider buying. Okay, if RSI gets down here below 30 and price action hangs out right here and if it starts to turn back up, that might be a long setup back up to the highs. Bloom Energy, Frano's in this one, holding up fairly well. Okay, Nvidia still pulling back. Nvidia pulling back. Okay, looking to buy some Nvidia. All right, so Nvidia, you know what's going on with Nvidia. We got this big base, which we're struggling to break out of the base now. Okay, so once we get going, that's when I'll start adding to Nvidia. I have shares of Nvidia. I'll start adding to that and maybe buying some deep in the money options like the 200 strike, something like that. Something below Money Magic's put levels. If you're not using Money Magic levels, you're missing, okay? You're missing a big piece of the puzzle. Okay, so 200 is the lower put wall for Nvidia. I think this is today's update, right? Yeah, thank you, Money. Thanks, by the way. Okay, Nick. Trade Desk. Yeah, I want that above 35, Nick. Trade Desk, that's one that Frano mentioned a few weeks back. Over here, okay, we wanted to get this above 33. Yeah, I like that. I like it a lot, actually. TTD, like it a lot. Frano first mentioned it. First week of March. All right, today it's clear in the 50-day. Okay, so this is another one. Okay, I'm gonna cover like the 6 patterns that Minervini and Dan Zanger like to trade, the ones that have made the millions, right? So this is one as well. Okay, you get a downtrend. I mean, this is pretty obvious for most people. You get the downtrend, the same thing that Oracle's doing, right? You get the downtrend, you get the trend break. Once you get the trend break, you know that that's phase two. Phase two is the longest part of all the phases, tends to last the longest. So if this took 6 months to get down here, 8 months to get down here, you can look for at least that much, if not longer, on the upswing. So you buy deep in the money options. Okay, so you buy a 22 or something like that, or a 20. Let's say you buy a 20 call. Let's see what those go for. Okay, a 20 call on Trade Desk. And when's their earnings? Just want to make sure I don't miss this. Trade Desk, they had earnings right now already, right? Trade Desk. They missed expectations. Okay, that was May. They're going to, again, on May 7th. All right, so maybe this continues to break the trend after they've reported earnings next week. Advertising. Apple, Amazon, Google, Meta, these are all starting to pipe up. Okay, so maybe something in Trade Desk. They report next week, though, Nick. Mm-hmm. Yeah, I like it. I like it. Yeah, check with Frano. I think she's still in that one. Trade Desk. I got stopped out. I got stopped out at 31 for about 8%. 8% loss on that. Okay, futures are making a higher low. Okay, let's see what Trace is telling us. Okay, generally I like to wait until after 10 o'clock anyway. So starting to see a trend, maybe. Looking at Trace, there's no trend yet. It's just sitting here. Okay, we're just sitting here right now. A lot of positive gamma, a lot of purple. Background is purple. Background is purple. Okay, let me just go here. Let's see, okay, so background is purple, you can see. Whenever it's purple, that tells you that positive gamma regime is in effect. As long as we stay above 7,100, we should look for support in this area. Okay, you got that purple there. Let's go to non-zero day. Look at all the non-zero day. This is longer dated options, okay? So you can see right where we're starting to bounce in this area. We need to get back above 7130. So let's go look at that. 7130 S&P. Okay, we're right at 7130 right now. So we want to get above 7130. And the rest of these New York FANGs should start to pick up a bid after everyone's sold. People sold into the pullback, probably regretting it now. Why did it get shaken out yet again? It helps if you wait. All right, so a lot of people look at the opening range, okay, the first 30 minutes of the trading day. If you move above the opening range high, it tends to be a bullish day. And that also goes for VWAP. If you're above VWAP, like S&P is above VWAP right now, if you get above the opening range high, 10 o'clock, the high right here on the S&P is right here. So if we get above this high right there, you can expect to see VWAP turn up and for it to be a bullish day. If we take out the opening range low, it makes sense that would tell you look for a bearish trade because we'd be below VWAP. VWAP would turn over. Yesterday we had most of the day was below VWAP, so it was a bearish morning. And then around 1:30 or so, 2 o'clock, we moved back above VWAP, as you can see over here on the left. Okay, so this is 1:30 or so. We moved above VWAP over here now. We're waiting for VWAP to show up. So we're looking for that trend. Okay, I'm always looking for the trend. Amazon continues to move. So if you're in Amazon, you're doing well. Okay, Amazon. Okay, I got Amazon calls. I'm looking for a big blowout in earnings. I buy just about everything on Amazon. I mean, what's the point? They have a warehouse over by the airport now. So if I order something today in the morning, I'll have it in the evening. I don't even have to go to the freaking store and deal with the lunatics there. I do like to go to. I have this fetish with TJ Maxx. I will say I have a fetish with TJ Maxx and Home Goods. I love to go to those shops because I would rather buy a Ralph Lauren shirt at TJ Maxx. My son was looking at one yesterday that I bought for him, Tommy Hilfiger. You know, they retail at what, $70? Tommy Hilfiger, Ralph Lauren retails at around $100. Why would I spend $100 on a shirt when I can get it at TJ Maxx for like $20? There's no way I'm going to do it. So I love to go there because it's kind of like I'll buy new shirts, wear them for a year, I'll donate them, and I'll buy new ones. So they'll always have new shirts. I buy him stuff. Anyway, I know I'm rambling here. I'm just waiting for the markets to reverse on the chips. See if the chips can catch a bid. Okay, trade desk watching that. All right, so we got Apple to pop back up. Apple, we still need the Apple back above yesterday's high. Okay. Apple earnings tomorrow after the close. Tonight we got Amazon, Meta, Google, Microsoft. Okay, these look pretty good actually. Google on the weekly. Google weekly. All right. Okay, futures continue to rise. We're going single digit now. We were down double digit. Now we're back to single digit. Oh, you know what I wanted to check? I wanted to check. While I'm waiting on the markets here to firm up a little bit, I got to check something here. Give me a second. Okay. Marriott. Got to mute you for a second. All right, so stocks like, let's see if ARM Holdings will hold up here. Let's take a look at ARM. Looking at day trades, okay, so if you're a long-term trader, not doing much right now, I'm not adding to any portfolios or anything like that. Being we're up for 5 weeks, but short-term trades, let's see. Okay, so you got an oversold condition with ARM Holdings coming off the low. It's not the best setup, but it should continue to move higher. ARM Holdings off the low. Buyers showing up at the low. That's a good thing. ARM Holdings. Let's see what Microsoft looks like. Microsoft or day trade with earnings tonight. Okay, so we got oversold conditions at the open. Microsoft. Not a bad setup. Amazon. Okay, that got oversold right at the open, and then blam, it just took off. Okay, Amazon looks really strong. Okay, so you can't chase this. All right, this is not something I'd be chasing. Nvidia might be a trade, right? Nvidia. I know Frank likes to trade Nvidia. Frank, do you usually use RSI when you're entering? I would imagine you do. Okay, so this is what I'd be looking at. You got a higher low on RSI. You got a lower low on price. Now you're reversing. RSI is rising. Looks like a good trade at the moment. Okay, I'd like to see it get above this 211 area or even this area. So that's first resistance. Put a stop underneath 210 or even the low of the day at 209, 209.50. Okay, that's only a buck. That's only a buck. So going long Nvidia makes sense here. Okay. Okay, so that looks pretty good on Nvidia. Okay, ARM Holdings, we just talked about ARM, okay? ARM already starting to move here. Okay, so ARM and Nvidia, those look good. 1 minute charts, day trades. ARM.
Yeah, great question. But first of all, I think it's important to understand what it is we're trying to do here, because we are developing a very breast cancer, breast cancer.
Nvidia.
Breast cancer is
Okay, so there you go. Nvidia.
medical treatments, and then you wait. You wait and you do regular scans to see whether the disease returns. And if it returns, because you clinically can see on the scans, you retreat patients. That's what is called first line treatment, second line treatment, etc. What we want to do here is intercept the disease return much earlier.
Okay, for day trades, that looks fine. Stop low of the day. All right, let's see if they get a follow through in Nvidia. Maybe a better entry. Amazon's gone. Amazon. Longer term. TRBCX, RGA, FX, SPHD, Devo, SCHD.
And if you see the CSR1 rise in the blood, then you retreat patients and you treat them with stem cell product. So if you consider that it is very innovative and a total change of the paradigm change in the treatment of breast cancer, you shouldn't be surprised that the FDA wants to have a discussion about it. It's important to remember this design was discussed and agreed with the FDA. The PFS endpoint, that is the measure of the efficacy of the drug, was also agreed, and we have a very clear efficacy result on the PFS endpoint. The product is safe. So, we are as optimistic as we can be, but of course it's for the ODAC to decide this, to discuss the treatment paradigm itself, but also the drug. And we look forward.
All right, let's take a look at some of the longer term stuff. All right, Nvidia trying to turn up. All right, so I'm eyeballing Nvidia because I'd like to add to NVDX for a day trade. Where's my cursor at? Where is it? Okay, lost my cursor. That's messed up. Okay, let me turn this on and off. There we go. Trackpad back. There we go. Okay, so, let me look at some of these longer term things. SCHD. Okay, this is trending. SCHD. This has quite a few really good names. It pays a dividend every 3 months. Okay. SPHD, on the other hand, trade pays dividends every month. Last week of the month, SPHD. Okay, that's still hanging out. I've had this since 2014. The dividends pay out monthly. So what I do is have that rolled back into more shares. And as you can imagine, that has built over the last 12 years quite a bit, quite a bit. So I got in initially in 2014, right after it was offered. I like the stocks that are in it. If you want to take a look at it real quick, I can show you what's in SPHD. This is for the long term. If you're saving for kids for college or whatever, this is a good one to look at. Let's take a look here. Edit. All right, so here's SPHD. This pays monthly. Okay, you can see who's in this. I haven't updated this in a while, but same. This most of these companies are still in here. They paid dividends for the last 50 years. Many of them have been around a while. Especially Coca-Cola has been around for over 100 and something years, right? Coca-Cola. Um, Philip Morris, Altria. Many of these. Some of these are new, like Broadcom, obviously. But it's got a expense ratio of 30%, 0.3%, which is $30 per year on every $10,000. That's nothing really. A dividend yield of about 3 point. I think this is actually higher now. I think it's closer to 4%. So, and it pays out once a month at the end of the month. So if it's something that you're interested in for like your kids, this is a good place to start, because it pays the dividends and it just keeps adding shares every month, every month, every month. Compound returns here. Very good. Okay, so you start out, your kid's 2 or 3 years old, you buy some of this right now, and 18 years from now, you have something to draw against for college. Who the hell knows how much college is going to cost, 15, 20 years from now. Anyway, that's one alternative. And if you have this option or something like this in your 401k, maybe you consider it. If you get your 401k, if your company, you should check with HR. But if your company offers a company match, like most companies will match 50 cents for every dollar you put in. So you put in up to a maximum, I think is anywhere between 5 and 10,000. If your company matches 50 cents for every dollar and you can get a max of 10,000, you deposit $10,000 a year. The company matches it 5%. You're automatically making 50% on your money, right? So it's a no-brainer. 401k or Roth IRAs, you pay the taxes up front. You don't pay it when you take it out. Those are options you can talk to a financial advisor about, but I would definitely look into it if you have that option. If your company if you're a corporate employee, or especially if you're a corporate officer. If you're an officer of a company, vice president or higher, or even a director, not director, board director, but director level, that's one step below vice president. Yeah, that's good. That would be good for you. All right, Amazon's still going here. I know I got off the track here. Amazon looking good. Got Amazon shares, and I have calls. Amazon, let me take a look at those calls.
This was a party line vote. All Republicans, 13 of them, voting in favor of Warsh, and all 11 Democrats on the committee voting no, all by proxy except for Senator Warnock. So all Democrats except for Senator Warnock not present for this executive session in the Senate Banking Committee. This is ahead of that vote. And for all the Senate Senator Elizabeth Warren had some harsh words for her Republican colleagues, saying that they will come to regret confirming Warsh, and that she reiterated he is going to be the president's, quote, sock puppet, a line we have heard from her repeatedly. And Julie, this is
God, she's so annoying, Elizabeth Warren.
we're unclear what happened before current Fed Chair Jay Powell's term expires May 15th, so just a few weeks away. And Governor Warsh would be in place. This vote was allowed to happen today because a key member on the Senate Banking Committee, Senator Tom Tillis, who had vowed to block Warsh's confirmation until a criminal investigation into current Chair Jay Powell was resolved, went ahead and going for this today, and that's because U.S. Attorney Janine Pirro blocked that investigation. Right. That is up to the Fed's Inspector General. Any criminal wrongdoing there, no investigation is expected to be reopened. So Tillis will offer.
Okay, so Amazon looking good. Amazon, I have shares and 275 to 270, 275 call spread. Okay. Do I want to buy any puts just in case? Calls are very expensive on these. Okay, so we've been talking about this. Brent talking about it this morning. Okay, so looking at all of these, Microsoft's expensive up here in the top right-hand corner, Microsoft, Meta, Google, Amazon. So these could lose some implied volatility if this value, if you will, if the markets pull back. If I don't, looks like Amazon's going to just go straight up here. Amazon. What's Robinhood doing? Robinhood. Robinhood. Okay, getting close to this lower strike. So we've got till next week. Looking for this to bounce at some point. Robinhood. CoreWeave. CoreWeave's on the move. What's going on with CoreWeave? See CoreWeave here? CoreWeave. On the move. CoreWeave. Okay, I need to add to that CoreWeave. It's on the move though. CoreWeave. CRWV. CoreWeave. Nice bounce here. Okay. CoreWeave on the move. They report next week. CoreWeave reports next week. On the move. Earnings next week. CRWG. Is that what you're looking at? CRWG. 2 times. 550, 592. 550, 592. Earnings.
My wedding is coming up, and I want to feel fabulous. New Weight Watchers app gave me a healthy, personalized plan that worked for me. I look in the mirror, and I'm proud of that girl. I was at the store with $12 in my account.
and an empty fridge. Payday is still 3 days away. HSBT may resume in less than a minute. In less than 5 minutes, I got a tilt cash advance up to $400 sent straight to my account with no interest, no credit check, and no stress. Groceries covered, no guilt, no games. Check your eligibility, catch your offer, and move through life with a little less weight. Visit tilt.com today. Cash that meets you where you are.
At Habitat for Humanity of Horry County Restore, we accept donations and sell
CRWG is another way to trade it.
building materials and more, all at a fraction of the retail price. Every sale helps us to partner with local families to build, rehabilitate, and repair safe, affordable homes in our community. With 2 locations,
AMD, CoreWeave on the move. AMD bouncing. Okay, so if you're thinking about a day trade on AMD, okay, so look at the 5-minute or the 1-minute chart. Okay, got oversold early this morning. Now it's starting to run. A lot of people are short AMD up here, selling premium. Okay, Intel, Intel, gapping up this morning, Intel. All right, so those puts that I have are going to be worthless at this rate. Intel, let's look at the weekly on Intel. Okay, so big cup and handle. Okay, this started last couple of weeks ago. 4 weeks ago, this broke above the 50 level. That was a big cup and handle. And now it's basically going to be a double quickly. Nice trade on Intel for those of you in it.
Taking public almost like a direct listing, and that business itself is also a very interesting business because it receives the fees from the funds that we manage, and as our assets grow with performance and compounding, the assets under management and the fees grow over time. So it's a asset light, very fast growing business, and it's a business that actually does not need to reinvest capital into the business. We can pay very significant dividends. So that's a very interesting operating business. It's the company I work for, the company I'm the CEO of. And then this investment company, DSUS, or Purchase Square USA, is a U.S. version of, well, today we only manage money in offshore funds. It's our first U.S. listed vehicle, and it's the first hedge fund. If you think about it as a hedge fund, it's the first hedge fund that doesn't charge performance fees. If you look at our record for 22 years, it's been a 19% compounded return. And since we've had permanent capital over the last 8 years, it's been a 24.9% annualized return. So it's been a high performance investment vehicle now available to the average investor.
Bill, when we last talked, I believe it was Milken conference last week. Now the next one is coming up next week. But you and I talked a lot about, it was at the time we took that very big stake in Howard Hughes, and you were explaining to me your, I guess it was a desire to create some form of modern day Berkshire Hathaway. How do you today help you achieve that?
Okay, ARM Holdings reversing back up. ARM, Intel looking good. ARM Holdings. Okay, looking for the bounce in ARM. CoreWeave continuation. Okay, what's Palantir is off again today. Palantir, Intel, crazy. Intel strength. Futures back to green now. Futures finally back to green. Futures.
insurance industry over the last 25 years. Mark is joining the board of Howard Hughes. He's also joining as a partner at Pershing Square. He's going to help us build that company. Howard Hughes is actually going through a transition in their shareholder base, which I think creates an opportunity, which is the shareholder base historically has been really dedicated real estate investors. Now we're transforming to an insurance company, diversified holding company. We haven't had an opportunity because we've been busy with other things, recruiting a new base of shareholders. And that's left us somewhat behind. The stock, I think, at year end was 89. As we've made the move to acquire Vantage, the stock has declined. Really, I would say, for short-term technical reasons as opposed to fundamental ones. Ryan, our CIO, and I are going to be at the Berkshire Hathaway meeting on Friday. I don't know if you guys are there or not, but we'd be happy to have you there. We're giving a presentation, really a Q&A, but we're going to talk about our plans to build Howard Hughes into, as we say, a modern-day Berkshire Hathaway.
You've since expressed interest in Universal Music Group. If you were to gain control of that company, would that be another key component of building out this portfolio like Berkshire?
So, we have Berkshire sort of one consolidated vehicle. We have really three, but Universal Music, will be an important position, very likely in Pershing Square USA.
Okay, CoreWeave looks good. ARM Holdings reversing back up. Got a ways to go to get back to Monday's high. Intel performing well. Intel is going to be a double soon. Okay, so that's a crazy move on Intel.
Transaction is a merger where shareholders get 5 euros in cash and they get stock in what we call new UMG. And new UMG listed on the New York Stock Exchange. We're going to recast the board. Michael Ovitz is going to join as chairman. We're going to redo the balance sheet. We're going to set the company up for kind of long-term success as a public company. We're going to improve the company's outreach to shareholders. We're going to monetize some hidden assets. That's kind of the extent of the transaction. Right now, the board is studying the transaction with the help of some advisors, and I hope to report more as we make progress there.
You said something recently that I really appreciated. You told investors out there to stop worrying about the war and that this may ultimately lead to a large-scale peace dividend. Why was that? And focus on stock valuation, which is very important. Like, what made you say that at that moment? Are you still as bullish as you were when you made those comments, given we are now trading at record highs?
RDAC, you may resume in less than a minute.
Yes, actually, when I made those comments was pretty much the bottom. The market sort of took off after I put out that tweet. It took off, meaning made a major recovery to your point to a new high. But I think this is one of the great moments to be alive, to be an American at a time of incredible technological.
Okay, Intel is still looking really strong here.
Largely for good. Obviously, there's risk with AI, but I just seeing all the use cases in healthcare and automation and productivity, and it's going to create the opportunity for every citizen to basically be an entrepreneur. Be able to build things, write software. I think it's going to lead to acceleration in economic growth, and we have other accelerants. All this spending, CapEx spending in connection with AI build out, the energy.
By the way, Minervini and Dan Zanger, another one of their favorites is obviously the cup and handle. That's like the most recognizable pattern. Intel, giving it in spades, broke out at 50. It's almost at 100 now. That's crazy. Where did my chart go? Microsoft, Intel.
For taking down a regime and a terrorist operation, a military operation that was a great global threat. It's not over yet, but we've denuded their capabilities, and it makes the world a meaningfully safer place. So I think we've done an incredible job.
On the AI front, you're a holder of some well-known tech companies. When you hear the journal story was yesterday, really impact a lot of these tech players because of fears they might miss their targets. I mean, as a tech investor, do you get more concerned?
Demand for AI and compute is approaching infinity. I mean, I think
Okay, everybody's talking about Intel. This thing is just gone. Lights out for the bears. I did have some puts. I'll be doing something with Intel shortly. In the money options, most likely for next year. Looks like Robinhood is right at the money, 70.88. Looking for that area to get cleared out and then reverse. CoreWeave. Okay, that's at the highs. Just taking a break here.
I followed your career really since I arrived originally as a stock analyst in Wall Street. When you were a hedge fund manager, you were doing various certain things in the industry. And I always think that Bill Ackman, I think Bill Ackman in New York City. You employ people in the city. You are New York City. What do you make of what the mayor said recently? Are you at the point where you want to move out of New York City? Take your office, take the jobs you create, and move down to Florida.
Yeah. So I don't want to move out of New York City. What I certainly don't want the mayor to do is encourage other people to move out. We don't want to lose Ken Griffin and Citadel. The economics of New York City are such that 1% of the population pays something approaching, I think the number is 35-40% of the total tax revenue of the city, and the top 10% might be 75% of the total revenue. So the business model of New York City works in large part because it's the finance capital of the world, and a lot of very talented finance people, hedge funds, etc., want to locate here. You don't want to discourage them from doing so. And a policy that attacks Ken Griffin or mayor that attacks Ken Griffin personally, but he's a major job creator, some of the highest paid jobs in the city. He spent a lot of money here, giving away a lot of money here. Very important.
Yeah, going after Ken Griffin, that makes zero sense. Why Mamdani would do that? He's so immature in a lot of respects, the way he's coming across. He's no financial magician, that's for sure. Like Ken Griffin and the rest of those people. All right, let's see. Looks like Oracle wants to reverse back up now. Oracle. Okay, Intel's looking good. Oracle, nice reversal. It needs to get going. This has not been the best week. ARM Holdings coming off the low. ARM Holdings. Okay, if you're looking at the 1-minute chart on stocks like ARM Holdings, okay, you got oversold conditions. I told you this about 45 minutes ago. This looked really good. Higher low. RSI gets oversold, starts to move. That's when you would get long. Okay. Did you get long on ARM Holdings? Looking good. Looking good here. Okay. ARM Holdings.
RTAC may rise in 10 seconds.
President Trump knows who he can count on to deliver for our country, and Mark Lynch is not. Trump called Lynch a lunatic and a disaster for the Republican Party. That's why President Trump has given Senator Lindsey Graham his complete and total endorsement. He can count on Lindsey Graham to get the job done. President Trump said it best. Vote for Senator Lindsey Graham all the way. And he loves you and he loves his state.
Arm Holdings, nice reversal. CoreWeave, or another one, CoreWeave, okay. CoreWeave off the, you can see right at the open, oversold. This one starts to take off. CoreWeave looks good. You could also do CRWG. These are all good. Right now, they're starting to see a little profit taking. It's okay. Looking for more follow through. CRWG, I have shares. I'll hold on to these for probably next couple of years. I'll just hold on to these shares. Let's see what the USAR, the metals are doing. Okay, those are coming off the low. USAR. Okay, continuation likely, most likely moves to the upside. Sort of a cup and handle, kind of ugly one, but looks good weekly. All right, that's okay. CRML, similar look. MP Materials, they're all doing the same thing. Got a descending wedge on CRML, looking for all of these to move higher. MP Materials, it's working today. Working. NXP Semiconductor gapped up quite a bit. Watch for these wicks on the top of the candles. NXPI continues to see a bid, so that's good. Generac Holdings, Generac, we're coming into hurricane season, which tends to be a good time for Generac. Okay. Hurricane. October. Generac, GNRC, tends to catch a bid. Generac.
Those shares are soaring as well, 23% right now. This was also viewed as a strong quarter from the company. And I thought this was really interesting. The company's margins are getting better. Its capacity overall is expanding. Morgan Stanley's David Arcaro, who covers this stock, said basically that this is no.
Yeah, I've had CoreWeave shares, that CRWG for a long time. Still okay. Still good. Still good. Stop under a low of the day. Has earnings next week, though, for what it's worth. Yeah, Andrew, this is fine. This looks good. It's a flat base. Flat base. Should break out. The CEO talking about consumer spending remaining resilient, and that is something we've been hearing from some of these other. All right, it's the center of data centers future. Next 8 to 9 years. The CAGR, is like 35%. Buy a couple hundred shares and forget about it. Yeah, this is a no-brainer in my opinion. You got a compound annual growth rate, Andrew, of CoreWeave for the next 8 to 9 years. It's going to take 8 to 9 years to build this all out. They're in the center of it. They're in the center of it. You look at the weekly. Okay, you're close to the bottom. Okay. CoreWeave, a different story, a little bit better. From the IPO, it's up 3 times. But I could easily see this get back up to the highs. in the meantime, you can just be adding along the dip here and there. As it dips, buy a little bit.
These revolutionary treatments will help you lose up to 20% of your body weight with just one weekly shot. With Better You, get the nutrition coach and companion app you need to support you every step of the way. You can lose weight and transform your life. Get started today at betteryou.care/lose20.
Play Yahtzee and win rewards.
I don't have to do options with the leverage, but that said, I am looking at the possibilities of doing some deep in the money options.
Let's go check out cryptocurrencies brought to you by the National Cryptocurrency Association. We are seeing Bitcoin have a little bit of strength today, up above 76,000 once again, but sort of in the upper part of the range where we have seen it as of late. Like everyone, crypto traders going to be watching over here any more developments on the Warsh confirmation. Of course, we got that vote moved out of committee, and then of course what's going to happen with the Fed later on today, and then also what happens with big tech earnings, since that's pertinent for overall risk in the market. We're also watching crypto-related earnings. Robinhood reporting after the close yesterday and seeing some weakness in its crypto business. On the flip side, some of its other divisions growing well. The new event contracts, aka prediction markets.
Core weave. All right, starting to dip from the highs right now. So it did get a little chase. Chase was on a little bit. Let's see. Robinhood. Does Money Magic have Robinhood in his? Yeah, you had Robinhood on here, right? Yeah, Hood. You've got 90, 75, and 73. We're below all the put walls. Robinhood. Let me just go check. Okay. Robinhood. Okay. Okay, the put wall, he has a put wall at 75, so we're below the put wall. All right, so we could see a little bit more weakness short term, a little more weakness on Robinhood. Looking for buyers to step up. ARM Holdings had a nice little run up there. Okay, Oracle looking a little better. Okay, here's ARM, Oracle. All right, so Oracle is at the 21 day. Looking for a follow through.
I mean, because this is a pretty capacity constrained plane market. It is hard to get planes. So where are you getting them?
Well, we have long-term agreements with the three major suppliers that we utilize. Gulfstream, mainstay of our fleet, and Lightning and Supernet aircraft, as well as with Bombardier. So we just signed a record transaction deal with Embraer last year. We bought 7 planes to take us through 2031, and we did the same thing with Gulfstream just recently for the new G700s and new G500s.
I want to talk about how much it costs for someone to join a Flexjet, and this is fractional ownership of the jets, effectively. So how does that work exactly?
So remember, let's take a step back. Our customers really aren't thinking about it on a trip-by-trip basis. They're really making long-term commitments on how to deploy capital and how they want to move around the world. So our model, fractional model, is the closest to whole aircraft ownership. So you end up deploying some capital depending upon the size of aircraft you want to utilize. So really everything's mission driven. Think of a mission as how many people, where you go, and how often. So that drives the size of the aircraft that you would like and the size of the share, sort of how many hours a year you want to fly. And then you pay a monthly management fee to and you expect a level of readiness, if you will, when you show up, when you pay an hourly rate when you fly. So
And do members have access, like, are you operating like major airports, the smaller airports that tend to be more oriented to
Yeah.
business travelers? How does that work?
yeah, so we'll go anywhere that's legally safe. But think about it, there's about 500 commercial airports in the United States, and there are 5,000 private airports. So you have this multiple, you have a 10 times number of aircraft.
Okay, futures flat on the day. It's down $1 now, 1 point rather, down a point. Oracle still pushing a bit. All right, stocks did rally off the low. Most likely, a lot of that was shorts covering. Then about half an hour into that bounce, we probably got some new money come in. Now both are either closing their positions. The longs are probably taking a little profits off. If you look at the 1 minute charts that we like to look at on something like, say, ARM Holdings, which had a nice run up. We told you that this was a good setup this morning. Okay, so you get oversold, it runs up, it nears the recent highs, and RSI gets overbought and it starts to roll over. People start to take profits. Are we going to follow through? Maybe. That's one example. Let's see. Amazon was another one. Amazon right out of the gate was overbought. Okay, oversold rather. Overbought just about what 30 minutes ago, and now starting to flatten out. We got earnings tonight, so expect that these could fade a little bit or hold the highs for now, being its earnings. Microsoft, another one. Microsoft, okay, oversold conditions, higher low. Both RSI and price action hasn't gotten any kind of follow through yet, so I don't really like that one as much. Apple, oversold at the open, starts to rise. That's your long setup. Looks like it might go some more. 277 is the UBS target that was announced yesterday. We gapped up in the morning. Look for that to follow through. CoreWeave, CRWV. Okay, again, oversold at the open, gaps up, makes a higher low. RSI stays above 50. It starts running. You see the volume, MACD's okay. You got a nice long setup. Now that it gets overbought on a 1 minute chart, you're thinking about, okay, maybe take a little profit off. If you go out to the 5 minute or 15 minute, you'll see a little different picture. 5:15. Okay, so if you're going to trade on the 15 or the 5, don't switch back and forth. Okay. Yeah, higher high, and we got up to overbought, and we're seeing a low profit taking. So if we clear this level and start to base out above 113, 112, 113, this is looking pretty good for CoreWeave. I'm thinking about buying some in the money options on CoreWeave, just not doing it at the moment because it has earnings next week. Maybe after earnings, we'll see. Do have CRWG. I've had that for ages. And we're just sitting here. Okay, CRWG and CoreWeave, haven't really moved much. I've had CRWG, I don't know, since last year. It's been chopping around. Really haven't thought much about it because I'm looking at the bigger picture. It's got a AI data centers, AI build out, has a CAGR of like 34%, I believe it is, year over year. So 34% year over the next 8 to 10 years, you can definitely make a lot of money from an investment standpoint, just buying shares and just forget about it, which is what I did. So at some point, data centers are going to really start to kick in, and that revenue growth will start to kick in, earnings growth will kick in, and we'll be up in the 150s, 200s before you know it. That's my thoughts on CoreWeave. The whole thing could come down like a house of cards, maybe. I don't know. That's a black swan event. Nobody can plan on that. You certainly can't invest with the ideas, okay, well, I don't want to invest now because we could see a black swan event. That may not happen. We haven't had one of those. We could debate since the last black swan event. That was the great financial crisis, right? We had COVID. I guess that would be considered one too. Black out of the blue, COVID hit. Markets drop over 20%. The most recent pullback was 10%. The pullback in April was 20%. So you can't invest around that because you'll never be invested, right? You just have to invest for the long run, because over the long run, the markets are going to move higher. I mean, that's probably one of Warren Buffett's most famous quotes, right? He doesn't like day traders. He's all about knowing the companies that you own, understanding what CoreWeave does. That's pretty obvious what they do, right? Powering the next wave of AI. AI hyperscaler delivers cloud platform, cutting edge software powering the next wave of AI. So picks and shovels, right? And I believe APLD is one of their big clients, if I'm not mistaken. APLD, Applied Digital. Similar kind of look, Applied Digital. Eventually, these are take off. Okay, so the elephant in the room right now is, what do we do next, right? We've rallied for 5 weeks. This is week number 5. What do we do next, right? Okay, so what's the most current, or what's the nearest similarity to what we're experiencing right now? I would say it was April of last year. We had a 21% pullback, plus or minus. Once the president said it's a great time to buy, the markets rallied. And looking at the weekly, it rallied for what, 8 to 9 weeks, 10 weeks. It finally made it back up above the previous high. And what did it do? Did it roll over? I'm not saying that that's going to be the exact case now, but it continued. So if you're an investor and you're thinking, okay, we're up here at the highs, I can't buy right now. Well, maybe you wait a couple more days to see what comes out in the news. Oil is a problem. That's the one big caveat. You got the 10-year yield moving a bit higher. The dollar, is the dollar lower? Let's take a look. Dollar. Understanding the mechanics of where the money flows and why is a big part of investing. It's really not that complicated. You know, you've got Forex, the foreign exchange market, currencies, trades in the billions and trillions, right? Every day. You got the bond market, which is 2 or 3 times the size of the equity market. So as far as a pyramid is concerned, the most trading is in Forex. That's the bottom of the pyramid. The next layer up is the bond market, sovereign debt, etc. And then the top of the heap is equities, you know, small caps and large caps. So understanding where the money flows and why, right now, I don't see any reason to be that concerned about the markets. If you're concerned, you want to keep an eye on the New York Stock Exchange. Okay. So what's the New York Stock Exchange doing? It's currently fading. Okay. So this is sort of leading, wagging the tail right now. The dog's wagging the tail. So is this an early warning? I don't know. It's hard to say. Junk bonds look okay. So it just looks like people are taking profits, reducing their exposure. Some rotation back into chips. Chips are a bit extended. So thinking out loud, I was expecting the chips to drop off even more, right? So I did reduce my exposure in SOXS, by the way. Okay. I just reduced it. I still have it. I just reduced it. Mainly because of what I saw with NVIDIA yesterday. NVIDIA had a nice little bounce. And of course, NVIDIA, we're considering this particular flat base, which is one of the favorite patterns that Minervini and those guys like to trade. So once this starts to break out, the longer the base, the higher in space. So 10-month base, Dan Zanger, Minervini, and the big investors that trade or that that look at these patterns and go, okay, the next level's coming up. Why did they just do a 10-month base? Because it had run up quite a bit. NVIDIA had run up a lot. So the key to this pattern is you need a big run up. You need a big run up into the base. Didn't expect it to be a 10-month base, but the big run up, the base, the next direction is what you're looking for. In this case, we want to be bullish. So we want to be thinking, all right, I want to be buying shares. You could buy NVDX, right? You can buy NVDU, is it? NVDU? NVDU, is that one too? NVIDIA long. Okay, so NVDX is 20 bucks. NVDL, the Granite shares, 2 times longs, that's 100, 105. All right, so it's 5 times as much as this. So NVDX doesn't move as fast as some of the other ones, but NVDX, NVDL, Direxion, 2 times shares, that goes for 140, even more, but it has a much greater ATR, so it moves about $7 a day. So if you're like me, you're thinking, okay, I want to catch this next big wave in NVIDIA. We see what happened the last time. Okay, so we had this base, and the base rolled over. Okay, it rolled over, found a low, eventually pushed up out of this base, broke out from the low up to the high, gained quite a bit. What was it? About 85. It's about 100 points. About 100 points base. So I'm looking for NVIDIA to continue higher. So my strategy, my thought is, okay, I want to be in NVIDIA, but I'm in no hurry because I know that this is going to take months and months and months on the next leg higher. So no rush. But I'm definitely earmarking some funds for this. Maybe after the earnings this tonight and tomorrow, we'll see whether or not we pull back in a little bit or if we continue to move higher. Technically, this is still in a base, a little bit higher high. Okay, so technically we're in a base like this now, a little bit with those highs. So we had the longer base, this longer base. Now we have this base to deal with. Once this breaks out, I mean, NVIDIA keeps inventing more chips, and now they're dealing with quantum. Okay, they were with IONQ. They basically gave the thumbs up to IONQ. What's that doing? IONQ. So IONQ. Okay, that faded a little bit more. So we're looking for IONQ to push higher. There is a YouTube channel. It's called ticker symbol U. Ticker symbol U, YOU. He's really good. Really good analyst, if you will. He's specifically in tech and AI. Check him out on YouTube. He has a recent video, I think it came out yesterday or the day before, talking about the quantum stocks. Futures continue to fade. Okay, we're off. We're just sliding a little bit more. All right, so it looks like it's going to be a throwaway day. Doesn't look like we're going to go very far today. Okay, back to here. All right, so it looks like this is going to be a doji day where hedge flows will move back and forth. The good takeaway of today, if you're worried about the markets, the good takeaway is it's all purple. The background is purple. The red isn't until we get much higher. That's higher volatility. Purple means we'll probably stay in this area. Okay. We want to be above 7,100. We're currently 7,130. If we lose 7,130, it's possible we head back down to 7,100, test it again, or test it. 7,150 was the level. What was it last week? Early, was it Monday? I forget. Let's go back to Monday. Monday, 7,150. Yeah, 7,150 was We were above it on Monday, right? It was Friday. Friday, we were looking at 7150 as rejection. All right. So 7150 was the major level on Friday. We moved above it into the close. A lot of these positions, you see these over here. A lot of these positions had to close or got stopped out or whatever they did, rolled them out, whatever. So 7150 was a big level, 7160, and now we're dealing with 7100 to 7130. So I'm not that concerned about the markets. I'm just not that active right now. Okay, so I've been talking a lot. Tesla's lower. Okay, stocks don't feel like they've got much. People not that interested, it seems like. Oh boy! If you're just joining us, I'm your host, Cousin Vinny, coming to you from theclosingprint.com. This is the day that you really think about your longer term investments. While the markets are hemming and hawing and chopping people up, trying to day trade, if you're not taking a 1 minute chart with RSI oversold earlier in the day, you're looking to take a long now. That's not the best idea. Okay, so I can tell you, a lot of these have run out of steam. Okay, so if you look at the 1 minute chart on ARM Holdings, for example, okay, the setup was this morning when it was oversold. Okay, everything dipped. We got the higher low, started to get some momentum. That's when you want to take it. You don't want to take it now when it hit RSI overbought. Now you're looking for another setup, actually. ARM Holdings might get another setup. So that's what to be waiting for if you're going to day trade. Right now, I'm just doing some analysis while we're waiting for the markets. Okay, watch ARM Holdings. Stocks like this that have pulled back, watch your 1 minute chart. If your 1 minute chart shows RSI oversold, you might have a setup. What's NVIDIA doing, for example? NVIDIA. Okay, let's look at NVIDIA. NVIDIA. Okay, so getting back to almost oversold. All right, so it's very possible that we jump above that red line. That's the 100 period moving average on the 1 minute chart. If we jump back above it and RSI starts to turn back up, that might be a setup there. Apple. Okay, Apple. We got a higher low in Apple, actually a lower low from the 10 o'clock down to this 11 o'clock. RSI is right there. If RSI starts to turn up and prices get back above, maybe a trade there. It just feels, the market just feels slow right now, like there's nothing going on. Okay, SOXS is starting to tick higher again. SOXS. Think about long-term positions. Think about your long-term position. Sorry about that little pop there. Don't know what that was.
We're just everyday people that found a really simple solution. And that one simple solution changed everything.
Have you heard of berberine? It's the viral metabolite
All right, currently watching what Apple's doing here, NVIDIA. See if they get anything going. No follow through. So it feels like the markets have had their little run up so far. Watch ARM holdings. Maybe the semis get another bounce.
If I came up to you, and you clearly know cars, you love cars. If I came up to you and offered you 20 million for it, is that, or you're just like, man, you plan to keep this for the next 20 years? Like that's not even.
Yeah, I mean, I think if you owned an original copy of the Declaration of Independence or the Mona Lisa or Salvador Mundi or insert any other iconic scarce collectible, you want to sit on it for a long time. I don't view these as trades. I'm not a scalper. I'm not an arbitrage trader. I think your analogy to that of Berkshire Hathaway is spot on. I think the way I view collecting is what are the things that are going to stand the test of time?
WING.
For a category like Pokemon, you know, 33 years old, I have brothers of mine that are 8 and 10 respectively, and they are addicted to Pokemon in the same way I was as an age. And you've got this like second and likely even third generation. And often the gold industry I find interesting as an interesting analog because you literally go mine for gold. You go dig it up, and then you polish it off, and then it becomes a part of the circulating supply. I view treasure hunting as gold mining. And specifically, what do I mean? Well, even a few months ago, there was these two brothers that were in their grandma's attic. Grandma had passed away. They were rummaging through her stuff, and they found the first edition 1938 copy of Superman. And they were looking at it, and they were yeah, they were kind of curious to answer that exact question. And wow, this is in pretty good condition. My intuition is
Okay, ARM holdings starting to turn back up. So you see your oversold condition on ARM. Okay, so your stop would be underneath 197.50. Okay, so that's a buck. Can you get $2 upside? Yeah, we could definitely get $2 upside. 198 to 201. All right, so you can get $3 upside. You got a dollar stop. Okay, so 1 minute chart. Okay, they're already starting to come in right now. All right, so they just came in. I didn't type fast enough. ARM. One minute chart, firing along. Stop, 197, 197.50. Looking for 2 to 3 points upside. Okay. Let's see if we can get it going here or not. Okay. So I'm just looking at a day trade. I'm not very active today, just kind of sitting back and waiting. What is wrong with this freaking cable? It's pissing me off. Okay, I don't know what's, I got to buy some new cables. I apologize for that. ARM.
That's true, yeah. So, I mean, first of all, it is ridiculous that 60, 70 million years ago, these things were walking around. And T-Rex in particular was the apex predator on this planet.
197.50, 197.50.
Saying it out loud is realize T-Rex, there's some juveniles out there. There's some fully grown fossils that have been discovered. If you go to the Field Museum in Chicago and you stand in front of Sue, which is the most complete T-Rex ever found, these things they are 40 to 45 feet long, 14, 15, 16 feet tall. Many of these things weighed north of 20,000 pounds. So you and I, 200 pounds each, plus or minus, we're not really interesting to animals of that size. We're like rodents, okay? We would be a topless appetizer for a T-Rex, okay? And these things were hunting down Triceratops, and a lot of those two in particular were used to battle now for tens and millions of years. And I've had the luxury of going to Wyoming in particular and contacting a bunch of paleontologists and trying to understand how this process works. How do you unearth dinosaur fossils from sediment? And the circulating supply of dinosaurs that have actually been found are quite small. You're talking dozens of T-Rexes that have been discovered in full since 1902. Same thing with Triceratops and Stegosaurus. People like Ken Griffin, back in 2024, he bought a Stegosaurus named Apex for $44.6 million. And that was the highest price of any dinosaur ever sold. Cassandra Hatton facilitated the sale at Sotheby's. She's super savvy, really interesting collector, and broker at the highest level. And the initial appraised value of that Stegosaurus was a modest $5 million by experts and paleontologists. And yet, that Stegosaurus was so compelling, so complete. You have to understand, like, when you find a fossil, it's often you're finding fragments. God forbid, in 60 million years from now, they find your arm, it's not a fossil. You're just a bag of bones, right? So most fossils, you start to get into quote unquote fossil territory when you're above 25% completion. You've got 206 bones in the body, so if I find 50 to 60 now, okay, we got more of a fossil as opposed to a bag of bones. And when you click into the fossil market, you start to realize there's all these nuances. There's bone count, but there's also bone volume, and then there's completion threshold in different pieces, right? Like for a T-Rex, well, the most iconic subset of the fossil is the skull, obviously, because you have these crazy teeth that in some cases are 10 to 14 inches in length. When you have them next to each other, they look so different, and they're bigger than your head. Yeah, they're bigger than your head. So there's a market for skulls, for instance. There's skulls that have sold privately for many millions of dollars. A lot of these fossils, they don't come up for an auction with frequency. The Abu Dhabi government, for instance, bought Stan from the 70s for about $30 million.
Okay, so that arm is working out so far.
That market, by best guess, it's very high opacity. The total market cap is around $8 billion in terms of circulating supply of fossils that exist. Dude, this is like where we're headed. Where we're headed. I need dinosaurs. Sure, I feel you have long-term vision. What do you do? Do you want to go like the Josh Ruger route? That's easy. Great chance to have a great conversation with you about. Do you want to create a marketplace? Do you want to create? You just want to pour a bunch of this stuff and store it in different places. Like, what is it? Yeah, for me, I mean, I want to get this stuff out into the world in some way for people to enjoy and experience. I think a lot of collectors, they can have a hoarding mentality where they've got vaults in Switzerland and Singapore and it's underground and it's kind of disappointing. So I think what you'll see from us at the Treasure Trove is figuring out creative ways to get the stuff that we bought on display. And we hope to partner with a lot of museums around the world, places like MoMA, and the George Lucas Museum, Narrative Storytelling, the Nintendo Museum that opened up in Kyoto. There's all these places in every major city where people want to experience this stuff. So for us, you'll see a lot more treasure hunts and a lot more media content, a lot more things that we have in our pipeline that we're interested in buying. We want to get those things out. Well, I hope to see a lot more of you. I think it's very fascinating. Like I said at the top, we appreciate the partnership with Dad. So much to probably meet you. I think you're doing some really cool stuff. And good luck. Check out the Yahoo Sports Collectibles. I gotta check it out. I mean, it's awesome. Yeah, it's pretty awesome. Good to see you.
President Trump knows who he can count on to deliver for our country, and Mark Lynch is not it. Trump called Lynch a lunatic and a disaster for the Republican Party. That's why President Trump has given Senator Lindsey Graham his complete and total endorsement. He can count on Lindsey Graham to get the job done. President Trump said it best. Vote for Senator Lindsey Graham all the way. He's a good man, and he loves you, and he loves his state. Thank you, Lindsey.
Obtén el nuevo Samsung Galaxy S26 Ultra con Super Steady Video por $0 con intercambio elegible, cualquier condición y sin necesitar el plan más caro.
Winning cash pop on South Carolina Education Lottery. It's easy. What would you do with the cash is entirely up to you. I mean, who knows what it might take.
I've been using Experience Boost to help raise my credit score, but Experience Boost is even better because now my monthly insurance payments could help boost my scores too. It does it instantly and discreetly. So get it through the Experience.
At Better You, we've helped over 10,000 people with their mental health challenges. And now we're offering weight loss treatments with Ozempic and other GLP-1 medications. These revolutionary treatments can help you lose up to 20% of your body weight with just one weekly shot. With Better You, get the nutrition coaching and companion app you need to support you every step of the way. You can lose weight and transform your life. Get started today at betteryou.care/lose20.
At Habitat for Humanity of Horry County Restore, we accept donations and sell new and gently appliances, home goods, building materials, and more, all at a fraction of the retail price. Every sale helps us to partner with local families to build, rehabilitate, and repair safe, affordable homes in our community. With 2 locations in Myrtle Beach and Long, we're open Tuesday through Saturday. Shop, donate, volunteer. It's the Ringer Podcast Network. Are y'all ready? Let's do this. This is the best idea of all the ideas.
We always prioritize each other.
I am so psyched for my special guest here. One, because he's a really nice guy. And then number 2, I still enjoy and drink here or there or 2 a week. Maybe 3. Greg Hughes, President and CEO of Centauri Global Spirits. Good to see you, man. Here, so come down. The last time I saw you was at a company event, and I had a couple. I was trying out your latest selection. I don't know. It's a big umbrella. Because obviously, at the Centauri whiskeys that people know, the Vicky and Yamasaki and Mark Shoe, but then a giant bourbon portfolio, Jim Beam, Maker's Mark, all the small batch bourbons, great cookers, bakers, the tequila portfolio, Tornidos, and Tesoro, the gin portfolio, with Roku, and Six Nuts. So it's a broad portfolio, and that's how you can get into the RTD business, where we're the RTD leader in Japan and China. So we have nice 116 and box portfolio in the US and portfolios of the world. So it's a big portfolio.
All right, it's 11:30. Just taking a few notes here. Watching this ARM Holdings. Okay, we're nice little follow through so far.
So I asked my local team in Chicago, hey, who's the whiskey account in the Chicago area? Because every major city in the world has some, most of what they're selling is really being sold through private sales for some. And so they made an introduction to me. This was back when I was in the marketing years ago. And I started doing it once a quarter. And my brief to June, who runs the shop, was show me everything my competitors are doing that's interesting. And he would bring things out across, whiskey, across other categories as well, taste me through it, talk about it. And it was a great experience to get a sense from one of the top whiskey purveyors in the country. What are people doing that's interesting? And my wife is excellent. Yes, I do. Yes, it's mandatory. So over the years, because I've kept that up, it's now about twice a year.
All right. So if you're trading ARM, just watching ARM here, RSI got oversold again. So that's your setup. Look for the push higher. 197.50 is your stop. Just watching. We're up. If you got in at 199.50 or so, you're up 50 cents, 60 cents now. ARM still pushing. ARM working.
If I think about some of the ones that really sell for a lot of money. So if I think about
FSLY.
so there's a charity event once a year called the Distillers Memorial. And you produce one bottle of this product. And this is a good example. So scarcity and exclusivity drives.
Okay, ARM is working. Okay.
Which I think in this case was a 50-year-old Bowmore, which is just an exquisite liquid. And then it was in a pack that was made of like onyx stone.
INTW. INTC.
Sold for $800,000.
RPGL.
Okay, let's see how far they go with this. Okay. I'm going to go to DC again. I'm going to go to DC again for July 4th. I was just booking a reservation while we're waiting. If I can get a closer hotel, I'll do that. Washington Hilton. That's the one that they had the issue with, right? The recent issue with the president. Wasn't that the Hilton? Okay, Tesla. All right, Tesla is another one. Okay, Tesla is another one. Check out Tesla, TSLA. Okay, oversold. Okay, there you go. Oversold 370. You're up $4 now, so probably be chasing here, but you could put a stop underneath 373. Okay, Tesla. Okay, 371, 371, 372 entry level. Stop. Low of the day, 370. All right, it's at 374 right now. At 374. Okay, watching. Same setup. Okay, same setup. 1 minute chart. RSI oversold. Okay, you saw that with ARM. We just looked at ARM. Okay, ARM coming back in a little bit. If you move your stop up to flat. All right, no follow through yet. Netflix, looking for a follow through. Netflix.
We continue to work on the bourbon side, a lot of age statements on Creek. So you see like 15, 21-year-olds, so continue to see that. We've got some really interesting stuff coming out with Booker's. Freddie Noe is pushing on Booker's Reserve. He's kind of, the funny thing in whiskey is, right, the label comes out because you're registering TTV with one of the products. So the Booker's Reserve label came out with the fact that it's finished in apple brandy casks and a little bit of cinnamon infused. And the whiskey, they just lost their mind. But if you hear the backstory, that's a little bit what Booker did to make, some bourbon for the fall. So Freddie's releasing a Booker's Reserve that uses Booker's Rye, which won World Whiskey of the Year in 2017. And using that Booker's Rye, they infused with a little bit of, the apple brandy and cinnamon. So that'll be really interesting. On on the House of Suntory side, we continue to do lots of interesting special releases, particularly for local retail. The Security Y series comes out again this year, which is each of the blending components in Nagasaki released as a separate bottle.
That is my
set.
Nobody's paying me to say this. I just like it. It was good. It's delicious. It's delicious. I never tried Japanese whiskey until that company did years ago. I bought I don't know, a rye from the store. It's just amazing. It's a different experience.
It's great, and Nagasaki, a team won Supreme Champion of the International Spirits Competition this year. It's the third year in a row Nagasaki Brands won. It's the first time
All right.
Back to back. So they're going from strength to strength with Nagasaki. I'm excited when we start to bring some of the age statements back. The 12-year-old and 17-year-old, which we had to take off.
I haven't thought about it.
Yeah, we took 12 and 17 both off.
What's in there now? What am I drinking?
There's a 21 and there's a Vicky Harmony, which is a no age statement.
All right. So Netflix pulling back a little bit, looking for that to get oversold. Give us an opportunity. This is day 9 after earnings. Tesla looking okay. ARM pulling back a bit. Nvidia is oversold, right? Nvidia, another 1 minute chart. Nvidia, another 1 minute RSI setup. Stop under 210. Okay, Nvidia is starting to move right here. All right. Starting to look good here. Nvidia, do we get a follow through? We got to get through 212. Needs to get through 212.
Yeah, so there's a lot of press, as you know, about Gen-Z's not just lows of beverage alcohol, because if you look at all the spirits suppliers, 5-year period until 2019, pretty much everyone was up, somewhere between 4 and 6%.
RSI turning up. Let's see if it goes. Okay, it's a slow day. Volume. Slow day across the entire market.
So inflation has been a real killer for the beverage alcohol sales. People are choosing between rent and gas and food and a night out drinking or
Cocktail sometimes.
yeah,
Cocktail now, little cocktail run.
RTAC unit less than 10 seconds.
It's crazy.
So you see that, and so that's affected what I would call the broader cyclical problem. You see a lot of premium. So very common thing among Gen Z, because cocktails are so expensive, is they will pregame at home, and then they'll go out and have 2 drinks instead of, whatever they were having before. So there's an element of saving money through pregaming that people are doing. So that's the cyclical. So that will adjust once people's incomes get back, but particularly inflation. This legal drinking consumer.
Okay, ARM Holdings looking for a higher high now. Higher low, higher high. Okay. IWM fading. It doesn't look like we're going to get that leading IWM to lead at the moment with the 10-year higher. Looks like we're going to have to wait a little longer for that to set up for us.
President Trump knows who he can count on to deliver for our
Okay.
lynch, a lunatic, and a disaster for the Republican Party. That's why President Trump has given Senator Lindsey Graham his complete said it best. Vote for Senator Lindsey Graham all the way. He's a good man, and he loves you, and he loves this state. Thank you, Lindsey.
And okay. Now here's something you didn't realize until just now. You're probably overpaying for your hotel. That's right. Not your fault, really. It's just the same hotel has way too many prices.
All right, so we're watching for this to turn back up. Okay, NVIDIA. Looking for this to get above 212. All right, no follow through yet. No follow through. There's just no momentum. No follow through yet. So it would be worth even waiting and see if we can get through 212. If we get through 212, then the momentum should be enough to push this higher. Right now, we're not following through. So just be aware of it. The setup isn't a guarantee. It's just a setup. So we're looking for it to work. Either it works or it doesn't. Okay, futures are not following through. That's not helping. Futures pushing it a little bit lower right now. So we're looking at hedge flows not going anywhere. Netflix fading a bit from the high. Amazon off the highs of the day. So looks like people are waiting for the end of the day, looking for those earnings.
That's why I opened Till. In less than 5 minutes, I got a Till cash out up to $400 sent straight to my account. With no interest, no credit check, and no stress. Answers covered, no guilt, no games. Check your eligibility, catch your offer, and move through life with a little less weight. Visit Till.com today. Cash that meets you where you are.
So much. They're still out there, but that's not really the big driver is what I was trying to say. Who, where, and what. So the problem is, if you look at developed countries, the US, Japan, and Europe, the generation that's becoming the developing countries is a lot smaller than the younger generations. So we just have a natural in developed countries, it's just a small population. They're starting to peak at the same rates.
Okay, we're coming back down a little bit. You can see this sine wave and hedge flows. It's telling you we're not going anywhere. The purple is also telling you that we have a lot of positive gamma, so that should help support prices. I see a little bit more red coming in overhead. That's telling us there's some longs coming into the market. If we get above 71.45, 71.50, I doubt we do, but if we get above this 71.50, there's not a whole lot of resistance overhead. This is non-zero day. 0 day, there's nothing between here and 71.70. You got support just below 71.25, so that probably holds for now. This is 0 day. Non-zero day, it's a little bit more support in this area. The takeaway is the purple is telling you stability. We should hold. We should hold unless some news comes in.
think over the last few years, and the last year being an exception, there were significant pricing sustainable for those weeks. So while that's still maintained at a price point, pretty much every category and every pricing category shifted. And that stopped a couple years ago because demand is definitely supply has called for demand. So you're seeing people stop with as much price realization. But then you go into the bar, and it's power is higher, labor is higher, the wages to keep up with the cost of inflation, the cost of food for them to be able to operate is higher. So that all goes into what's driving up the cost of cocktails in general. It's
Right, so that's a debunking there. The other one, I've seen so many stories. Excess inventory is unsold and there's all things for it. If you see a warehouse somewhere or deep in underground lab, is that possible? Are you seeing on massive amounts of unsold whiskies of single location around the world? Does that exist?
Well, I'd love to do it, but it's not in a secret location, but there's a lot of inventory. The good news for that is as a whiskey lab, the quality of whiskey is going to be consumer. Older expressions are going to come back. The challenge is if you think about that dynamic, right? In 2015 to 2019, everyone was growing at 6%. And no CEO walks into work and says, you know what I'm going to do today? Just bullshit. Maybe you should. So you're like, wait, so you're like, okay, category's growing at 6. I'm going to distill to 8 or 9, depending on how much share you want to win. Okay, so think about that as the demand dynamic. Now, the average age of bourbon in Kentucky is 6 years. The average age of scotch is 10. So roll back 6 years to when distillation decisions were being made, and everyone was forecasting the category was going to be up 7%, and they were going to grow at 8%. So they laid down enough whiskey for 7%. And so if you think about this, you're like, okay, well, so you end up with a lot of whiskey, and this is how the industry is always. You're undersupply, sometimes you're oversupply. That's why they're age statements. That's why you see some. That's why things like, wow, there's 50-year-old or more. Now,
Okay. Sine wave, not giving us much direction. Core weave is just kind of hanging out the highs. Amazon looks like it might move back up.
So you want to work through that. I think most of the heritage distillers are sitting on most people will adjust distillation to move that down, and depending on the age of the whiskey, you'll be through that. And just to give you kind of a sense,
you may rest in 10 seconds.
if you take LaFroy, 10-year-old scotch, you sell about 500,000 cases. And so if you think about it, well, a 10,000 case slowdown in LaFroy doesn't seem like that big of a deal on a 50,000 case brand. But keep in mind, if you have a 10-year-old liquid, that means if you slow down and reset your base 10,000 cases, you have 10 years worth of 10,000 cases.
This is about
Exactly. So you end up with 100,000 surplus overnight if demand goes down 10,000 cases. Now, you just have to adjust for that, and we'll come back into balance pretty quickly. So I think people will be probably back in balance on bourbon in a year or two, scotch in 3 or 4 years. It's just, it's going to be a little bit of time.
Is there a secret now we listening to do
To get onto these.
This is that.
Feel free to reach out.
Appreciate it. You mentioned ready to drink too, and I visited the States. There's so many options at this point.
It's a high innovation intensity category. So
My wife just bought big too. It's like punch.
Excuse me.
It's we see it because the category in Oceania and Japan are much further along in terms of their development than the U.S. And you see just an innovation intensity cycle of new products, new flavors. Part of what drives the category is flavor innovation. So you see a level of product coming in much more like a fast-moving consumer good than spirits.
So it's a category where challengers and disruptors come in, much like we're seeing a lot of food categories right now. There's a lot of energy around the challenger brands coming in, disrupting the incumbent brands. In RTD,
All right, looking for CoreWeave to bounce, looking for the markets to bounce. We got positive gamma. So with a sine wave, it's just telling you look for more of this kind of choppy price action. Let me just take a look at the number of stocks advancing here. $148 advancing. So that's not very good. Not very good at the moment. NYMO has dropped below zero. So at least in the short term, it looks like we're going to be below VWAP some of the days of this week, if next and maybe next week, as NYMO heads back down below zero, heading towards a recent low, which was about 87, minus 87. That could change, but for now, NYMO is below zero, so that's telling me the current fade probably continues. So I'll be looking at the S&P 500, not looking for a big move to the upside, though we are holding up here. So we got a doji spinning top. Doesn't mean we have to pull back, just means that the momentum has slowed. So I'd be, at this point, only maybe looking at day trades. ARM Holdings not following through, so that's coming back as well. NVIDIA also pulling back. So the markets are not following through at the moment. Okay, so we're just kind of easing back into this. 7,100 is a threshold we need to stay above. 7,100. Okay.
So I think you will see some assets being taken offline for a bit to get capacity back. At first, people will solve the inventory challenge, and then people will need to then pretty quickly start thinking about how to address the excess capacity challenge.
As we wind up here, you spent a decade in the food industry with certain craft foods.
P&G and
P&G Craft Foods. You know about Chipper? Yeah, he created, I think, the Swiffer.
Okay, yeah, all right, cool.
Yeah, this is an interesting time for the food. I was talking to Ramon Eduardo in Mexico, and he was talking about the changes he's doing with his portfolio, GLP-1s, and how consumers are eating smaller pack sizes. Like, this is a fascinating. Like the next decade for packaged food, it's going to look so different. Do you see it that way?
I do. I mean, I've been walking grocery store aisles and really looking back at the food categories. I've been out of the food business for a bit, but I just joined the Rossetti board, so I'm sort of back paying attention to food. and other than as a consumer, and you look at the categories and the emergence of some of these challenger brands that just are taking these categories by storm, whether it's Goodles versus Kraft Mac and Cheese, Chomps versus a brand like Slim Jim.
I'm going to do Chomps. I mean, no disrespect to Slim Jim. I mean, Chomps.
They're great, right? So you've got these, you've got these products that deliver incredible quality, clean ingredient lines, and
low tick alert minus 800.
Okay, so we got a low tick alert. All right, so we're going to pull back. We just made a new low there. New low.
Maybe one of their competitors, they all it was about pricing, and we used marketing to drive the category growth, and then we kind of managed price gaps to keep that. Now, you've got this disruptive energy coming in.
Extreme low tick alert.
Okay, moving back down. All right, everything's pulling back. All right, so stops are going to get hit. Stop's going to get hit.
It's interesting. I was
Market's pulling back. All right, so there we go. Just like that.
seems to be translating a bit over to some of the trust in institutional brands. And as a brand builder, the thought that you take a little bit for granted in the past, that your consumer would be there for you. And now you almost have to work as hard or harder than the challenger brand to prove that just because
Okay, what was that? What was that? That is Trump would consider military action if Iran does not act.
I love not
Breaking.
At my core, I'm a risky consumer.
I was hoping you were going to say that.
Yeah,
Like, no way.
Now free nine on the rocks. I'll make a bold which is basically a riff on the brain. And I love the Vicky spoiling myself with 20 years. Super excited for the 17.
All right, so Trump considering military action if Iran does not act, whatever that means. All right. So there goes, what is that? There goes Chevron popping.
And the whole process is making sure we have this incredible perfectly clear ice for all the good stuff. So yeah, you're done. I gotta get that. Okay, Greg, good to see you. Thank you.
I appreciate listening to you mutual friend.
Very good.
That's it for the latest episode of Opening Bid Unfiltered. Appreciate you. Always tuning in. Talk to you soon.
All right, there goes Chevron, oil up.
Obtener el nuevo Samsung Galaxy S26 Ultra con Super Stereo y video por $0 con intercambio elegible, cualquier condición y sin necesitar el plan más caro. MSTZ.
I wonder why they call it support beam. I don't know. But it tastes like berry. Orphan farm? That's it. I'll never eat here again. Nope. 1 star. Organ the best. Yes. Play now.
This is the new Weight Watchers. It works for members like JoJo, who's learning simple, healthy habits. Sharia, who's making progress with meds. And Kim, who still gets to eat what she
Yeah, wrong president to mess around with. It's not a vote, plus or minus, okay? That's just what I'm seeing here. So risk off, currently, hands off, risk off. Longer term stuff, longer term. All right, so a lot of stocks are pulling back a little bit. I would just take your hands off the buy button at the moment. Just wait for the markets to settle down. We could see a dip, a further dip out of this. We're already starting to see a bounce. Let's see what happens here. The Iranians are playing this game like they've played since Carter, doing whatever they want and just keep stringing things along. I don't even know who the hell is even running the country now. Most believe it's the ISRG, but what's left? All the generals and colonels and everybody from the top 3 or 4 levels are gone, right? So here we are coming into the end of April. And no resolution yet. All right. Let's see what's going on here.
Not only that, we have Kevin Warsh clearing a major hurdle here with the Fed Clarity Act not gonna happen, and Paul Tudor Jones saying that Bitcoin is the best inflation. We're gonna dive into that and more right now. Let's go. What is up, everybody? Welcome to the Daily Wolf on Yahoo Finance. I'm your host, Scott Melker, also known as the Wolf of All Streets. We've got 15 minutes with me. We're going to dig into the biggest stories in macro and crypto, tie them all together and figure out what actually matters. We're going to do that right after you follow me at Scott Melker right down there on X. So the first story, we can view it as a little bit of breaking news here. Senate hurdle heating up final vote. You remember this guy, our new Fed chair that's worth billions of dollars? That Morschbucks, our new name for him. To be honest, though, that one's a little dated. It's a little bit Scarface and Andy, so we made this young daddy. Anyways, we know that now he's cleared this first hurdle, getting out of the Senate banking. Elizabeth Warren, the head of the anti-crypto army, into absolute hysterics. She thinks that he's a Trump sock puppet. You remember all of this, but it seems like a shoe-in that Warsh is likely to become the next Fed chairman. That means that this may very well be the last FOMC press conference that we ever see from Jerome Powell in just a few hours today. Powell will be out, but we may never get these meetings again from Kevin Warsh because he thinks that they're nonsense and thinks that Fed governors should keep their mouth shut and stop talking to markets in both directions. Now, you guys know that at this point, the FOMC meeting is effectively the Super Bowl of markets. Jerome Powell counts out on stage, and if you go short, he's got the briefcase in the left hand. If you're long to the right hand, he sniffs or scratches his nose or winks his eyes at his wife. Markets literally react to these kind of things. I think it's good news that we're no longer going to have 75 speeches a week from Fed governors and have to watch Jerome Powell try to compose himself and analyze every single word. It's going to be a new day at the Fed. Got a pro-crypto Fed chairman who holds over 30 crypto assets. This is probably going to be good for crypto markets in the long run. Now, getting to what we talked about in the intro, I think this is the most interesting story of the day.
Okay.
Robinhood stock slumps as Q1 earnings miss analyst estimates amid 2026 crypto slump. You can see the stock right here getting absolutely slaughtered, down 13.61% today. So obviously this is being billed as an earnings miss by Robinhood, which is a very easy story to see why the stock would be down, and probably won't last. But the real story to me is when you dig into the numbers, what actually happened here. They had a 47% drop to 134 million in Q1 crypto revenue. A 47% drop in crypto trading revenue. We know that Robinhood's been long the tip of the spear for meme stocks and for degenerate gamblers and speculators who bet on their favorite assets, and crypto's been a huge part of that. But the bigger story is not even the loss of 47%.
All right, Chevron.
It's the fact that their total revenue,
Crude oil stocks are up again. All right, so Apache looks like it's going to clear this level. APA.
Now, I don't often get the opportunity to throw an alley-oop off the backboard to myself and do a reverse 360 dunk, swing my legs over the guy's head, just hanging under me on the rim. But I'm going to go ahead and do that right now because I've been talking about this for a very, very long time. I even wrote an article about it back in December. When everything becomes a bet, the quiet death of all coins and rise of the speculation economy. Now, you've been hearing me rail about the problems with prediction markets for quite a while on this show, so I'll spare you talking about the Weimar Republic and what rampant speculation is a symptom of. TLDR, it means that people are desperate, they don't value their money, they don't think they can get ahead, so they take big bets because they don't care anymore, or because they think that it's the only way they can catch up or get rich quick.
Okay, APA looks like it wants to keep going. APA.
Now, I have long been a deep believer in things being built in crypto. I invested in hundreds of things,
RTAC may resume in less than a minute.
utility and the project, and that it mattered. But it didn't matter what I thought, because 99% of the other participants in the market were simply there to speculate. Crypto and altcoins were the world's greatest casino that anybody could join 24/7, 365 from anywhere in the world, effectively at any age. You didn't need to show your ID and fly out to Vegas to gamble. You could buy your favorite altcoin. Now, the worst representation of that was the rise, of course, of meme coins, and then the Trump meme coin putting in the top, in my opinion, forever for the meme coin market. You don't get much bigger than the President of the United States, the most powerful person in the world, launching a token on a Friday night. So, what's happened here, and what I wrote this article about that I've been talking about for a very long time, is that prediction markets are getting this period of
RTAC may rise in 10 seconds.
now gamble not just on what your meme coin or frog or dog token is going to do. You can gamble on weather tomorrow, confirmed, literally anything in real time, soon with perpetual swaps and high leverage. So why, pray tell, would you go speculate in a crypto casino if you can bet on things that you know where you feel like you have more edge? I was way ahead of this trend. I think this is a big problem for the altcoin market writ large. That said, the silver lining is that there are some altcoins that have proven to have real utility and value, and many that have been adopted by institutions. I think those stand, aside from the past, will continue to do exceptionally well when the bull market returns. We thought that altcoins were the casino, but it turns out that the casino killed altcoins. And speaking of things that you shouldn't be able to bet on, but you can, that story. Clarity Act signed into law in 2026, 46% chance right now. So I hate to keep talking about the timeline of the Clarity Act, but it's hard not to because Bernie Moreno just...
Okay, all the New York banks are just kind of taking a break right now. We got earnings tonight. That could change a lot. Could make it worse, could make it better. I would just like sit it out and wait. I mean, if you got positions, I have some positions as well. Amazon, Microsoft, NVIDIA. Got Apple and Meta, but I'm not going to do much until after. Let's see what happens with the markets. We're due for a little consolidation. We're only off 12 handles right now. Hedge flows turning back up. Hedge flows turning back up.
I've been saying this for literally months as well. I guess I get to do my second dunk in the dunk contest because it's been driving me absolutely insane watching the crypto media, mainstream media, and everybody get this story wrong. Talking about how stablecoin yield was the reason that the Clarity Act was not going to pass. And I've just kept screaming from any mountaintop that anyone would listen that the real story is the ethics concern. Democrats are not going to sign into law a bill that allows Donald Trump and his family to launch meme coins and to extract maximum value from DeFi. There will be a clause that says that cannot be done. Now, I also don't think that Nancy Pelosi and her friends should be able to trade stocks on inside information, but that doesn't mean that all those things need to be in one single bill. The ethics clause can kill us because Donald Trump is never going to sign a bill that prevents him from enriching himself in the crypto industry. And it's not only Democrats now. The real update is that Tillis from North Carolina, who's a Republican, who has somehow found his way in the middle of the Clarity Act debate and Bush chaired confirmation. This guy has found his way being the bridge to things getting done or not getting done many times. But he has said that he's sided with Democrats already on the ethics
Oh, by the way, in case you're wondering, Senator Tillis is from the great state of North Carolina, and the North Carolina Bankers Association called Senator Tillis directly to oppose stablecoin yield compromise. So he also has his constituent banks for creative capital applied to advanced technology policy. You're not for slide because he economically just his job and likes to fund politicians. Clarity Act is broken. I think it's probably dead, even from the best efforts. And anyone who's saying, are you so sure this was going 2 weeks or mark up by April 27th last year? You're not telling the truth. We're simply telling you what you want.
Okay, Netflix trying to turn back up.
Another story that's been developing.
A lot of chop at the moment. APA on the move, SPX, S&P 500. As long as it stays above 7,100, we're good. 7,100 is the risk off pivot. Okay. You can see we're just very flat. Flat VWAP, price action above and below.
Plenty of others coming in to lend it and to make this happen, some in the form of loans. So it really leads to a major.
All right, so right now the markets are not doing anything. We're flat. New York FANG. It's had a decent week so far. Okay, so we're just kind of consolidating. We can consolidate in time and just stay here. If we lose the 9 EMA, we'll probably be seeing the S&P 500 losing the 7,100 level as well. The Qs will probably pull back. The Qs, a lot of you are looking at the 50-day. Okay, way down there at 610. The Qs are hanging up pretty good. So semiconductors holding up better than I anticipated they would. Didn't cascade lower, so we're just kind of hanging out. We got big earnings tonight. So I would render judgment maybe after today, after tomorrow. We'll see what happens with Apple earnings, Microsoft, Google, Meta, and Amazon. So right now we're just kind of sitting here. Okay, watch the S&P. We're not going anywhere at the moment. S&P. I'm going to take a 2-minute break. I'll be right back.
Bitcoin is unequivocally the best inflation hedge that there is, more than gold. Now, Paul Tudor Jones famously jumped into Bitcoin in the 2020-2021 cycle. He called it the fastest horse in the race. Many view this as the catalyst for that entire bull market. This is one of the most brilliant hedge fund managers on the planet telling you that Bitcoin is unequivocally the best inflation hedge that there is. It points to the $21 million hard cap versus gold's 2% annual inflation via mining. He warned, obviously, that the S&P is dangerously close to a crash. The market cap of GDP 252%, absolutely screaming. .com peak was 270%. But he's right. And what I find interesting here is not only is he saying that Bitcoin is the best hedge, he's saying that stocks can crash view Bitcoin as a risk-on asset that will crash alongside everything else. I would like to remind you of what happened in 2020. We had COVID, obviously, and in March of 2020, Bitcoin dropped below $4,000 13 days before the stock market itself found the bottom in the COVID crash. What happened after? The stock market roughly doubled. Bitcoin went up 17 times. So even if you see Bitcoin collapse next to the stock market temporarily, what asset do you want to be in back on the way up? I'm in the alternate Jones camp right now. That Bitcoin is the best asset that you can personally buy right now, not financial advice. So yes, we have Fed Chairman Warsh coming in right now. Obviously, Robinhood suffering from a lack of crypto trading, making up the hole with prediction markets, which I believe is a sign of the end times of people gambling on literally everything. Meanwhile, you can just buy Bitcoin like all the Jones. So that's all I've got for you today. We'll be back tomorrow for the next game.
If I were to talk to someone who's looking to implement that stage, I would say you would never regret it. It truly has revolutionized our business. It's changed how we think. It's changed how we build processes, and I ultimately think it's the best decision we've ever done for our operations.
President Trump knows who he can count on to deliver for our country, and Mark Lynch is not it. Trump called Lynch a lunatic and a disaster for the Republican Party. That's why President Trump has given Senator Lindsey Graham his complete and total endorsement. He can count on Lindsey Graham to get the job done. President Trump said it best. Vote for Senator Lindsey Graham all the way. He's a good man, and he loves you, and he loves this state. Thank you, Lindsey.
Anything's possible. Yes, winning is possible, but so is not winning, which means sometimes the best way to play is to save some possibility for another day. The South Carolina Education Lottery, supporting better players and a better deal.
Omaha Steaks, we take premium aged steak and turn it into pure ground burgers like this. Get 8 new Wagyu smash burgers free with the Burger Perfection Collection, just $99.99 at omahasteaks.com/TV. Burger Perfection guaranteed. Fridays, Mama June is all new. Or better,
We're playing this rock shower. Did you cheer like?
I did. Or worse.
I'm not going. What do you want? I can't bring you up.
This season, oh my God, chaos.
The party has arrived.
The ones in the family.
She could make this like the worst wedding ever.
Everybody wants to hide it. I'm sick of it. Get the hell over it.
Mama June, all new. Fridays at 9 on WeTV.
And okay, strength isn't optional for me.
Being able to carry my kids and give my best on stage, all while feeling confident in my body, is everything. Strength training gives me that, and Ladder gives me the plan. With Ladder, I get a daily plan from an expert coach who guides me through every workout, no matter what my insane schedule looks like. It's truly the secret to my results. I'm Hillary Duff, and I train on Ladder.
Every day holds the promise of something new. It starts with the simple things: friendly neighbors and a great location. Add coastal beauty, resort-style amenities, and endless ways to explore. And suddenly, every day feels like your spring adventure. Welcome to Grand Dunes, a master-planned community in the heart of Myrtle Beach. Discover beautiful homes by acclaimed builders, the luxurious ocean club, championship golf.
Just more chop. Feels like we could roll over here pretty easily.
Every day brings something new. Start your Grand
Everything's pulling back a bit.
The spaceship, what was actually asked for, and is that product even available anymore? And how do you view?
Okay, everything is taking a break. Netflix is holding up magically. All right, so by the end of the day, we'll see whether or not
because I don't know if you noticed, but my own mother was a NASA hidden
we have a nice bid.
So my own mother was one of those black women who worked at NASA before the United States had passed the laws that desegregation.
Chevron continues to move higher.
Mathematician and physicist. And she worked in one of the NASA.
CoreWeave looking for a bounce. CoreWeave.
So when we found
All
out,
right, a slow day today for sure.
told us, we didn't even know. But that's how much people love it.
Okay, so the money is flowing into energy. It started earlier in the week. Last week, we moved back above the 10 EMA. Back above the 10 EMA, the energy stocks, money rotating back into energy. First, they went into semis. The money went into semis a few weeks ago. Okay. So we had that 18-day run up. On day 19, we gapped down yesterday, and now we're just kind of sitting here. But maybe some of the money is going into, it looks like some of the money is going into energy. So I would be looking at stocks like APA. I have a position in APA and Baker Hughes. I have APA. I have Baker Hughes, BKR. That's a doji at the highs. I don't have any Chevron anymore. I don't have any ConocoPhillips or Exxon. I closed those positions a few weeks ago when semis started to catch a bid. So, yeah, back to this. Energy is definitely in vogue. And you can see semis are still hanging in there because they have a lot of stocks. NXP Semiconductor is still at the top of the list, NASDAQ 100. So it's not like everything is pulling back. It's just the futures are trying to negotiate the current news. The news flow, Trump would consider military action if Iran doesn't act, whatever that means. U.S. CENTCOM has prepared for short wave of strikes on Iran. I mean, a lot of people that I know that are Iranian citizens that are from Iran that live here in the U.S. from college days, we're talking over 40 years ago, that are, adamant. They want to go back to their country, but they can't go back. They haven't been back. They couldn't imagine Iran with a nuclear weapon either. Imagine what the Middle East would be like without it right now, and just think about what it would be at some point. The point is that crude oil is seeing rotation again, while there are some stocks that are holding up. So I wouldn't chase any of these because these could pull back in. Seagate Technologies, okay, that's already starting to move lower. Micron trading at the highs. I have the 430, 440, 535, 535.40. Okay, so 530, 540. I need Micron to be up a bit more. I'll probably close the position and buy maybe a leveraged fund shares. Is there a Micron shares? Let's see, Micron. Is there a leveraged ETF? Micron, MU. What about MUU? Is it MUU? There, figured that would be it. MUU would be the Micron. Now this is still $270, $280. So is there something else? MU. Let's see. MUU. That's it, right? You could trade just SMH or SOX, SMH. Okay, SMH, I probably wouldn't buy any more SMH or do anything with SMH unless we see some sort of consolidation. 2 days is not enough. We've ran up for 18 days straight, gap down on day 19. The money is clearly going into energy. So if you're adamant about wanting to trade energy, Apache, like I said, I have a position in Apache. I've had this for a couple of weeks now. From last week, it bounced at the 50-day, started to move higher. Okay, this could be back up at 45 pretty soon, especially if we hit Iran with some, according to CENTCOM, Central Command, preparing for a short wave of strikes. Okay, so they've replenished all of their weaponry, if you will. I just can't fathom who the hell is in charge of Iran. Let me do a quick search here. Okay, before I do that, I just want to go back to what the Pelosi's are doing. Okay, so Alliance Bernstein, AEB, doesn't look the greatest. Vistra Energy doesn't look the greatest either. That's probably catching a bid, actually. Vistra Energy. but the top 6 positions, 5 or 6 positions that the Pelosi's are in, Vistra's not moving much today. Okay, this is Vistra. Amazon, obviously we got earnings on Amazon, so maybe something with Amazon. They're in this for the long term. Amazon, they've got January 120 calls. January 2027. Okay, they have the 120 calls. They exercised the old ones from January this year. They bought the 2027 120 calls, Amazon. So that's deep in the money. So they tend to buy deep in the money. That's deep in the money. That's $140 in the money on Amazon. So it acts like shares, and they also have 5,000 shares from the previous exercise. Google, they got the 150 strike on Google. Google's trading 347.50. All right, so that's deep in the money. NVIDIA, they got the 80 call plus 5,000 shares in all 3 of these. So I'd imagine this is going to do just fine. Currently, the markets are negotiating levels. I'm not doing anything at the moment. I just gave you a few day trades that might work. Okay, I gave you a few day trades that might work. NVIDIA with a stop at the low of the day for NVIDIA. NVIDIA is back down to the low, so that's getting close to that level. Okay, so there's the low again. Didn't follow through. Arm holding, same thing. Arm holding. So these are hard you got to be in and out of these if you're going to take them. Arm holdings, day trades only. Netflix actually looking a little better right now. Netflix. I wouldn't put too much faith in it. Okay, we've got Apple turning back up. Apple. There goes Apple on the move. Okay, Apple's starting to move here. Okay, it's 12:26. I didn't realize it was this late already. Apple on the move. All right, is somebody on halftime report talking about Apple or something? Let's see what's going on.
And yeah, it used to be. Now everything's pushing. So way back when you got big wheels
to the upside. So passive, high probability. So if you're wrong and the stock goes higher but remains below that break even at 282.15, you can potentially be profitable. Really short-term positioning, taking advantage of the higher implied volatility in the option market. Price it in probably over the next couple of days. It's $19 in either direction here, so you've got some cushion to the upside on Kevin's passive strategy. So I looked at something.
Okay, looking forward to some good earnings, some nice results out of Amazon, Google, Meta, Microsoft, Apple. Could make or break the next couple of weeks. S&P needs to stay above 7,100. We're currently trading 71.22. You can see this level here. Okay, 7,100. We got to stay above this level. We're in an upward sloping channel. S&P is in the upward sloping channel. We made new all-time highs on Monday, retreated, and currently diddling with that 7120, 7100 level. Okay, 7100 just below. If I had to guess, I would think that we're going to go down to 7100. I just don't have any. I don't have any skin in the game right now. S&P. I don't have puts. I don't have calls. I'm looking further out in time. You know that I'm trading mostly Junes. Most of my options trades are Junes or further out. Microsoft pulling back. Could be the last shakeout. Barry is long. NVIDIA. The bigger picture with NVIDIA, the big picture for me is that big flat base. 212, 50 breakout, zone, 10-month base, waiting. Wow. Pelosi is long, deep in the money calls, and 5,000 shares. Zanger and Dan Zanger. Yeah. Yes. Okay, yeah, let me show you what, Rob. Yeah, Dan Zanger is big on flat bases, cup and handles. You'd think he would have this mysterious strategies. His strategies are not mysterious at all. You know, he likes flat bases, 10 months. He likes cup and handles, handle breakouts. Trend breaks like Oracle. No brainers. These are continuation patterns. These are all continuation patterns. Oracle. Let's see. What do I had an Oracle image here recently. Let's see. Oracle, and MNO. Oracle. Where are you? MNO. Oracle. Okay, that's your trend break. Okay, so right now we're waiting for the initial follow through. Cup and handle. What was a cup and handle recent? CoreWeave. CoreWeave would be a cup and handle. Okay, CoreWeave. We said earlier. Let's just see here. CoreWeave. I think I have a chart. CoreWeave. CRWV. I mean, the obvious ones, maybe not so obvious to some. Let's see. CoreWeave. I thought I did this earlier. No, it wasn't CoreWeave. What was it this morning? We marked up one this morning. Cup and handle. Oh, it was a. Let me just look real quick. I just took a snapshot of this earlier. Was Intel. Like Intel on the weekly. Trend breaks like Oracle. Nothing mysterious. Yeah, I've read a lot about Zanger. I don't talk a lot about it, but yeah, that's good. Let's see, cup and handle.
really struggling, and I think you can look at their stock price and kind of see, how investors are reacting to that. But that is a significant move. AWS has always been the clear leader, but Google's doing a great job. Their spending is very high. I think they're looking to over double last year's spending this year, which is a bit of a concern for investors. But they're showing a lot of, benefits for that. The revenue on cloud computing was up 48%. Over last quarter. The quarter before that it was only 35. So they're continuing to move the needle in the right direction. Their margins are up 30%. So this is an expensive business, a lot of capex, but they're showing that the returns are real and that they're delivering to consumers. So everything that we've got, unfortunately, is pretty bullish on Google. I say unfortunately because the stock is
That I don't know. That I don't know. I know he has a trading room, I believe, right? At least if you had listened to Susie, she used to say she was in that. So
it kind of washes out to a degree, but actually when you look all the way through our data and account for everything, we've actually got a slight bullish lean going into this one. I do like that they're coming off those highs a little.
yeah, these are all continuation patterns from much bigger gains. Okay, cup and handle, for example. Cup and handle, Intel on a weekly time frame. Okay, let's go to the weekly. Okay, so look at Rob. Look at Intel. Okay, so you got a cup and handle pattern. That should be pretty obvious to the naked eye. Okay, you got the cup. Okay, you got the handle. Okay, and you got the breakout. Okay. You got the handle. Let's see. And you got the top of the cup. All right, so there you go. That's the weekly. All right, so you should be thinking depth of the pattern is $30. $30. So $30, we've already exceeded that. So the depth of the pattern is the measured move. Okay, 30 points, measured move. Okay, so the depth of the pattern. Okay. So we've already cleared that. So that's just telling you there's more going on with Intel than meets the eye. Depth of pattern, initial measured move, plus 30 points. And we're already past that. We're nearly 100 points. We're nearly 100% on this one. Okay, I'll just leave this over here. All right, so we'll save that. Intel. All right, so the breakout was $50. Okay, we're almost at 100 now. Okay, AMD starting to move here. Okay, AMD turning back up. Okay, so let's go back to day trades. Okay, so you can try these day trades. You got the oversold. I like it, Cayman. You got oversold condition. RSI rising. You'd be buying at the high at RSI, but this is probably going to keep going. You're probably looking at another 3 or 4 points. I like it. I like it. That was earlier. So, nice job there, Cayman. Okay, maybe some more of these will continue. Okay, and S&P is starting to follow through now. AMD looking good. AMD. A lot of people are bullish on AMD. A lot of people are short as well. So just be aware of it. AMD, they report next week. AMD reports next Tuesday. AMD reports next Tuesday. Okay, after hours. Okay, looks good there, Cayman. Nice job there. Okay, futures bouncing. Futures are bouncing. Key futures are bouncing. S&P starting to bounce a little bit. Got to stay above 7,100. Okay, let's say we start to drop towards 7,100 and we lose 7,100 after tomorrow, after earnings. So that'd be Friday, right? So after tomorrow, Apple earnings, let's say we lose 7,100. So are you prepared mentally on what to do next? Okay, let's go take a look at VIX. VIX is probably still pretty cheap, right? VIX calls, so you can go out a month. I would always go out a month. VIX. Okay, VIX is starting to get something going here. So maybe the 20 or the 25 call. 25 seems reasonable. If we get a spike in news, 20, maybe 22, I don't know, something like that. Or you could do like a 20, 30 or 20, 25 call spread. Okay, so you should be prepared for a hedge if you need it. Okay, so just if you need it, if you need it, that's it. That's all it is. Okay. Wow, nice. Very nice. MXL. Big move today in MXL. Not everything is pulling back. Okay, big move on MXL. Max Linear. Max Linear. Max Linear. Reminds me of Max Headroom. Okay, there goes Apple. Apple's still going. Apple's still moving. Giddy up. Giddy up, little doggy. Giddy up. Apple. You know what I wound up doing? I did everything that I said you got to pay attention to. I bought today's expiration. Instead of buying Fridays, I bought the 29th. I thought I wasn't paying attention. So I got two options trades here that are dead. 272.50 on Apple. Just noticed it. Damn it, Janet. So if we get a big spike, that would be great. These expired today. Damn it. Damn it. Damn it. I hate these new weekly options because you got to really pay attention. Not used to them. They just started recently, right? Over the last few months. NVIDIA, Apple, Microsoft, etc. Thankfully, it wasn't a big position, so only 5 calls, but still. Mistake. Can only make so many of those before it starts to pinch. Okay, APA. Moving on. So pay attention to what you're buying, especially options. Okay, APA, a little dip there.
Stay connected to the markets with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free.
Hey, Bob. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable. Wait, had a stroke? Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time. Jim, my financial consultant, I probably met 20 years ago. Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Hi, I'm Alex.
I'm Jane. And I'm his mom.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Fast Market here on Schwab Network. I'm Diane King Hall, live on the floor of the Big Four. Before we get to the breakdown, let me give you a check of where markets stand as we get closer to the bottom of the lunch hour on Wall Street. The S&P 500 still soft, off by 0.25%. Again, this is ahead of the Fed's decision on interest rates. The Dow's lower by more than 0.5%. NASDAQ 100 has a gain of 0.2% ahead of big tech. Russell 2000 lower by nearly 1%. And indeed, the spotlight remains on the tech sector as investors gear up for a big test for the heavyweights. Among those, Microsoft is also on deck to release its quarterly results after the bell today. Wall Street expecting earnings of $4.07 per share on an adjusted basis. The stock has made a recovery over the past month, but is still down more than 10% year to date. Time now for the breakdown. For that, let's welcome in George Silva, senior markets correspondent, taking a look at Microsoft. So, George, Microsoft has made some recovery, but this one has been the underperformer in the Mag 7. How do you break this one down?
Okay, let me switch channels here.
A few things we have to consider. One is Azure growth. The estimates are actually quite high at around 37.
The good thing about Schwab is they talk a lot about during earnings season. They talk about ways to trade. So you could download the app for your mobile phone and just listening to some of the positions they talk about. It's on the Apple Store. I'm sure Samsung probably has it too. Available.
So these are all just sort of broadly speaking areas analysts be looking for. And then of course some at least beats, if not guidance raised for EPS and sales, as you mentioned, $4.07. That's about 17.5% higher than last year, which was around $3.46 per share. And revenue now at $81 billion, so they're over $80 billion per quarter now. That's higher by 16% compared to last year's $7
Okay,
billion.
CoreWeave is ABCD pattern on CoreWeave. Just watching that. Apple's still going here. Apple.
How is integration of AI, agentic AI in those platforms going to manifest? The other thing is, I think one of the reasons why it's been dragging down is obviously
Dumb rookie mistake buying those Wednesday options that expired today.
competition, particularly from Anthropic.
Looked like they were going to follow through yesterday.
Between OpenAI and Microsoft, it's been sort of tenuous at best. So maybe if they provide some clarity on that relationship, that might be a catalyst. But I will say this,
Okay, futures trying to turn back up.
if you look at it just on an earnings multiple relative to profits and growth, right now trading essentially at around 26 times this year's earnings, 23 times next year's earnings. Historically, it's around 31 times. And if you look at the growth rates, EBITDA growth next year, 20%. Historically, it's around 14%. So again, they're expecting better growth metrics, and it's cheaper than it has been historically. So again, for what it's worth, those are the metrics, but we can also make the case that it's trading at a discount, perhaps a margin of safety, because it's a software company tied into competitive threats associated with the other names out there, whether it's CRM, ServiceNow, Intuit. Microsoft is being put in that category.
Yeah, that's the question because yes, it got caught up in that SaaS apocalypse, especially also as you think of that relationship with OpenAI. So questions swirling about it, and then the market hasn't been as forgiving for Microsoft as others in the Mag 7 with regard to CapEx, but we'll leave it there for now. That's George Sillis, our senior markets correspondent, with the breakdown on Microsoft. So let's get Tom and Kevin back in here for example trade purposes. Tom, you've got the example trade in Microsoft. This one does feel, it feels like a little complicated. I don't know if you're going to take a complicated approach to this one. And then you mentioned earlier about the bar being higher, for instance, for Amazon. I wonder if that's the case for Microsoft or not so much, given its underperformance compared to others in the Mag 7.
Yeah, this is a different one to look at when looking in the Mag 7 names, maybe besides Tesla, where the stock is down, 23, nearly 24% from those record highs that we saw. Remember, it traded $555 last summer. So we've been in a down trend. It's a nice March, April, like the entire market, right? Stock's up 14% this month, so it's made up some ground, but it has gotten caught up in the SaaS apocalypse a little bit. Maybe their contentious relationship with OpenAI also. And then their growth rate on Azure, their cloud business, wasn't as good as analysts expected last quarter, and that's why you saw the stock sell off last quarter. But the bar is lower in this one going into the report. And Kevin, if you look at the implied volatility levels here, we haven't had a lot of implied volatility levels getting really elevated. The IB percentile rank in Microsoft going into this report is 97%. So over the past 52 weeks, we're basically at the top level of implied volatility in the option market going into this report. So a lot of option premium out there. So Kevin, I looked at a strategy, the option market pricing in about a plus or minus $30 move either way in the stock. So I used that as a basis for this example trade. It's a bullish call diagonal. If you think the stock's going to go higher, this would potentially take advantage of it. We're down to the May 15th monthly cycle, Kev. 2.5 weeks till expiration, 16 days. Bought the 425 strike call. It's basically, it was at the money. Now it's a little bit out of the money, about $2.5 bucks. Buy the 425 call in the May 15th monthly cycle. And then in the near term, May 1st weekly options, Kev, selling the 450 strike call. So a bullish $25 wide call diagonal. You're paying roughly, we've got 1170 debit on it. It's probably trading 1070 because the stock pulled back a couple bucks. So you can get a little bit cheaper. But that debit you pay is going to be your risk. So if you pay 1170 for a $25 wide bullish call diagonal, your risk is $1,170. If you pay 1070, $1,070 in risk per spread. You can see here the apex profitability at or near that 450 strike, which is where you want the stock to go. But anything above
the 430 level, about the 430 level is going to be profitability on this one. But Kevin, you're paying a lot less than the width of this bullish call diagonal.
Yeah, I think, a $25 wide call diagonal is going to give you some ability for the stock to move higher. You see where that peak is and the profitability. It's up near that 450 strike. The implied volatilities are high. You mentioned it. They're up at the very top of their range. So this is one. Here's the main things you need to know.
Okay. All right. So Apple's still back, moving back up here. 470. Can we move $2 more? All right. CoreWeave's turning back up. CoreWeave. CRWV. CoreWeave trying to turn back up. It's above the 100 period moving average. Watching CoreWeave. S&P back to VWAP. It's got to stay above 7,100. That's the threat today. Okay, Microsoft starting to turn. Shorts covering on Microsoft. There goes ARM back above VWAP. ARM back above VWAP.
Schwab Network app. It's in the App Store. Tune in 24/7 on schwabnetwork.com. Stay with us. You've got Next Gen Investing coming up.
So what is unique about Schwab coaching is the community.
There's a lot of energy. Like-minded people are learning with you. You can just see and feel all the excitement around getting to learn a new topic.
Some of you want to get everything face to face with you and 400 or 500 of your closest friends.
Some clients like to be in the privacy of their own home on an online workshop, but still having that live interaction with the coach. As I'm talking, questions are coming in from that live audience. They help me fill in those gaps as an educator. People learn differently.
Independently be successful in achieving your goals.
But all those ways we actually teach it all come back to the point of making a difference and helping you make progress.
And so that means not just giving you theory, it means giving you the practical implementation using our platforms.
So we want it to be fun, we want it to be informative, and most of all, we want you to walk away with a skill set and independently be successful in achieving your goals.
Welcome to Schwab Network, where real-time market coverage meets expert strategy. From the opening bell to the closing bell, we've got you covered. Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute. With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Market insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand. Schwab Network, streaming 24/7, any screen, anywhere, free. schwabnetwork.com. No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com.
afternoon, happy Wednesday. Welcome to Next Gen Investing. I'm Alex Coffey. Let's take a look at where the market sits on what is a day that many have had circled for a long, long time. We got a Fed meeting in about an hour, and we also got a bunch of Magnificent 7 tech earnings after the close. Right now, S&P 500 down about 30 bips. NASDAQ 100 up about 0.1%. The Russell 2000, a little bit more rate sensitive. No big tech exposure, down about 1%. Dow Jones spice weighted, 30 names down about 300 points, 0.6%. All in all, kind of calm before the potential storm. We got a big show planned here as we kind of work our way towards the Fed meeting and some of the big tech earnings later on this afternoon. But it's still earnings, and more earnings. We'll discuss many of the names that reported in the last 24 hours at the top of the program. We'll chart and trade a couple of the names that are still on the docket. We'll talk Bloom Energy with Kevin Green for FOMO. Looking forward to that. Big mover, a big player in this AI energy and infrastructure discussion. SoFi, which we know is a next-gen investor type name, social media darling, new age financial services firm. It had earnings.
Okay, looking forward to earnings tonight.
About what kind of set it back later on for under 30 as well. But let's go through some of the earnings that we've gotten here from Seagate to Brinker, all over the board. We welcome in Schwab Network host Sam Vadas to help us break that down. Before we get to some of those movers, though, Sam, I do want to get your thoughts on the overall market. I kind of frame it as the calm before the potential storm. And storm doesn't have to be negative. I mean it more in just the sense of potential movement. But we are, just off session lows.
Yeah. Yeah, I think we're in somewhat of a holding pattern, Alex. I mean, yes, okay, a bit of a pullback today, but we're still near all the all-time highs as well on the S&P 500 as the NASDAQ, as we've seen. And, of course, we've seen this stunning rally for chip stocks, and that seems to be back in action once again after taking a breather, thanks to some of the names that you and I are going to be talking about coming up next. But, yeah, I mean, major catalyst this afternoon. I mean, you have this headline out from Bloomberg, 80 seconds of big tech earnings will decide the stock market's fate this afternoon, with these 4 out of the Mag 7 that are going to be set to report. So obviously waiting to hear about that. We want to see this AI monetization. We want to hear about a CapEx update. We want to hear about the guide, just business tone overall, how they're navigating a lot of what is going on right now. I heard one take here on the floor from one trader. Is this going to be a King Solomon type of afternoon? I mean, depending on what we hear from one company versus the other, and then what's going to be the subsequent market reaction tomorrow. So I think that's all going to be really interesting. Does that reignite the tech trade once again, which really helped to take us to those all-time highs in recent weeks? So we'll have to wait and see. As for Powell, I mean, many of my guests have pointed out, yes, it's important. It's his song, it's a swan song, isn't it? But at the end of the day, not putting too much credence, or I should say, in the market reaction off the back of that, just because, of course, we know where they're going to stand on rates. We know what that decision is going to be. That's pretty much baked in at this point. It's more about what this sort of wash-led Fed is going to look like under this sort of new so-called regime. I think everybody's looking out for, what he is looking to change around how they approach the data, how they approach the guidance. I mean, he doesn't want to be held hostage by the dot plots, or how they communicate. All these kinds of things that the market is very conditioned for, and we're pretty used to at this point. So I think that's going to be the more important thing. But very much the market is looking out for the one big question, and that is if he stays or if he goes. That is Powell, of course, because of course that political angle of trying to retain that Fed independence. I think that's been a really big focal point for the markets, Alex.
Yeah, no, I like the framing, and I think if I was going to try to be honest, take some truth serum, I think the Fed meeting today is probably more interesting from a news standpoint, but it's very much overshadowed by, I think you said, 90 seconds of tech earnings after the close. So it's just one of those days.
Okay, S&P, it looks like everybody's just waiting for earnings tonight. CoreWeave's starting to move a bit higher. Intel's at the high of the day. Intel running up the list here. Okay. Moving back to the high of the day. Intel. Very impressive. Intel. Okay. Intel. Intel looking good. Okay, looking good on Intel. Intel. ARM Holdings trying to turn back up. Stocks are just lethargic today. Okay, here's ARM. CoreWeave, we're looking at CoreWeave, ARM Holdings. Okay, just flat. Look at the price action, just flat as a doornail. Nvidia made a new low. Okay, RSI is still printing. RSI is still printing oversold, so we're looking for a bounce at some point. If you took this earlier, you probably got stopped out. Netflix is trying to turn back up. Watch Netflix here. Okay, RSI oversold. We're making higher lows, so I'm watching Netflix. Netflix is trying to go. Okay, Netflix, this is day 9. Day 9. 4, 5, 6, 7, 8. Yeah, day 9. Day 9. Yesterday was a hammer. Yesterday, hammer. Okay, looking for something more from Netflix. Holding near this previous low where institutions supposedly were interested. Okay, so looking for something from Intel. I'm a little disappointed but Nvidia took it 10 months to base, finally try to break out, and we initially broke higher but then faded a little bit. So we're looking for that breakout that continues. Start to see the 9 and 21 day pointing up into the right on Nvidia. So that's what we're waiting for. Then we can start to add to it. Okay. Nvidia. Okay, once it gets above this 216, 217 zone, and it's already starting to trend. You can see it starting to go. It's just slow. Everybody's still, people are still unimpressed with Nvidia's prospects. IONQ supposedly should be a good investment in the future. Quantum, supposedly, Jensen's gave the thumbs up on IONQ, Rigetti, RGTI, and I forget the other one. There's a third one though. Quantum stocks. Oh, it's D-Wave, right? D-Wave is not actually D-Wave. It's QBTS. D-Wave. These three supposedly have the best prospects. D-Wave is only making a few $1 million a year. IONQ is the one making the most money. I think it's like a couple of million. Let's take a look at IONQ. IONQ for the long term. Okay, we're talking, 2, 3, 4, 5 years from now. IONQ. All right, so 40 million revenue estimate. Earnings growth 307%. Quantum. Let's see if they say anything about Jensen in here. Let's see. Okay, I'm not going to try to cover this during the trading day, but check out IONQ. Go to the YouTube channel and search up a user named ticker symbol U. YOU, ticker symbol U. Bald-headed guy. He's fairly young. I guess he's in his late 30s, early 40s. Pretty smart guy. Check him out. He talks a lot about quantum. In a recent post that updates from CES, the conversation after Jensen said quantum has 10 years, a decade before it starts to get, and then he turned around and recanted some of his statements. So IONQ is the best candidate from that respect. But do yourself a favor before you buy anything. Just check out that video from ticker symbol U, YOU. Look for this to continue at some point. Rigetti as well. ARM Holdings trying to turn back up. ARM Holdings. So right now it's like a wait and see game. It looks like we're not going to move much today. Okay, so if you're frustrated because the markets aren't moving, look at the price action. Price action is flat, not trending. CoreWeave trying to turn back up. At least CoreWeave is starting to make some progress. It's still flat price action, so I wouldn't be expecting much from this. Okay, Tesla Watt turning back up. The case on Nokia. Well, Nokia longer a mobile phone company. They are into AI infrastructure, servers, etc. Picks and shovels. Yeah, so let's go take a look. To answer your question, let's go to Nokia. Okay, Nokia, Nick. Okay, so they're no longer just, hopefully this doesn't crash the stream. Okay, Nokia, advancing connectivity, scale faster and advanced optical and IP connectivity, telecommunications, mission critical enterprises, threat intelligence, so security, cybersecurity as well. Data center network ready. Okay, so Nokia is more than a cell phone company. It has been for some time. It's just people have just started to wake up late last year. Okay, so all of this is pretty good stuff. Kager, 34%. Speaking of Kager, what is Palantir doing? Palantir is off 3%. Count Palantir. Okay, Palantir is just taking its time. People have lost interest in Palantir, much like they did with NVIDIA. So Palantir was the shiny new toy on the block for a few quarters. Now people have kind of lost interest, so it's not moving that much.
comparing current levels. So that's something to think about. But then you've got Wells 115 now from 110 with an overweight rating. They this turnaround.
Okay, so back to Intel. Intel. All right, Intel.
Yeah, 4 for 4 though out of these names. Really impressive stuff. Sam, before I let you go, we got these big names after the close today. I'll even throw Apple in there tomorrow. Is there one of them that you were gathering from who you talked to there on Wall Street, or just a gut feeling that you think is like, hey, this is the one that kind of lead the charge here?
Yeah, lead the charge. I think the one that people are watching out for the most, it seems to be a sort of competition between Meta and Microsoft right now. We have seen those multiple compressions, obviously with Microsoft, so there is a view that they have more to gain because of that. I mean, they have been under pressure since October. We saw that 10% pullback last quarter. They are back to the level pre-last report, but they had that 17% drawdown because of SAP apocalypse. So I think they have a lot to prove with respect to the AI disruption fears, particularly when you take a look at the Copilot and also Azure. I think that's going to be really important. And then the Meta story similarly has the most to prove, perhaps, according to some of the analysts I've been speaking to, because it has the most upside potential. The spending, you and I were talking about this earlier this morning, it's spending a lot, and it's wiped out a lot of its free cash flow. So you need to see the monetization there. We say that every quarter, but it's because they don't have the cloud business like the others. So I think that's why everyone's looking at better on that metric as well, Alex.
Yeah, I tend to agree. I think it's the contrast between Apple and Meta that has my attention. I just want to see what the street does with the numbers. What are we rewarding this quarter? Because it's crunch time now. Like this is the big game now. We're no longer in practice in the preseason. We're here now with these big tech earnings. But Sam, always appreciate it. Looking forward to breaking some of these at the bell later on this afternoon on Market on Close. We're going to take a short break. We get back, and it's time for Chartmaster. Rick Ducat will stop by. We're going to look at Meta. We'll also look at Qualcomm as well. We'll be right back.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Intern, this place is incredible. It's where I get all your office supplies. Your golf balls, your fancy coffee, your giant TV. It's everything in one place. It's like Schwab. Everything investors need, all in one place. Yeah, Schwab, they can do everything. Invest, trade.
Slow day today. I'm just sitting here watching different things moving here. Tesla turning back up. That looks like it could get going. Watch your 1 minute chart. Intel's back to the highs. Intel back to the highs.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Welcome back to Next Gen Investing. I'm Alex Coffey alongside the Chartmaster himself, Rick Ducat. He's, of course, lead market technician for the Schwab Network, and he's going to help us preview a couple earnings that we get after the close. Meta, Qualcomm. I mean, these are two big-time tech firms, and they're not even in the top 3 in terms of the biggest companies after the close. That's how big this afternoon is. So let's talk some Meta here first.
Okay.
But, I mean, I don't know if that tells the full story or not. You tell me. A pretty
decent recovery from the lows, up 29, almost 29% from this low point that we hit 520.26. A very steep, sharp, upward sloping trend line here in white has given way to more sideways price activity, though. Now we can see the 680 level around where we topped out recently was a high point previously, the high point after a gap down, and a notable low point here. So we paused at an inflection point heading into earnings. If we were to keep moving to the upside, another notable intraday high comes in right around there at 710. Another gap could be filled here near 741 that also matches a high point.
Can't help but notice too that level coming into play basically around earnings seemingly every time. So it's not a unique situation that we're in here going into this one.
Yeah, good observation. These could be these kind of sticky price levels that keep coming back into focus over and over again. But now to look at the downside, 653, recent relative lows, another gap here near about 620, and then another low point here near about 600. A little bit murkier to the downside here in this case. So we'll have to wait and see how things develop. Our moving averages that we follow, sideways consolidation. We are close to our 5-day EMA in dark blue, 671.66. But we have a bit of a confluence to the downside. Our other three pretty close together, most notably our long-term 251 yearly EMA in orange coming in at 648. Momentum trailing off somewhat as we head into earnings. Pretty common situation, but still relatively high, just below 60. Finally, our volume profile. This shows our heavy trading activity by the blue histogram on the right side of the screen here. A node, the heavy trading area is the most significant here near our point of control, our thick red line. 658.76 is where that one comes in. It starts to trail off above 675, then picks up again here near 615, 620. Meanwhile, to the
Okay, IWM trying to turn. It's showing a fade back to the 9 EMA, 21-day just below that. Okay, Amazon turning back up into earnings. Google turning back up, short starting to cover. Microsoft turning up. Let's see. Robinhood sitting here at $70.30. Okay, CoreWeave starting to turn back up.
Stand out and maybe act as support levels. So 645, 640 were the strikes that I looked at here, selling the 645, buying the 640, going down to the May 1st expiration. That's just this Friday. And with this one, if you're able to collect $1.70, Rick, that would be your max profit, $170 there, max loss, $330, break even would be $643.30. Now, at the time, the moving average for 1 month was around 650, and so this was sort of just going below that mark and looking to use some of those technical levels of support, giving it a tiny bit more cushion, and then, of course, setting up a trade with about a 2-to-1 risk reward. So risk-defined, short-dated, earnings are going to have a lot to say about whether or not this trade is a profitable one from an example standpoint or not. Let's talk Qualcomm, though. This is another name that had some news, I believe, just to start out this week, and so some big moves over the last couple of sessions, kind of up, down. But when you're looking at Qualcomm, a little bit different chart, I would say, than Meta, but there's definitely some similarities here.
Yes, certainly. It seems like there's always news with any of these semiconductor, even adjacent companies. So what happened more recently here, like our Meta chart here, we recently hit significant lows. In this case, it came in at 121.99, just shy of 122. From there, we've had a decent rally, in this case up 27.6%. So now we have this gap here. So really the gap was around 137 or so to about 144, but we also had some notable highs here near 139, so that stands out to me as well. Our gap held firm at around 144 after our pop to the upside here. We retreated and solidified around that level. And if you backtrack here, another low point before a gap, another relative high point here, and low points once again. So a notable price level to the downside here as well. Meanwhile, 153, our first red line here, low point, breakdown, and then resistance point. Now it's where we're crossing above after a very sharp rejection a couple sessions ago. So 159 then, another relative low, a breakdown, and then a high point, and that's about where we struggled during our pop to the upside there. Those stand out as potential areas to watch as we head into this earnings event. Now we can see that we are crossing above our longer-term 251-day EMA, and orange 153 is where that one comes in. So kind of interesting that we're breaking above this longer-term resistance level heading into the earnings event.
Intel, all right, just getting rejected again. Chevron, the oil and gas stocks hanging out just below the 50-day. Apache's above. APA's above. Doji for now. CoreWeave, CRWV. All right, back up to the highs. CoreWeave, trying to push a bit higher. It's above VWAP. ABCD pattern should be pretty obvious to you. That looks okay.
Things trail off a bit here. Then another node around the 175 level to the upside, to the downside, 145 to 149 stands out as well.
Good stuff. Rick Ducat, really appreciate it. Before you go, though, quick example look at Qualcomm from a trading standpoint. Looking at a call diagonal spread, buying next week's 160 call, selling this week's out of the money 170 call. So looking for some upside, and by doing a diagonal as opposed to just a calendar spread, it creates a risk profile of like a mountain that is tilted on its axis. And as structured here, Rick, because it's a $10 wide spread and the depth is $3, theoretically there's no upside risk. So this allows for the trader to be bullish and there not be that risk that it's so bullish in a reaction that you actually have losing money here on a bullish trade. So structured away with a little bit more margin for error, but in exchange for that you spend up a little bit. So it's $300 in max loss, and you will need upside more than likely for this to be a profitable trade. I move towards 170, high 160s. That's the sweet spot for this to be a potential winner by the end of the week. Rick Ducat, always appreciated. Lead market technician for the Schwab Network. Coming up next, it's time for FOMO and another big winner of the AI trade, Bloom Energy. We got a special in-studio guest, Kevin Green. He's going to join us. I'll help break down Bloom Energy, the earnings, the response. He'll have an example trade for us as well. Right after this.
For instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets, follow me on X at @NPetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights.
It's kind of a slow day, right? A few things working, but all right, Microsoft coming out with the low. All right, what the hell? Okay.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Hey, Bob. Hey, Andrew. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable. Wait, had a stroke? I started to realize, what can I pick up from my dad? He's been with Schwab.
Okay.
It is time for FOMO. Today, we have special guest here, Green, senior markets correspondent for the Schwab Network. KGO, good to see you in person. We're talking Bloom Energy today, and this has slowly become one of those names that is finding its way on the watch list because the performance, hard to ignore it. Yeah, definitely.
stock continuing to rise to the upside. This is a company that generates and produces basically battery fuel cells as well as some other technologies, energy services, what they call it here. And that's really in high demand when it comes to data centers that need consistent, reliable power, especially on a 24/7 basis. How this company did report earnings, they were able to beat and exceed both top and bottom line. We saw revenue coming in at $751.1 million. They choose to put up $582 million here, so we're seeing around 130% growth on a year-over-year basis. The margins are also improving to the upside. They rose to 20%, and that's higher than we saw this time last year, around 27.2%. And then their operating leverage once again improving. So, Alex, this is just a story of a company that is seeing the secular trends of artificial intelligence kind of translating into their business, and you are seeing supply shortages as well from a lot of the raw materials. Pass that speed up to the consumer or to those end users. That's what's being reflected in the markets here. So, rightfully so, we're seeing it obviously move to the upside. I might ask about valuations, but at the end of the day, it's trying to actually grow in those valuations by at least top line and top line.
Yeah, this seems to be a story from my, kind of this bird's eye view, let's call it, of right place, right time, for sure. That's kind of what you're describing, which is like these secular build-outs, this AI infrastructure, race, essentially. It's this desire for power and energy, but also a company that is executing at a very high level in the opportunities they've been given. That was one of the big things that our work with pointed out. Like, hey, we asked them to have this done by a certain time, they didn't give it half the time that we wanted them to. You don't read those stories that often anymore. A lot of times you're reading about hearing about Grand Theft Auto, whatever number they're on. It's like, is that ever coming out? Bloom Energy's churning out their stuff, long time and ahead of schedule.
Well, yeah, because there's still a lot of competition in that space. So I think they want to make some deals with some very large customers and also, really keep their brand out there. And we'll see a lot of these data companies will have a wide range or mix of the power production that they have in-house, right? It's not only going to be maybe small modular units or reactors that are moving into their energy needs, but also with the Bloom Energy, this xScale, value development or industrial issue. Bloom Energy is that battery source of power. That's exactly what we're seeing right now. And once again, we are just starting to see the answers actually really being built out. So they have been able to really accelerate their game with the market in that fashion. That is happening. So I talk about once again, it's good branding. You're going to get more customers like us, but the reliability of the products is something that's been kept.
And the stock price performance speak for itself in terms of the technical picture here. I mean, this seems like a company that it would hard to stock price that I'd say this is
It's definitely an uptrend. And actually, we can look at a weekly chart. What you actually have seen is kind of an accelerated move to the upside, a pullback or a consolidation period, especially for about a month or 2 months, and then another move to the upside. Now, this one obviously is a little bit more stretched because of the move that we are seeing today. But this is a healthy uptrend. Higher highs, higher lows, volume on those higher days as well. This is not a short coverage type of rally. This isn't a low volume, high excessive move type of day. This is actually being backfilled. And so you can make the case that maybe over time, as more competition comes in, or maybe we start seeing a little bit of a leveling out when it comes to the data center build-outs, that maybe it's not going to trade as rich. But for right now, this is a theme that has been and will probably continue to be undervalued. Not saying the stock, I'm saying the industry itself, as far as utility and power generation, will be undervalued compared to others that have their hand in artificial intelligence, like semiconductors.
We just had that chart up there, the longer term weekly look, and it's like quarter pipe, right? It's just a parabolic type move. You looking at long charts on stuff like that, when you see that, is there things you do to make that price a little bit more useful when you look at a stock that just last year was $16 on its lows and it's trading almost $300 today? Like some might say, hey, this is distorted just simply because the price has appreciated so much.
Yeah, that could be the case. So long charts are basically taking out a lot of that high frequency or some of the
makes
noise.
It more percentage-wise.
Yeah, right? So you see, take out a little bit of the noise when it comes to the price action. But even if you do a long chart, at the end of the day, it's still making higher highs and lows. And this is a company, just like some others within the space, that have a they have technology. They are now seeing renewed demand growth, and now they are actually benefiting from it. And there's a catch-up trade that also then takes place. We see the same situation happening in small modular nuclear reactors. You see the same situation happening in the lithium miners. They sound like they're different, but they're all actually in the same business for the most part, right? Lithium is really a key input for a lot of these products, especially if you're looking at.
How much of the geopolitics stuff come into this? I mean, crude oil prices, like, is that just a different energy market, or is there a little bit of correlation here as we look for more and more sources for power?
So geopolitics is obviously going to have an impact, at least in the near term, when it comes to power and generation, especially if you're looking at natural gas, not so much crude oil, especially here in the United States. So we don't really generate any power off of crude. But on the other hand, we're talking about maybe some of the mining companies and some of the inputs that you need, the chemicals and some of the mining chemicals and things of that nature. That's where you see that longer term trend. Where geopolitics outside of just Iran and the U.S., you're starting to talk about Africa being a very key part of it, even Greenland for that matter. Which
it's sort of the realpolitik of it, and sort of the power centers and sort of, I guess, the Russias, the Chinas, the U.S., and sort of where that chessboard, unfortunate kind of analogy, but how that's all shaping up. But you have an example, look here for us for an example trade, and I don't envy looking at names like this.
Okay.
You laid it out. It's hard to poke holes in it, but the performance, I mean, it's more than 10x in the last year. It's more than double just since the beginning of this year. Like you said, valuation starts to be a question mark.
It does, but look at GE Vernova.
Yeah.
I mean, they have constant demand. This would be different if they had.
Okay, Nvidia off the lows. Apple still pushing.
Accelerating both top line, bottom line, expanding margins. And you have the longer term trend there. So if you're kind of looking at this is more of a, let's say, a little bit more of a shorter term trend, because we're almost in the month of May here. This is actually selling a put vertical to get a little bit more neutral to bullish to the upside here. So you're selling the 240 and then buying the 230 put vertical spread here, doing this for a credit of $2.40. So the credit that you receive is the maximum amount of profit that you're going to see on this trade, $240. You have a break-even point of $237.60 with a max loss of potentially up to.
What's Kevin talking about here? Talking about Bloom Energy. Credit. All right. What is he trading here? Put vertical. Selling a put vertical on Bloom Energy. 240, 230 put vertical for $2.40. That's pretty good. 230, 240 put vertical.
Really appreciate the insights, KG. Looking forward to more, but we're going to take a short break. We get back. It's time to discuss the big show of the day. And then, of course, is this Magnificent Seven barrage of earnings that we're going to get after the close. Our next guest is going to help us preview what to expect. We'll be right back.
Slow session today. Markets anticipating big earnings tonight. If you're thinking long or short, any of these names, maybe the Qs is the best way to play it. Maybe a straddle or puts if you're thinking lower, calls if you're thinking higher after the earnings. Microsoft coming off the low. Shorts have covered on Microsoft, Amazon. Little dip starting to get bought. Same thing with Google, Meta, Netflix, higher lows on Netflix. We showed you a few minutes ago a Netflix potential trade there. Okay, that was making more progress. It was above the 100 period moving average. Here's Netflix, the high over there on the left from today. Okay, RSI making higher lows, and price action looks like it wants to get going here. 92. Love to see it above 95.
your way with Schwab. Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are. Morning movers bring traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern. Morning movers only on Schwab Network.
Okay. Afternoon session, waiting.
Assess the landscape of AI, Magnificent Seven earnings, and more. Paul, happy Wednesday. Thanks for joining me this afternoon. You know, I guess we're all clued in to these earnings, not only because they're like 15% of the S&P 500, like $10 trillion in market cap, but this is like, you know, this is like ground zero for like where this is all taking place, this investment, this R&D. What are we looking forward to? What are we going to learn when they post the numbers?
Well, you're 100% right. This is sort of like the Super Bowl week for the stock market. This is the single biggest week of the season, and this season is not going to be about AI hype. It's going to be about AI payoffs. I think what everyone's looking to see is, okay, we're spending countless billions of dollars investing in these data centers, GPUs, all this infrastructure. Are we actually going to see a return on this investment? The thing that we're not going to see, though, is quite frankly the answer to that question. These earnings are going to be relatively, short-term focused, and the AI play here is a long-term one. I get the questions, I get the concern. Okay, people are spending $20 a month or so on subscriptions to this or that chatbot, but we're spending really serious sums of money here for this AI infrastructure. The thing is, that's a disconnect. The long-term picture is substantially stronger AI spending, not just by consumers, but particularly by companies, more so on the physical AI side of things, which we're sort of in the setup era for right now. We're not quite there yet, but we're very, very close now.
I want to explore that with you in a second, but before we do, we kind of think the short term. We get a nice little kind of case study in what the market is interested in, and just the dichotomy in my mind between Meta and Apple. Two very successful companies, two very critical companies when it comes to everything artificial intelligence, but two companies in my eyes, and I'd love your thoughts on this, that have taken drastically different approaches. Meta is trying to win the race. They are spending as much as anyone. Apple has sort of taken a step back and said, in my mind, that, we have the device that you're delivering this to right now. We can play kind of kingmaker and just pick the winning horse and utilize your technology. When you look at the dichotomy between those two companies, what do you learn from them when you see those two different approaches?
Okay, CoreWeave still grinding back up to the highs. That's working okay. Microsoft, back to VWAP. All of that dip from news.
So the strategies are different, though, and I think that when it comes to AI, and especially this new era that we're entering into, having the hardware button up, ultimately having the data, having the core technology that powers that hardware is going to be substantially more important than a large adoption of your physical device by multi-minute society. That's something that can be replicated. You can buy a Samsung, but if somebody else has AI that's 10 times more powerful, you can't just replicate that by buying another phone.
Paul, someone is building a business in this space and walking out is changing rapidly. Is there any business right now that is safe from this disruption from AI? I mean, I look at an Adobe and Salesforce, and sure, maybe that was some of the easier stuff initially for what the projects were working on to show the signs of disruption. But 5 years ago, to challenge the moats or the business models of either one of those companies would have been, something that would have gotten you thrown out of a room. And now it's like
CoreWeave. All right, coming out of a squeeze now. CoreWeave might actually get something going here today. Okay, it's up on the day. CoreWeave. Okay. Okay, this is not current. Okay. Energy stocks still in play. Got AMD back up to the highs. Nvidia is still sitting here at the low of the session for now. Apple at the high.
So as we fast forward, then I'm sure you've thought about this a lot as you structure your own business, you look for investments, and you think about where we're going. And it's always just a range of outcomes, right? There's never a perfect path that we're going to take. But I keep coming back to just sort of the common sense of the easiest way to start seeing return on investment is to cut one of the biggest costs that many businesses have, which is labor. But if no one's working, who are you selling to? And it's sort of this like this cycle of it. How does it all fit together? And in your mind, is it more just distortion of what labor looks like and enabling greater efficiency, or is it truly job replacement that we're working towards?
RTACU may resume in less than a minute.
Long term, we are talking about massive job disruption and in a lot of cases replacement. But in the immediate term, and certainly for
RTAC may
anyone
rise in 10
thinking about
seconds.
from an investment perspective over the course of this year, we're talking about an efficiency gain. And where I would look to that, is not just in the traditional areas of, what we see with LLMs, which like its chatbots are able to, I think, speed up the writing process and make video editing faster, but also the areas that are more physical. Robotics are benefiting from the acceleration of AI as well, and we're going to start seeing physical labor sort of be augmented by AI and robotics in a way that we haven't, at a rate that we've never seen before. And I don't think many people realize just how quickly that's evolving and how fast the physical AI space is evolving and how impactful that is across countless industries that most people kind of look to as safe havens from AI disruption. The reality is that there's really not enough of a limit to it or a horizontal limit to it. AI can go everywhere and it can augment everything that we do. So we should be looking for companies that are smart, forward-thinking, and that are talking about not just what everybody else already knows today and about making their chatbot faster or a little bit smarter, but looking forward and saying, okay, if you're putting this much money into infrastructure, are you really investing into that next phase, that physical era of AI, where the reality and the virtual world that we work in start to meld together? That's where all that money is ultimately going to need to be going towards, because that's where businesses will have to spend the most to get the biggest return.
Paul, we're out of time. We got to explore this more. I'd love to have you back and discuss further with Paul Power, CEO of FISNA. AI is disrupting everything, as he said. So we'll see what these earnings are after the close for some of the biggest companies. But we're going to take a short break. Coming up next, under 30. We're going to talk some SoFi with Mr. George Tillis, maybe a little Fed preview as well. Just over 10 minutes till the FOMC decision. We'll be right back.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour.
Schwab Network delivers real-time market insights, live from the NYSE, NASDAQ, CBOE, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on SchwabNetwork.com.
Morning movers, be the first to find out what's shaping ruling market action. Check, options corner, futures focus, technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network. Stay connected to the markets with Schwab Network. Tune in 24 hours a day, 7 days a week on SchwabNetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are. I'm Nicole Petalides, live at the New York Stock Exchange, and this is the Watch List. Your midday view into the
trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big Movers real-time interviews and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m. Eastern, only on Schwab Network.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Just boring. Boring day. Boring, boring, boring.
He worked hard, and after he passed away, the torch has been passed to me. And my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The two grandchildren, planning for their college education. Someday it'll be their turn.
Trading at Schwab is powered by Ameritrade, unlocking the power of thinkorswim, the award-winning trading platforms. Bring your trades into focus on
Okay, futures are coming back up though. Maybe we get back to zero. Maybe we get back to even on the day. Doji on the daily. S&P. All right, so Netflix is still kind of clunking along. No follow through. What a dead day. Got to have a boring one every once in a while, I guess. Let's see. Okay, Doji. 2 Dojis. Waiting for, it feels like markets are just waiting for earnings for tonight. Okay, Amazon turning back up. Amazon. Okay, so maybe Amazon gets something going. Maybe at least Amazon gets something going. AMZN. All right, so we are oversold, right? Okay, we got oversold conditions. All right, so 1 minute chart, oversold conditions. Look for that move to the upside. Put a stop underneath 260. You can't do it now. Oh, you could. I mean, it's $3. You got a $3 stop. Maybe put it under 61.90, 61.90. So 61.75 or so. All right, so that'd be a dollar stop. Can you get a dollar out of this? So we got to see this break to the upside. So 261.75 entering right around here. Let's see if it follows through. RSI already overbought, so you might not be able to make this work. The trick is catching this. The trick is catching the stock when the 1 minute's oversold, RSI is oversold, and you get that first change in direction, because then you can put a stop right immediate below where your entry is. Right now, you're up $2 off, $3 off the low, so I wouldn't recommend doing it right here. But watch this setup. This works really good. Really good, especially when the markets are fairly bullish to neutral. When the markets are bearish, obviously, this fails quite a bit, so you can do shorts instead. Okay, Intel. Okay, Intel is an example. Intel. Okay, it keeps getting below the 50-day, but now it's turning back up. So maybe this runs. Maybe this runs Intel towards the end of the day. CoreWeave. CoreWeave, another one. Okay, so let's see what CoreWeave looks like. CoreWeave. Okay, you can see CoreWeave got oversold right here. Watch that oversold condition. Look for prices to move back up. You could even wait until it confirms a move above the 100 period moving average on the 1 minute chart. All right, so that'd be about 112.50. All right, so you're $1.50 above this level. So that's the technique. All right, wait for RSI to get oversold. In this case, you want to get back above the 100 period moving average on the 1 minute chart. Over here this morning, oversold. Not really. Let's see. Let me go out a little ways. Go out the 2 minute. 2 minute this morning. Yeah, the 2 minute this morning were oversold at the open. CoreWeave gaps up, moves above the 100 period. RSI showing strength, so you could have this nice little run up for a half an hour in the morning, or wait for the dip. I prefer to wait for the dip if I miss the morning. I'm not going to chase this. The 1 minute's a very good scalping, very good day trading technique. It's very easy to understand what's going on here. Seven, 1, 2, 2, 4.
coverage meets expert strategy. From the opening bell to the closing bell, we've got you covered. Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis,
Okay, CoreWeave. Okay, Amazon. I wanted to say American Express. Amazon. Okay, following along. Oversold conditions, oversold again after the dip. Okay, ABCD pattern is what you're looking for. If you don't know what I'm talking about, if you're a new member, if you missed the morning rush, there's no need to chase. Okay, look for this pattern. It happens quite often. You get the morning rush. People on the West Coast wake up at 6 o'clock or whatever time they get up. They can trade the open at 6:30. That's 9:30 our time. The New York Open. They can trade for an hour or so. You get this little run up. Okay, that's your A pivot. You can see that here. You get your A pivot. And then after they take their profits and start to go to work, you know, they leave at 8 o'clock or whatever to get to work. If you live in LA, you probably have to leave an hour ahead of time at least. Then you get B and C. You can see the higher lows. Okay. That's telling you the stock is still in play. It makes a lot of sense when you think about it because today is earnings. So you take the B and C pivot, right? Oversold, moving higher. You put your stop underneath 111. Okay, you're already up $3 or $2, $3, and about to make the high of the day. I'm going to keep these options I have. Hopefully, we don't get a slap down. I don't need any more slap downs this week. We got Robinhood, which we're going to have to. Robinhood will have to manage if it doesn't find a bid here. We got 3 days left this week and all of next week to manage it. So I have the 70-65 put credit spread. The calls are dead. You could take the call side off, I guess, if you wanted. In the next week, I don't think. Okay, we've got U.S. interest rate decision, 375. Okay, so we got rates, 375, actual 375. Okay, no change. Rates and no change on the Fed, no change. 3.75%. Fed, FOMC. Okay, 2 o'clock. We got our FOMC. Are we going to rise here? Are we going to drop here? Let's look at the S&P. Okay, S&P 500. Okay, I don't think anybody expected a rate cut, did they?
I believe a reform-oriented Fed can make a real difference to the American people. And if confirmed, I will seek to create an environment in which the best people do their best work.
I'm Matt Peterson. I'm an economics reporter for CNBC. I'm here in Washington, D.C. to cover the nomination hearing for Kevin Warsh, who is hoping to be the next chair of the Federal Reserve. Kevin Warsh said very clearly in this meeting that he will kill the forward guidance. So ever since the financial crisis, the Fed has been in the business of trying to tell markets where it thinks it's going.
Unlike many of my
CoreWeave.
past and present, I don't believe.
Okay, we'll come back to that. CoreWeave looks like it wants to keep going. Watch the S&P. We should see some back and forth here. I don't think anybody was expecting the Fed to cut rates. I guess there are some. You know, you get these flows back and forth, I guess. Okay, Oracle just dropped off. NVIDIA at the low of the day. So there's some jockeying back and forth. We got earnings tonight. I think that's probably more important right now. The Fed, everybody was expecting the Fed to just keep things the way they are or raise rates for that matter. So nothing there. Thank you, Grover. Intel having a hell of a few weeks here. Intel is at the highs. Intel, big move on the weekly. Intel breaking out above 50. I forget who it was that upgraded it right around 50. They upgraded it to $60, and that's when the stock started moving. So 4 weeks ago, if you were fortunate enough to get that message, Intel's still going. All right. No big surprise here, Intel. Intel. Let's see, 3 weeks ago, we were looking at Intel. That would have been first week of April, right? First week of April. Kind of a boring day, I realize. A lot of things are fading, like IWM. No follow through there. Intel's at the highs. Nvidia taking a trip to the downside, back into that base, possibly. Let's see what hedge flows look like. Hedge flows. Okay, making a new low here on the hedge flows. Okay, 7,100 is the level we got to stay above, right? 7,100 S&P. Okay, we're headed to that direction. Back to the low of the day, at least. I'm less concerned about this right now than I am. Okay, tonight we've got earnings. S&P.
I'm interested to get your take on your show. Yes. As you've been talking to very smart strategists, and you've been asking them, what do you think the Fed's going to do in 2026? Their base case. What have you been hearing from them? The base case seems to be none or one. That's what I've been hearing. Right. Yeah.
RTACU may resume in less than a minute.
What people are thinking about here. And again, the backdrop.
Okay, what's Micron doing? Micron, the other chips. Okay, Micron, Doji, Micron.
Right now, but that has nothing to do with the announcement. And Julie, I'm with you. I thought stocks would have taken a little bit of a leg lower. Here's the S&P 500, and you can see just the faintest of reactions. We're not even at the lows of the day here, and we're talking an S&P 500 move of 0.3%. So this is just
we're off 20 handles plus. Okay, currently off 23. All right, looking for a move back up. Not a very active day for me. Saw a couple of day trades maybe were worth a shot. CoreWeave, ARM, Intel, Tesla just dipped a little bit. Netflix looking for some more follow through. Meta.
Same deal for the 10-year U.S. Treasury note futures. Those took a little bit of a dip, and they were already down in the day. That means rates were up, and 30-year is something I've been watching on a blog and maybe 30 minutes an hour. See how that reacts to the Fed conference. But that number has been inching closer to 5%. That's a number to watch on the 30-year. Meanwhile, here's a large cap sector action. We got energy up 2%, and tech has been just barely positive most of the afternoon. Energy on the back of that huge rise in crude oil. Brent crude topping 119.50 for the first time in years, I believe. And to the downside, we have healthcare, materials, industrial, utilities, all those down about 2/3% or more. Let's check out the NASDAQ 100 because we got those big Mag 7 earnings after the bell. Nvidia leading chip stocks, at least the market cap down. That's down 2%. Then we got Apple, down about 1/3, Alphabet down 4/10, Microsoft up 1.5 or down 1.5, and Amazon bucking the trend. Amazon up 1.5%. So we're going to get a bunch of those earnings after the bell. Let me show you what's been happening in semiconductors today. So Nvidia, I said, was already negative, but a lot of these others are broadly positive. AMD up 3%, Intel up 10%, SanDisk up 6%, and Western Digital at 7%. So after 2 days of slumping, semiconductors are back, and we'll check out
Intel. Never would have figured Intel.
Up 6%, but you see Palantir down at the bottom. That's down about 3%. I do want to go over the futures move real quickly in crude oil because I wouldn't expect that to react to the Fed news today, but it's very material to what's going on in large cap sector action. You saw that energy was leading. Here is the chart for today.
Intel's still going.
WTI, and Brent was the number I was talking about before.
Low ticker at -800.
Okay, we're moving lower. All right, we're going to drag a lot of stuff with. 7,100, we're coming down. We're 12 points away now. 7,100. You got to stay above 7,100. If you don't have any hedges, consider it. Okay, what's VIX at now? What's VIX at the moment? It was lower. Okay, VIX is already starting to move. All right, so this morning, when we first mentioned this, was trading right around 1830, 1840. Okay, so the 2025 or the 2030 call spread may be worth a shot.
Some are expecting stronger productivity growth to be disinflationary. Myron is in that camp. Incoming Fed Chair Kevin Warsh is in that camp. Others are more worried about the imminent effects of the Middle East conflict, which will lead to higher inflation, and do not want to have an easing bias in the statement. The easing bias is not that clear. It's essentially the extent and timing of additional adjustments to the farm. The word additional adjustment could have been removed, and we could have had no additional term, which would have signaled perhaps a little bit more of a hawkish stance. Let's not forget, in the minutes, there was a number of policymakers that were expressing this desire for a two-sided statement, putting rate hikes back on the table should there be need.
Given what you're saying, that like we're talking about such a quibble of a nuance in this statement, was the dissent a message to Kevin Warsh? You know, rather than just having that discussion in the meeting, are they saying to Kevin Warsh like, you can't come in here once and raise it and expect to convince us all to cut rates?
I think it reflects the fact that there is a broad range of opinion as to how this situation will evolve. The situation remains extremely fluid. We are seeing that with every day that passes, we're seeing higher energy prices, higher commodity prices. That will filter through to higher inflation, both in terms of energy inflation, in terms of food price inflation, and in terms of corn inflation. There will be some pass-through. So what that means essentially for the Fed is that they are going to have to be attentive to the fact that inflation is still away from 2% rate. It's moving further away, and that gradually the Fed will have to adjust to that reality and take into consideration the distance, the departure from that mandate, and how much time it is going to be expected to come back to 2%. Because that's really the Fed's main objective. With the transition underway here, that's going to be an even more difficult environment when it comes to decision making.
Okay, NVIDIA at the lows. It's not helping out. NVIDIA. Okay, CoreWeave still looking okay. All right, hedge flows. By the end of the day, this could look completely different, so just be aware of it. We have earnings tonight that should be helpful, provided we have good earnings and good guidance. Even that's not a guarantee. Microsoft last time around gapped down on their earnings. They had good earnings, but they gapped down because they were talking about the spend that they were going through. Same thing that happened to Oracle. Oracle had good earnings a few quarters back, but gapped down, started fading, I should say, after talking about their debt load, their spending. etc. So this is what we're looking like here. So this was the last earnings. Two earnings 2 quarters ago. And for the past 2 quarters, we've just been trailing off. We're looking for a bounce and for a new trend to start. Broke the downtrend. Keeping an eye on Oracle. Got a small position for now. We'll add to it only if this continues. Mm-hmm.
We need to get ahead of any movement that there could be around expectations, as opposed to how they might actually feel inflation will play out this year. Okay, so here's what I want to ask both of you here. I'll start with you. I know going into this, you were not expecting seeing what you saw today, do you push that further? Do you expect the next move to be a cut? And then same question. We have been debating, do we see a cut in December? And no earlier than that. But if this pushes that out, I do still think that there is a possibility for cuts within 2027, whether it's 1 or 2, because we could very well be in a position where the labor market weakens a bit further. It's really on a nice edge right now where it's weak but not quite weakening, so we have to continue to monitor that. Where we will be next year could be a different position. And when we think about inflation, look, we're still seeing that disinflation shelter. We are still seeing other parts of the inflation concepts that are softening a bit. I mean, without as much inflation, that creates some difference to demand. And then on top of that, if you do see this flip side to tariffs and flip side to energy, that should leave a bit of room for the Fed to potentially cut in the early part of really any time in 2027 and shape up. Right?
Yeah, I mean, I fully agree with the idea that we are going to see some demand destruction from this shock, and that is going to be disinflationary. The question is how much weight do you put on either side of the mandate, the employment side or the inflation side? And what I'm seeing right now is that we are at risk, and you highlighted that correctly, that we have the risk that inflation becomes more persistent. If you take a look just north of us, the weather
Mm-hmm. Mm-hmm. All right, let's see if we get a bid down here. Boring day. Netflix, no follow through. Nvidia at the low. Okay, we're starting to turn back up. S&P, VIX. I'll probably would wait now. I would probably wait, see if VIX can come back down. If you're thinking about a hedge for earnings, or you could just buy puts on the Qs. That's one way to play it, I guess. If Amazon, those guys, or deliver bad news. If you're even inclined to do any kind of short-term trading, long-term, everything looks fine to me. S&P is just sitting up here. Okay, so we made new all-time highs. We're not able to. We're not just going to keep going. I mean, this is crazy. We're in the thick of earnings, big tech. So the weekly, we've come up. This is the 5th week in a row. All right, so not unusual to be hanging out up here at the highs. Not too much different than the last time in April of 25 when we dipped 20%, 21%, came back up to that previous high. What did we do later? We continued to move higher despite everyone's concern about earnings and everything at the time. You know, we continue to cruise up this wall of worry. I mean, we went up another, 700, 800 points. So that's possible. I'm not anticipating it at the moment. CoreWeave looks good. Intel looks good. The energy stocks look good. APA, let's see what APA is doing right now. APA, Doji, Chevron. Okay, it's really hard to do anything at the moment. Looking for dips if you're going to buy anything intraday. Chevron at the 50-day. ConocoPhillips. Energy stocks have been doing better. Conoco, I like better than Chevron, even though Chevron has the exposure to Venezuela. You could do the refiners too. VLO, Valero. VLO looks pretty good. VLO. Valero reports Thursday, right? I believe. Valero reports Thursday. Valero is a refiner. That's doing really well. Energy. Valero looks pretty good. Came off the 50-day a week ago. Volume, MACD, Stochastic, everything's turning. Valero looks pretty good if you're interested in energy stocks. For a hedge. Valero for a hedge. VLO for a hedge. Bullish energy refiners. Nice follow through off the 50-day, bullish 50-day, trending 50-day. Oh yeah, definitely. Yes. Supposedly. Yeah, supposedly. BlackBerry, same result. Okay, let's look at BlackBerry. BlackBerry, okay, it's dipped over the last couple of days, but it looks like it's going to start doing something soon. BlackBerry. Nokia, BlackBerry looks okay. Nokia, of course, Nokia has been running in okay. Nokia breaking out of this little ascending flag. All right, so Nokia continues. People finally woke up to what's going on with Nokia and the servers or whatever. You got this basic upward sloping flag, and then prices break to the upside. The volume shows institutions. There could be some shorts too. I'm not sure how much is short. Let me go check here. Let's see. Nokia new V/OI or our shorts covering or both. Any news? Okay, Nokia. Aggressive new positioning and forced short covering triggered by a massive guidance raise that the market wasn't priced for. Okay, so that looks pretty good. Okay, if you like the prospects, I like the prospects of following through. Nokia. Nokia. So the institutions, the big institutions must be in.
What's this? He's called over a brother to prowl the wheels. Together they double their chances of winning and make quite the fearsome opponent. Success. But this is just the beginning. Hunt down your next jackpot. Download Double Down Casino and play for free.
Now, welcome to Club Vegas. Experience the thrill jackpots in just 10 spins. And every 10 minutes, enjoy free games for nonstop fun. New to the game? A generous welcome bonus of 10 million coins will be awarded. Immerse yourself in the authentic casino experience right from the comfort of your phone. Download Club Vegas now and let the good fortune come to you.
Nokia's going.
With the committee seeing four dissents for the first time since 1992, Dennis Lockhart, former president of the Federal Reserve Bank of Atlanta, joined us now. Dennis, always great to see you. So let's just get your big picture reaction and response, Dennis, to the decision and the divide over what to do next, Dennis.
Well, first of all, I think the decision today was a foregone conclusion. I think the committee overall is happy with the positioning of policy at the moment. They're in a wait-and-see mode. They want to see how inflation trends, particularly with the influence of the Middle East war. The division on the committee is between hawks and doves, as it usually is, and I think there's a contingent that really wants to prioritize inflation at the moment, while there are others who are more allied with the White House preference for lower rates. So it's a healthy debate. I'm not surprised at the decision at all.
Dennis, it's Julie here. I want to ask a version of what I asked our panel, which is the three that dissented and said they did not want an easing bias necessarily. Were they sending a message to Kevin Warsh as he comes in that they're not willing to sort of just roll over and ease rates?
Well, I think that's been the picture for quite some time, that this is a committee that's going to make its decisions in a consensus sense, and the new chair is not going to be able to dictate policy. So I don't think that's changed in any respect. There was some discussion going into this meeting of a two-sided, and you discussed this in the earlier segment, some kind of a two-sided guidance indication that would have put a little bit more in play the possibility of a rate hike. The committee chose not to do that, and so these dissents may very well reflect that sentiment, sort of a soft way, in a manner of speaking, of getting the committee to speak in a two-sided possible direction for policy.
Dennis, there is this debate occurring, and it's current, with our policymakers, our central bankers. What does Brent at 118, Dennis, mean for growth and employment and inflation? And I'm curious how you think of that.
I'm sorry, the AI question that we can.
No, the question of this energy price shock we've seen with Brent at 118 and what that means for growth, employment, and inflation.
Well, it's a supply shock that can result, it may take several months, but in a one-time effect, and therefore doesn't really, in a persistent sense, change the rate of change of prices. It just jumps prices, and then perhaps they decline later on, and that's what the committee is hoping for. And many on the committee believe that's going to be the case. At the same time, it will last for a long time. It can dislodge inflation expectations and become a bit more of a longer-term cycle and affecting the inflation rate. And I think the hawks are concerned with that picture. So the overall posture of the committee is wait and see for a while. They've got the policy set at a modestly restrictive level. I think that they're satisfied overall that that's where policy should be. And I don't expect there will be much change for several months, which of course is going to make Kevin Warsh's navigation of the early meetings a tricky affair.
And Dennis, do you think Jay Powell will remain on the committee through the end of his term?
I really don't know. I doubt in the press conference in a few minutes we're going to hear an answer to that question. He may be waiting for more information.
Okay, so this looks good, right? I'm just taking some notes. Sorry, get kind of focused, and I just like lose sight of everything. S&P 500. Okay, still looking pretty ugly for now. CoreWeave back to the highs of the day, so not everything is doing so bad. S&P is trying to bounce off of this level. 7,100 is the level we have to stay above. If we lose 7,100, if you haven't already done so, you should be thinking, at least in the back of your mind, what am I going to do if I need to hedge short-term positions? If you're long-term, you have nothing to worry about. The markets are going to go through this, make it through this just fine, I would think, right?
Unaligned party in the decision process, and we just call it as he sees it. So I think the data ultimately will speak, and he would respect that. That's the kind of Fed he has guided, and I think to basically follow those stars.
And Dennis, some of the reforms that Kevin Warsh has proposed, notably getting rid of the summary of economic projections, do you think that's a good idea?
We debated it when I was there 2 or 3 times.
Okay, so I basically subscribe to the idea that we just have to wait for earnings now. Not much to do. Okay, Oracle. Let's see what some of these are doing. Coming off the low. No, I don't want to do that. Let me go ARM. ARM. Okay, now I'll go here. CoreWeave. CoreWeave, big solid candle today. CoreWeave. Okay, so you got oversold. Again, look for your 1-minute chart if you're day trading. Okay. Consider taking some off as you hit the overbought level, but you want to buy on oversold on a 1-minute chart. This is holding up fairly well. So I would probably shift to the 5 or 15-minute chart as long as it continues to thrust like this, just to zoom out and see what's going on. CoreWeave. Looks like it's going to build this the right side of this cup. If you look at the 60-minute time frame too, we're above the 20 EMA. So this is telling you, okay, I'm long now. I want to put a stop underneath the 20 EMA. Moving averages are crossing over. The 10 EMA is crossing above the 20. It's crossing above the longer term moving average. Now we're looking for more upside in CoreWeave. It looks pretty strong. Tesla, if you look at the 20 EMA, 60-minute, what does it tell you? It tells you no momentum here. Apple, okay, it's trying to hold on to some momentum. NVIDIA, losing momentum. Microsoft earnings tonight. Okay, maybe this is back above 432, 435 tomorrow if the earnings are good and they don't screw it up by saying, oh, they doubled down and even added more debt to their. Maybe Satya will talk about how they're dealing with the debt. These data centers are just costing so much money. Okay, let me get this real quick. All right. Corey, back up to the highs. Okay. Powell speaking. So you know what the deal. You want to wait and see what Powell has to say after he's finished speaking. Maybe we get something going here. Corey, Powell speaking. Jay Powell.
Consumer spending has been resilient, and business fixed investment has continued to expand at a brisk pace. In contrast, activity in the housing sector has remained weak. In the labor market, the unemployment rate was 4.3% in March and has changed little in recent months. Job gains have remained low. A good part of the slowing in the pace of the job growth over the past year reflects a decline in the growth of the labor force due to lower immigration and labor force participation. Though labor demand has clearly softened as well. Other indicators, including job openings, layoffs, hiring, and nominal wage growth, generally show little change in recent months. Inflation has moved up recently and is elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 3.5% over the 12 months ending in March, boosted by the significant rise in global oil prices that has resulted from the conflict in the Middle East. Excluding the volatile food and energy categories, core PCE prices rose 3.2% over the 12 months ending in March. This relatively high rate largely reflects the effects of tariffs on prices in the goods sector. Near-term measures of inflation expectations have risen this year, likely because of the substantial rise in oil prices. Most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5% to 3.75%. The economic outlook remains highly uncertain, and the conflict in the Middle East has added to this uncertainty. In the near term, higher energy prices will push up overall inflation. Beyond that, the scope and duration of potential effects on the economy remain unclear, as does the future course of the conflict itself. We will continue to monitor the risks to both sides of our dual mandate. We are well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. Monetary policy is not an preset course, and we will make our decisions on a meeting-by-meeting basis. This is my last press conference as chair, and I will close with a few thoughts. First, I want to congratulate Kevin Warsh on his advancement out of the Senate Banking Committee this morning. This is an important step forward, and I wish him well as that process continues. The Federal Reserve exists for one fundamental purpose: to foster the economic conditions in which American families and businesses can thrive. Stable prices, a strong job market, and a financial system they can depend on. Every decision we make, whether about interest rates or regulatory and supervisory matters or other issues, is made in service of that purpose. Our decisions reflect the collective judgment of the Board of Governors and the Federal Open Market Committee, colleagues who demonstrate analytical rigor, principled judgment, and a genuine commitment to the public interest. Our collaborative and deliberative process has long reflected a shared commitment to finding common ground in service to our mission. This institution is resilient, capable, and staffed by professionals of extraordinary talent and exceptional dedication. It has been a privilege to serve alongside so many great public servants at the Board of Governors and around the Federal Reserve System. The Fed's work is only as effective as the public's understanding, and you, the press, are essential to keeping the public informed about what we do and why. The people we serve benefit from your careful reporting. I welcomed the announcement last Friday by the U.S. Attorney for the District of Columbia that she had closed the criminal investigation. She also noted, however, that she would not hesitate to restart the investigation. Over the weekend, the Department of Justice provided assurances that they will not reopen the investigation unless there's a criminal referral from the Fed's Inspector General. And Absent such a referral, if they did appeal the recent court decision, they would not seek, as part of that appeal, to restart the investigation or send new subpoenas. I've said that I will not leave the board until this investigation is well and truly over with transparency and finality, and I stand by that. I'm encouraged by recent developments, and I'm watching the remaining steps in this process carefully. My decisions on these matters will continue to be guided entirely by what I believe is in the best interest of the institution and the people we serve. After my term as chair ends on May 15, I will continue to serve as a governor for a period of time to be determined. I plan to keep a low profile as a governor. There's only ever one chair of the Federal Reserve Board. When Kevin Warsh is confirmed and sworn in, he will be that chair. Once sworn in as board chair, his new colleagues will elect him to chair the FOMC as well. As I regularly point out from this podium, our success in delivering our goals matters for all Americans. I'm confident that the Fed will continue to do its work with objectivity, integrity, and a deep commitment to serve the American people. Thank you, and I look forward to your questions.
Thank you, Mr. Chair. Appreciate the kind words about the press. Often doesn't come from the podium in different places, but appreciate that. Can you talk about what is gone into your decision to remain on the board? What kind of criteria are you weighing, and how long would you stay? Thank you.
Sure. So, my concern is really about the series of legal attacks on the Fed, which threaten our ability to conduct monetary policy without considering political factors. Now, I want to note here, this has nothing whatever to do with verbal criticism by elected officials. I've never suggested that such verbal criticism is a problem, and neither has anyone else here. But these legal actions by the administration are unprecedented in our 113-year history, and there are ongoing threats of additional such actions. I worry that these attacks are battering the institution and putting at risk the thing that really matters to the public, which is the ability to conduct monetary policy without taking into consideration political factors. It is so important for our economy, for the people that we serve, that they can depend over time on a central bank that operates that way, free of political influence. It's part of the absolute foundation of this amazing economy that we have. It's just one of the many reasons why the U.S. economy is the envy of the world. That piece of institutional architecture separates successful countries from unsuccessful countries. It is extremely important, not for the people who work at the Fed at any given time, but for the people that we serve, that the Fed remain able to conduct monetary policy in a way that doesn't get pulled into politics, trying to help or hurt any particular politician or political party. It's critical for the people that we serve. In terms of when I would leave, I will leave when I think it's appropriate to do so. Was that all your questions, or was that?
Well, I just have a follow-up, which is, what would you say to the criticism that by remaining on the board, you're actually taking a political act and denying President Trump the majority of the board, which as president he would have if he left?
I don't see that at all. And as I mentioned, I'm literally staying because of the actions that have been taken. I had long planned to be retiring, and the things that have happened really in the last 3 months have I think left me no choice but to stay until I see them through at least that long. In addition, I don't see how this will interfere. My intention is not to interfere. I was a governor for almost 6 years. And the tradition is at the Fed that governors who understand how difficult the role of chair is, and as a soon-to-be former chair, I do understand how hard it is to get consensus with 19 strong-minded people. You work with the chair. You try to be heard, but also collaborate with the chair and try to support the chair when you can. When you can't, you can't. And I think that's the attitude that people generally take, and that's the attitude that I'll take.
Chair Powell, if I could ask about the inflation outlook. In March, you described the standard practice of looking through energy shocks as conditional on inflation expectations staying anchored. Since that meeting, there has been very little progress reopening key energy trade corridors. Can you help us understand how the inflation outlook has changed in the intervening period, beginning with the prospects for tariff pass-through resolving on the timeline that you had outlined in March, before getting to the energy shock that is now on top?
So, I would look at it this way. For a long time, we've been working on the hypothesis, really, that tariffs would lead to a one-time price increase and that would go away over time. In other words, that there would be no further change, so measured inflation wouldn't reflect that higher level going up more and more. And it's time for that to happen. We really do expect that to be happening in the next 2 quarters. So we'll be watching very carefully to see that what we thought all along would happen. That's the kind of critical part of the forecast. We need to really see that. With energy, it's so hard to say. I mentioned, in sort of the textbook, you would look through an oil shock because they tend to be short-lived and they tend to revert. And monetary policy works with long and variable lags. So,
Okay, we're still above 7,100. Okay, CoreWeave continues to ramp up here. CoreWeave still going.
looking through the tariff shock. So I think we're going to be very cautious about that. But the question about looking through energy really is not in front of us right now. It hasn't even peaked yet. And I think we want to see the backside of that and progress on tariffs before we even thought about reducing rates.
So if I could follow up, the statement today preserves language that has taken on some meaning as it was socialized when the committee was actively lowering rates. Why is that easing bias still right, given
CoreWeave is still going here, looking very strong. Okay, let's see. CoreWeave, Netflix, Nokia. Nokia is looking good. CoreWeave, continuation. Netflix. All right, trying to turn back up. Netflix. Microsoft.
Low tick alert minus 800.
Has increased over the intermediate period, and it's easy to see why. It's a good question, right? You see, inflation has moved up over the interim a bit. Core inflation.
Okay, I have to take about a 5-minute break. Just got to go talk to the roofer. I'll be right back.
There will be, that there's headline inflation coming out of the Gulf, and we don't know how much that will be. We're going to need to see. So it makes all the sense in the world that people would look at that and have a vigorous discussion about that. You saw that 3 people dissented over the language. I think all of those people agreed with the rate decision. So the majority of the committee did not want to do that, and I didn't think we needed to do it this meeting. It really was just a question of why do we need to do that now? We have so much to learn. There's so much uncertainty about the path ahead. There doesn't need to be any rush to make that decision now, because what happens in the next 30, 60 days, even by the next meeting, could really change the picture around that language. So it's a much closer thing on the committee than it was in March. And that makes all the sense in the world, it seems to me.
So Claire Jones, Financial Times. Just going back to this issue of the easing bias. We've now got oil approaching $20 a barrel when it comes to the benchmark Brent crude. If it stays around those levels 6 weeks from now, what would be your best guess as to whether the easing bias will still be in the statement? Thank you.
I wouldn't want to guess. Well, first of all, we're going to have new leadership in all likelihood by then, and new leadership is going to have a very important role to play in that. So I won't be standing here putting to answer your question. So I don't know. As I mentioned, that's all I can really say is that we had a great discussion about that today. It's gotten to be a better question in the interim period. We had the discussion. The majority are still on the page of not feeling the need to move to that level, and that's where I am. I get it, though. At a certain point, you would move, and that conceivably could come as soon as the next meeting.
Thank you. Just to follow on, the new leadership also seemed rather lukewarm on press conferences and on the dot plots. What would your advice to him be on these communication tools?
So I'm not going to give him any advice through you today here, but I think communications generally is. I think every incoming chair takes a look at communications, and it's a very healthy thing. I mean, communications it's very complex, and you can always be looking at new things, and if that happens, feels like it's going to happen, that's a completely appropriate thing.
Hi, Chair Powell, dealing with infectious. Can you tell us if you've been in touch with incoming Chairman Warsh? To what extent is this a normal transition process versus all the things swirling around, something unusual, and what can we expect when he takes that podium in a few weeks?
I haven't seen him since seeing him at a dinner in January where I congratulated him and had a nice chat with him. Haven't seen him. I don't know what a normal process is. The last process was with Janet Yellen, with whom I had worked for 6 years, and so it was we were sitting down the hall from each other, so it was a very different thing. I think this is and will be a very normal, standard kind of a transition process. So that's what I expect. I have every reason to think it will be.
Quick follow-up, is the Supreme Court ruling on Governor Cook a factor in when you may leave as a governor?
I wasn't thinking of it as such, but no, not really. I mean, I'm thinking more of the other things I mentioned.
Hi, thanks for taking our question. I wanted to ask a question about your tenure and Chris Rugaber at Associated Press. During your tenure as chair, you often spoke about how disadvantaged Americans benefited from extended periods of low unemployment. In the new framework the Fed adopted in 2020, some economists say elevated the Fed's employment mandate. Are you worried that the pandemic inflation spike that followed will make future Fed chairs more reluctant to pursue a hot jobs market? And should they be?
I don't know the answer to that. I mean, what we experienced in the teens, the mid-teens, was really low levels of unemployment for a long period of time and no reaction from inflation. And we all very much took notice of that. We also noticed that the biggest wage gains were going to people at the bottom end of the income spectrum. And we had many reports of, it felt like a fairly stable equilibrium, and a lot of benefits were flowing to people at the bottom end of the income spectrum, including companies were, setting up in people who were confined and like training them before they got out. And it was a very healthy sort of set of societal dynamics. So of course, I think anybody would love to get back to that. I don't think that anything that happened to create the global pandemic inflation was in any way related to overweighting the employment market. I mean, it was a global shock that happened essentially very similarly all over the world. It had to do with closing, reopening, stimulus, and all that. And I mean, you could look at a graph of 10 big economies on the page and not know which was the U.S. and which was Germany, France, and things like that. So I don't think that insight was in any way responsible for the high inflation that we experienced. So, I mean, I think it's always been a balance. You've got to be strong on both of our dual mandates. And we just, for example, now we don't feel that the labor market is at all a source of inflation, so we don't need to be worrying about that. It's been a long time since we have had to worry about that. Well, actually, during the pandemic recovery, the labor market was super overheated and tight, and that's when we had to worry about it, but not now.
And just on the other issue, do you need more assurance from the Justice Department before stepping down? Is that what you're waiting for, or what else?
I'm waiting, for the investigation to be well and truly over with finality and transparency, and I'm waiting for that, and I will leave when I think it's appropriate to do so.
Michael McKee from Bloomberg Television and Radio. I'd like to ask you if you could explain a little more or characterize a little more the discussion about the two-sided view and interest rates, because there were some members of the Open Market Committee who've been suggesting that we may need to raise interest rates even absent the war because inflation was not coming down fast enough. Is there any sense that interest rates might have to go up, or was this just a setup to sort of warn people that you're worried about the war impacts?
So nobody, the three dissenters and others who could have supported that, and others who were voters and non-voters who preferred it, they all supported the right decision, right? So
people are not saying we need to hike now. It's more a question of, don't we kind of feel that we should be neutral? And markets, what are markets doing? People argue this is consistent with markets are doing. And again, it's a very fair question, but these changes, it's a form of forward guidance, and you want to make them in a way that will be sustained and continue to make sense and not something we can take back, fairly quickly. So I think we just, the group of us, including me, didn't feel like we needed to be in a hurry on that. That markets are not confused about our reaction function. We don't have a problem to solve on that. But the other side of the argument is a good argument too. As I mentioned, it's a perfectly good argument to be having, good discussion to be having. So it came out the way it came.
Well, you've got 3 dissents in favor of two-sided warning. You've got yourself staying on the board. You've got the criticism that does come from elected officials, and you've got a lot of critics who have faulted the Fed for being too slow 2021 with inflation. Are you worried about Fed credibility under all of this? Is that one reason that you want to stay on?
Not driving my thinking now. I mean, monetary policy is going to get made by 19 people. There's a lot of stability there. I mean, if you think about it, every new Fed chair has the same situation, which is you've got 18 colleagues on the FOMC, 11 of them vote during any year, and your job is to create consensus. It's to talk to them, understand them, be inside their thinking, and be able to pull them together and get consensus and move. And that's what every Fed chair has to do. And I think Kevin Warsh is actually quite well. He has the capabilities, skills to be very good at that, I would think. So I think I'm not so worried about that process. I think that'll work itself out.
Thank you, Chair. Howard Schneider with Reuters. You mentioned that staying on as a governor, you intend to keep a low profile. I'm just wondering if you could give us a little more detail on what that looks like and how you can. Walk down the steps. What that looks like, and particularly around the policy discussion, and how you're able to have your intervention and not be a shadow chair, not have a kind of an outsized influence over the process.
Yeah, that's just something I would never do. The shadow chair thing. I don't know what the exact specifics of it will be, but I'm going back to being a governor. I respect the role of chair. I was a chair. I was a governor for 6 years, and I know what that's like. I know it. And I had a pretty front row seat particularly with Chair Yellen, to whom I was close when I was working with Chair Bernanke for 2 years, but. I was brand new at that time, so I got a sense of what it was, and I had real sympathy for how hard it is to get that group to consensus. And I always felt like I don't want to add to that unnecessarily, and that means try to support the chairs, where the direction the chair wants to go. And if you can, you can. But I think that's the way it's always worked there, because the chair only has one vote, plus the ability to develop consensus. And if people won't be. They won't, if they're not flexible at all, then how do you ever do that? And so that's why the authority the chair has really is to develop relationships with people and work with them and put something forward that has consensus. And I propose to be a very constructive participant in that process, but really out of respect for the office of the chair.
And in your view as a soon-to-be governor, how do you see the risks of oil prices bleeding into core inflation in coming weeks? Because it seems like the commentary that was coming from particularly some of the Reserve Bank presidents, they were elevated concerns about the bleed into core. And here we are with 3% now. What do you see as the prospect of core inflation?
Those prospects are real. Remember those and the real thing is we're going to have to wait and see. We're going to need to see. And the good news is we think our policy stance is in a very good place for us to wait and see. We're right kind of at the high end of neutral or perhaps mildly restrictive. The labor market shows more and more signs of stability, whereas inflation is kind of misbehaving. So maybe a little bit of restriction or the high end of neutral isn't just the right place to be. So we can wait here and see how things work out before we act. And we'll see how much that, how much does come through in the core. You see it already in airfares, of course, but you may see it in many other places. We just don't know yet, and it's so unknown because how long will the strait be closed? You can develop any number of scenarios that you want, but we really won't know until we know. So fortunately, we're in a good place to wait and let things develop.
Thanks, Mr. Chairman. You started holding post-meeting press conferences for every meeting as opposed to the ones with just with SCPs. Can you talk about why you see that as a net positive?
So we always said
Microsoft looking good. Okay, so same thing here. Microsoft, if you've been paying attention, you got oversold conditions at 12:30. We've been making higher lows since. We had another higher low, little dip. But generally, if you use the 1 minute chart, this is going to be a great setup for, there we go. The S&P is turning back up now. All right, there goes Google. All right, a lot of stocks, a lot of 1 minute charts are firing at 215, 210 right here. You got a RSI turning back up. You have a nice little entry there for Google. Got earnings tonight. Amazon, same thing. Amazon, same thing, looking good. CoreWeave, of course, is at the high. Okay, Amazon looking good. CoreWeave, same thing, at the highs. Okay, looking really good there, CoreWeave. What's Intel? Intel doing?
making changes, making really large changes, for example, to the dot plot or the SEP.
Okay, Tesla doing the same thing. Tesla turning back up. Okay, Tesla back up to the highs, looking good. Okay, Nokia, of course, Nokia having a good day. Nokia with the company upping its guidance for 26, 27, doubling their income, basically. Okay, we looked at that before. Okay, so here is Nokia. Okay, so that is not what I want to look at right here. Here's Nokia. Nokia, aggressive new positioning and forced short covering triggered by massive guidance raise. Massive being the key phrase here, massive guidance. Management just raised their 2026 network infrastructure forecast to 12%, 14%, up from 6%. They're doubling it. They're doubling their earnings. That's crazy. Hyper growth in AI-related markets and a 49% surge in net sales to AI and cloud customers. Argus and several others upgraded to buy today, calling it an AI accelerated demand story. All right, so not surprising. Nokia is having a good day. Watch BlackBerry too. BlackBerry. Okay, these are doing well. These are inexpensive stocks too. They're over $10 now. Okay, just shy of $10 as we push higher now, about 13 almost. Okay, Tesla's looking good. All right, looking good. Just listening to Powell.
The effects on the United States are really substantially less than those of Western Europe or Asia, who are feeling much greater effects from these things. Effects we're feeling in the current situation currently, and in sort of what's priced in, which is this goes on for much longer and prices go much higher, then you'll feel that much more. And of course, I'm talking about aggregate inflation numbers. We're very well aware that people are experiencing higher gas prices all over the country now, and that hurts. Those hikes may continue to happen, and other things are going to start to reflect airline fares I mentioned, and other products and services that are dependent upon petroleum and derivatives of petroleum. People are going to start to feel that.
Edward.
Thank you, Chair. Edward Lawrence with Fox Business. So I guess I'll just ask you directly on this. The markets don't see a rate cut at all this year, is what they're predicting. Do you think that we are at the neutral rate? Why or why not?
The neutral rate is we cannot know it with certainty. I think pretty close to the neutral rate. Yeah, I always had it, between 3% and 4%. We're a little north of 3.5%. So that's well in the range of what I would consider reasonable, but at the higher end of the range of what I would consider reasonable neutral rate. I think the labor market is still probably cooling off just a little bit, and I don't think there's much of a case for any case really for policy looking meaningfully restrictive, maybe mildly restrictive or neutral, I would say.
And I want to follow up on some of the other questions about your future a little bit. The first time we've seen four dissents now since October of 1992. Are you handing off a divided Fed?
The thing to remember is we have always had vigorous debates, and they're excellent debates. I have to say they've been really good. And we're in an unusually difficult situation. So we really had 4 supply shocks. You can say more than 4, but at a minimum, we had the pandemic, we had the invasion of Ukraine, we had tariffs, and now we have Iran and the oil, the oil spike. So every supply shock has the capability of driving inflation up and unemployment up. And what do? It's the central bank has a really hard time knowing what to do. So the right thing to do is to try to balance the achievement of those 2 goals, and that's what our framework calls for us to do. But these are really tough. You've got to have a forecast for each variable. You've got to think how long it's going to take to get back to target. You got to think how restrictive or not is policy. So it's only natural that you have a range of views on the committee. People are going to see it different ways. They're going to have different risk tolerances and that kind of thing. I mean, if everybody agreed, that would be surprising. And I think it's partly a function of the extraordinarily challenging set of supply shocks that we've been dealing with now for 5-6 years.
Thank you so much, Chair Powell. Selena Wayne with ABC News. Are you confident that Kevin Warsh will stand up to political pressure from President Trump?
So he testified very strongly to that effect in his hearing, and I'll take him at his word.
And when it comes to gas, right now it's over $4 a gallon. Inflation just hit a 2-year high. Should Americans expect to be paying higher gas prices for the rest of this year? And in your view, does that take a rate cut off of the table? And secondly, by staying on as Fed governor, what message do you think you're sending to the president?
I don't know what gas prices are going to do for the rest of the year. And it will depend on how long the strait remains closed and how quickly it can be reopened and that kind of thing. But remember, when gas prices go up, that's disposable income coming out of people's pockets, so they're going to spend less on other things. So there will be a hit to GDP. So it's a question whether spending goes down to offset the inflationary effects. So it's not the answer isn't obvious ex ante whether you should move your rate or because of that. We'll have to see how it evolves. I'll stand on what I said earlier.
Victoria. Hi, Victoria Wheel with Politico. During your tenure, Fed independence has come under pressure in a lot of different ways. And I was just wondering, practically speaking, where do you see Fed independence as coming from? Is it the law? Is it political support from Congress? Is it the actions of the Fed? What sustains Fed independence?
It's to a significant extent, it is the law. And, you know, we've had to go to court to successfully so far to defend it. But, you know, the law does create a setting in which the Fed can and is directed to make monetary policy without consideration of political factors. And so, part of it is law, but it goes beyond that, though. There's a set of customs. There's a boundary line between the Fed and the administration, between the Fed and the Treasury Department. And we need to continue to respect those boundaries about what the Fed is responsible for and what the Treasury is responsible for and what the rest of the administration is responsible for. So some of it is legal. In fact, it's all legal at the end of the day, but it's more than just monetary policy. We don't want to use our tools we haven't wanted to use our tools to achieve goals that are really clearly outside our mandate. Every administration looks at our tools and thinks, it would be good to repurpose those to serve other purposes, but that's dragging us into politics and in fiscal policy. So we've resisted that.
Well, and maybe another way of asking it too is, do you think that independence is as strong now as when you became chair? And if so, why?
Look, I think it's at risk. I mean, I think these legal assaults, if you will, as I mentioned, the institution is being battered over these things. We're having to resort to, the courts to enforce our legal, it's not so much independence. It's really the ability to make monetary policy without political considerations. That's what we're talking about. And we've had to do that, and we've been successful so far, but that's not over. None of that is concluded yet. And it's really important. It's not about people who work at the Fed or the institution. It's about the benefits of a central bank that makes decisions based on analysis and our best thinking, rather than trying to help or hurt politicians. It's there's a bright line between central banks who do one and do the other, and successful countries have uniformly, successful advanced economy countries have a really strong set of protections around their central bank just for that reason. So that's what it's all about. I think I am confident, as I said in my remarks, that the Fed will continue to make its decision based on analysis, rigorous analysis, and not on political considerations. But we've had to fight for it, and I'd like to think that we can get out of that era and go back to respecting what the law says and what custom has been, which is to let the Fed do our thing. It's an institution.
Powell sounds like he's making excuses. If the building wasn't so far over the budget, I think there wouldn't be an issue. There wouldn't be anything to say other than the constant too late, Powell, whatever. But it sounds like he's making excuses. Sorry, I didn't realize I was stuck on that there. CoreWeave still pushing higher. CoreWeave.
The executive branch? Is this something that others have, talked to you about?
So I think that I don't want to report on what my colleagues think. They can speak for themselves, but there are widespread concerns that these things.
All right, CoreWeave starting to push a bit higher. If we can get NVIDIA to turn, that would be good. NVIDIA dipped more than I anticipated it would today. NVIDIA coming into the last 50 minutes of the trading day. We got earnings tonight. NVIDIA, Apple, no follow through.
Stewards of the public's money and efficient, and Chris in particular, Chris Waller, is particularly passionate about that. Of course, so are the reserves, so are the presidents, and it's a question of how do you accomplish it. We of course, and Chris said this in his speech, we want 12 strong, independent central banks with their own staffs and their own monetary policy views and all that. But you know, there are things that are done in all 12, which could well be done at one, much more efficiently and with cost savings. And so there's a back and forth going on that, but everybody's on the same page. The other thing you touched on was the idea of removing reserve bank presidents from office over different views on monetary policy. And I would just agree with him so strongly that would be the beginning of the end of the Fed's ability to make monetary policy independently. Every administration could come in.
Okay, Apple. See if Apple can go get a little runner here. Be nice. Broadcom. Broadcom turning back up. Broadcom on the move. Broadcom is flying now off of this gap down yesterday. Okay, futures turning back up. Futures. Okay, back above VWAP. Okay, let's take a look at Trace real quick. Okay, so you can see the red. The red is telling you this could be a really fast move in this area. Red equals fast moves. This could go a lot further than people are anticipating right now. I would say it probably stops at 71.40 at this point. Okay, initial resistance right here. Okay.
Thing we can do is to use our tools to guide inflation back down to 2%. I think trying to get there really quickly could be very costly in terms of job loss and things like that. But we try to get there over time in a way that does the least damage possible. And our commitment to that is never ending and unshakable.
How do you describe the economy outside of the misbehaving inflation? I mean, it's still awfully resilient.
Intel. Okay, there goes the futures. Futures are on the move here. Okay, S&P is driving higher. So you can see how that red, how the negative gamma.
Which is really a better signal of a momentum that comes actually higher than that. So that's a positive thing. If you look at the unemployment rate, 4.3%. So that's a low rate. That's pretty close to mainstream estimates of the natural rate. We've been there for a long time. So it doesn't feel like a good labor market to some who don't have jobs because quits are really low, hires are really low, and there's effectively no new net job creation. So that's in a sense, the labor market is in balance, but it's an unusual and uncomfortable kind of balance. People who don't have jobs will have a hard time breaking in unless somebody quits their job. So that's pretty good.
Fast.
We think that inflation should subside over the course of this year because it's kind of a one-time increase. It shouldn't be repeated. And that should start happening pretty soon. The energy inflation that we're getting should go through fairly quickly, and we'll just have to see how that works out. In the meantime, we think our policy stance is in a good place for us to hold and wait developments.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. At the risk of beating the dead horse here, clearly 3 members objected to keeping that easing biases statement. And you said that the majority still didn't need to move to new language at this point. So does the majority of the committee still have a bias towards cuts at this point, or has the bias on the committee shifted away from cuts towards holding or hikes that was needed?
So I think that the center is moving toward a more neutral place, and that's sort of what markets are saying too. I just think there's a lot of signaling going on when you change guidance like that, and so we just, I guess, the majority of us didn't feel like we needed to.
Let's see how far they take this.
Right now, and maybe it'll come to that, and the reason is because we're kind of waiting to see what happens with
Okay, what's a lot of stocks hanging in there. Intel, of course, Intel at the very high of the day. That's just crazy. We'll be at $100 by tomorrow at this rate. Okay, Intel. We've got Nokia with upgrades today. Big move today in Nokia. A little extended now. You could wait until it pulls back if you aren't interested in an entry, or buy something further out in time, like next June, or maybe January calls. See what that does. Okay. Okay, I got some issues with Thinkorswim here. Let me just reboot Thinkorswim. Swim. Yeah, Powell sounds very defensive, talking about letting the Fed do its thing. You know, we're just people. We don't need any of that political stuff. Just kind of funny listening to whenever somebody gets called to the carpet, basically, that's when the excuses start. How do you get $600 million over budget? I mean, I can see what they're talking about, the change orders. If you're a construction person, you know what I'm talking about. Change orders. If the architect isn't good and misses a lot of things, you know, change orders are inevitable because contractors are trained to see the discrepancies, and they know that those are dollars in their pocket. But $600 million is a lot. Of course, it's a big building. It's in Washington, D.C., but still, you know, it's still the same idea. Either you're over budget or under budget. Okay.
That's just a very different situation than for a very long time. What the Fed and other central banks were doing all the time was demand management, and there was always the inflation mandate, but inflation was low for 25 years. So this is a very different.
Having to reboot my Thinkorswim MB. Okay.
It's been challenging, and we've tried to do our very best through these really challenging times, and I'm really proud of the work that I've done, that my colleagues and I have done during these years.
He keeps talking about how great of a job he's done. I think I like Powell. He's done a good job. Don't get me wrong. If you've ever been an employer before, you know when the excuses start flying. When people get defensive, they're straying away from the actual issue, directing your attention over to this shiny object over here in your left hand instead of what's going on over here in the right hand. Anybody that employs people knows what I'm talking about.
They want to take the making of monetary policy, the setting of interest rates to support the economy to achieve maximum employment and price stability. They want to take that out of the direct control of elected politicians. And the reason is elected politicians are always running for election, and they'll always want low rates, and that will lead to inflation over time. So
what leads to an inflation is printing like crazy back in COVID times. I hate when they do that. He's I don't know. He's gaslighting in some respects here. If you've listened to Milton Friedman at all, you know almost all inflation is due to the government printing dollars that aren't there. Happened in the Weimar Republic. It'll continue to happen. Okay, that looks pretty good. CoreWeave looks good. CoreWeave, all right. Actually, you know what? Let me keep this here. I had to reboot my Thinkorswim. What's that?
I want to speed up or slow down the economy. I mean, think about that. If that's what we were doing, we'd have no credibility. Markets would lose faith in us, and our ability to control inflation and have any respect would be gone. And let me say, whatever people say, the markets believe in that we will produce 2% inflation. If you look at longer run expectations, markets believe that there's no sense in which
He's talking really, I don't know if you've noticed, he's talking a lot different than he normally does.
If you disagree with that, then you can go ahead and bet against the markets, but the markets are pricing in Fed credibility.
Peloton. Okay, see, let's Peloton. What's Peloton doing? I've had a Peloton for a while since it turned the corner. 60-minute continues to drive higher. Peloton. Okay, this looks pretty good. Down 2 days, up a day. Down 2 days, up a day. Peloton. Let's see. I have January calls, right? Yeah, January calls on Peloton. Looking pretty good. Peloton's worth a shot. Peloton.
Not just this time, but it's been remarkably resilient for some years now. The U.S. economy has just powered through shock after shock.
Yeah, AI has definitely been a blessing and a curse at the same time. Okay, coming into the close, we got 170 stocks advancing, so I'm not sure where this is coming from, but CoreWeave at the high of the day. Let's see, I got to keep an eye on Apple because I have calls that could go in the money. Okay. Let's see. All right, so Robinhood finally coming off the low. Robinhood.
One last thing. You mentioned those economies in Southeast Asia that are particularly dependent on petroleum. They make a lot of the stuff that American consumers buy. So was there any discussion today about whether or not those costs getting passed along to consumers is a real concern and whether or not that might push up inflation?
So all of those things.
Okay, so Tesla. Let's take a look at the Tesla trade. Tesla. Okay. Tesla, we got the 50-day overhead. Okay, so you're looking at that on the what is that, Mondo? A 5-minute chart? I can't figure out what 1 day. It's got to be 1 day 5-minute, right? Okay, Tesla. Let me look at 1 day 5-minute.
Economies in Western Europe and certainly in Asia are feeling. Anyway, thank you very much, everyone.
All right, Jay. All right, Jay. Hang in there. Okay. Is it the 5-minute or the 15-minute you're looking at? It's got to be the 1 minute. It's got to be the 1 minute, right? No? 5-minute? Okay, my 5-minute, the 200 period is right overhead. Yours is downward sloping. Mine's upward sloping somewhat. Okay, we got 30 minutes to go. Robinhood coming off the low. Robinhood worth a look. Nokia. Let's see. What was I looking at before? Peloton. Peloton worth a look. Peloton is worth a look. It's trending.
We would see ongoing polarization or potentially more polarization by the Fed and when it comes to decisions in terms of
AMD looking good. Oh, AMD looks good. Nice one. Nice call. Nice call, Cayman. Almost joined you.
That is his main objective. And I think he will stay on for the foreseeable future because he wants to ensure that that is the case and wants to see that out of Kevin Morris, we don't end up with a potential polarization of policy decisions. But the decision to stay, Greg.
Okay, AMD. Cayman mentioned this one earlier. I was looking at it at the same time. Okay. AMD.
In terms of monetary policy, we are seeing that the center.
AMD. Okay, AMD. Right around right around 1130-ish. Okay, we made a higher low and then an immediate little bit lower low. RSI got oversold, and we've been trending ever since. Really nice trade there on AMD. I do have AMD calls already, but let's see what they're looking like here. AMD. Yeah, AMD, those calls are okay. Amazon. Love to see this much higher. Amazon. Can't decide whether I want to take some puts or not on Amazon just in case. Amazon. Let me just look here. Amazon. I'm not taking any iron condors tonight. Amazon. The banks. Okay. Amazon. Calls are pretty expensive. Only a 71%. This could get up to 90%, so this could go higher. So if tomorrow we're up, if tomorrow we wake up and Amazon is much higher, or even tonight, if it's much higher, we could get up to the 90 percentile, in which case I'd be taking some profits off into strength. I already have calls on Amazon. Maybe I'll take some puts. Puts are cheap. I got the 270, 275. We could easily see that level. We could easily see 275 if everything is good. Let me see what I'm going to do here on Amazon. Amazon. AMZN. Amazon. For Friday. Okay, Amazon. Puts are pretty expensive. Let's see, Amazon. What happens if Amazon, AMZN. What do I have here? I have July. So that has plenty of time to recover. This morning's low was 257.50. Let's see what 255s look like. 255s, $6. That's a 36 delta. What about a 30 delta? 250 by a vertical 250. Okay, so I'm going to take some 257.50s. Puts just in case. They're going to be cheap. Okay, going to get into those at. Okay, I got filled. I had 250, 247.50. Just a little bit of cushion on Amazon.
Negative demographic shocks, negative energy price shocks, negative tariff and trade policy shocks that have all led to lower economic output and higher inflation. Now, yes, the economy is resilient for the time being, but there's a question of how much will eroding growth
270, 275 calls into earnings. Looking for at least 275, 275. All right. Monitor. Hopefully they blow this out. Hopefully they blow it out. And these puts are not needed. 73 cents. Okay, these are 73 cents. 73 cents filled. 73 cents.
You had this gradual lowering of rates, and therefore your return was basically from that bond appreciation, whereas the income wasn't a big factor. Now, as we're thinking about this era of, okay, the Fed has raised rates, they're in a relatively comfortable stance, and we less about that movement of down rates and capital appreciation or depreciation versus income. And even with especially with the Fed potentially getting a little bit more hawkish here or staying pat or staying on pause, that that income is really going to garner a premium, and so we want to think about different ways to enhance that.
Here, I want to thank you. You have to go for a big tech report. I got a number of
All right, so my calls are July. Amazon.
We want to continue to monitor how that CapEx guidance comes out. Because what we saw very clearly last quarter was those who beat on CapEx and beat more on CapEx versus those that beat more on revenue than they did on CapEx. The market is not rewarding that CapEx spend as much. And indeed, when you look at the results underneath the hood, this is becoming a very concentrated Mag 7 school where
Okay, Nvidia's turning. Okay, Apple. What's Apple doing? Apple. All right, I got some calls that are going to expire worthless. My mistake. With these weeklies, you got to be paying attention when you buy some of these things. Double check. I've made this mistake twice now. I caught the first time. This time I didn't catch it until this morning and realized, oh, why is this down? So 272 needed to get above 272. Oh well. Okay, let's see what Money Magic levels look like on Amazon. Amazon. Okay, 270, 300. So I could see that would be nice. 270. I hear you. I'll get you something here, kitty cat. Kitty cat's hungry. She's yelling at me. I don't know if you heard that. Kitty cat's yelling at me. Amazon.
To make sure there is true transparency and finality. His concerns about the legal actions against the central bank. That we said the actions against his colleague, Fed Governor Lisa Cook, have not played into that. Take a listen to what he had to say.
Concern is really a series of legal attacks from the Fed, which threaten our ability to conduct monetary policy without considering political factors. Now, I want to note here, this has nothing whatever to do with verbal criticism by elected officials. I've never suggested that such verbal criticism is a problem, and neither has anyone else here. But these legal actions by the administration are unprecedented in our 113-year history, and there are ongoing threats of additional such actions.
All right, IWM just dropped off a level today, just right there. Okay, and we only got 25 minutes to go. Okay, futures dipped as well with Fed. Okay, we're down 14 handles right now. Okay, hopefully the earnings are going to be good. So fingers crossed. I did take some puts on Amazon just in case. Google, I'll hold on to those as well. I didn't buy any puts on Google.
To see how things work out. He says we are pretty close to the neutral rate right now, well in the range, but perhaps the upper range of that. And that there's not much cause for policy to be meaningfully restricted at this point. Though when I asked him whether the bias of the committee is still for cutting
Apple.
rates, given that he said that many members, or the majority of the committee rather, did not see the need to change language in the policy statement towards a buying easing bias. He said the majority is moving towards more of a neutral position away from cutting. And he also was asked about whether Kevin Warsh would be able to stand up to President Trump and whether he was confident in that. And Powell cited comments that Warsh made during his confirmation hearing last Tuesday and said, "We'll take him." I was for Josh.
Okay, Intel at the very top, tippy top of today's range. ARM Holdings, nice little pop back up on ARM. 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 Okay. ARM Holdings.
Social media posts yet, Jen. I mean, I'm just curious what you think his next move could be, Jen. I mean, is he calling Gene Pirro right now and saying, just wrap this up totally, completely?
Okay, futures turning back up. Futures.
To make Mr.
sort of a middle ground to make sure that his guy, Warsh, is in place by the time that Chair Powell's term expires. The fact that Powell is staying on is a direct consequence of the president's actions that he has taken against Powell and the central bank. And so it'll be interesting to see whether the president mounts any legal challenges specifically against Powell to try to get him off the board. This is something that Treasury Secretary Bessent has been concerned about as well. Had the president not brought these, or the administration not brought these legal challenges against the central bank, I think would be in a very
AMD, very nice run up on AMD. If you traded it with, came in earlier. Nice. ARM Holdings turning back up. Okay, Broadcom still pushing. Chips had a pretty decent day. Some are down, some are up. SMH doing okay. Okay, so we got wicks underneath the candles, so it came down to the 90 EMA. Will the trend continue? Well, you know, when you think about overbought, okay, just think about silver. Think about silver. Look at the run up in silver over here. That was 3 months straight. 3 months before it finally lost some gas there, and now it's below the 50-day. So can semiconductors keep going? If they keep making money, and if these tech giants talk about chips, we could see NVIDIA back up above 212, 215 very quickly. All right, so NVIDIA could be up big depending on what these tech giants talk about tonight. All right, so NVIDIA.
Here's the hack for splitting your rent when your building doesn't allow it. Does your building say you can't split your rent payment? Plot twist, now you can. SplitPay just launched in all resident portals, which means that your landlord doesn't even need to know that you're splitting your payments. You pay half on rent day, half 2 weeks later, and they get paid in full like always. Plus your building credit history every month, which is game changer. Here's
All
the
right.
hack for splitting your rent when your building doesn't allow it. Does your building say you can't split your rent payment? Plot twist, now you can.
Oh my God, 600, 800, I want $800! Yes, let's go! Jackpot, go! I want $800!
Oh God, I can't stand those stupid commercials. People playing these stupid games trying to win money. Who does everybody win money? Obviously not. Somebody's losing money somewhere. Okay. All right, we got a few minutes to go here. 14 minutes. 14 minutes. Okay. Iran revenge for the martyred leader remains in place. Iranian TV. Okay, yeah, a lot of talk. A lot of talk. Iran. A lot of talk. Okay, we got coming into the close here. 18 minutes. What? That doesn't seem right. That doesn't seem right. Is that right? This is running late. Okay, let me just okay, let me see.
BATL.
Okay, yeah, that's right. All right, so get the right time. 15 minutes to go. 15 minutes.
FCEL.
15 minutes. So semis did very well today. Materials, SLB. Coming into the close, XLB. XLC Communications. Okay, sitting here. So hopefully this can be much higher if Meta and Amazon and the rest of these are higher tomorrow. Let's see what's Apple doing. Okay, Apple. NVIDIA, that could be higher depending on what they talk about as far as spending is concerned. Google, of course, looking for Google to break out. We'd love to see all three of these go.
And so far, that's been relatively benign, and so that's kind of supporting, Powell's comments in terms of market longer-term expectations not being unduly impacted. If you started to see that change, that's going to be a major signal for Fed policy pivoting more towards the inflation concern. If you start to see that show up in that metric.
Jeff, last question from us. Last time we had yields at these levels, close to them, was the end of March. And every person we spoke to in fixed income on Wall Street had a very favorable interpretation of these moves. They said we were creating value and they wanted to buy it. Jeff, do you think we're creating value this afternoon? And do you want to buy?
Well, I think the move in the front end is creating some value. You're seeing a big curve flattening. Again, a lot of it is conditional on that pass-through of inflation, but stepping out of the curve into the front end, we're having Warsh come in. He's already signaled that he wants to look through that and take a more dovish interpretation. Will he be able to bring the committee along with him? When you start pricing hikes in, it depends on the oil move and it's persistent, but I think there's a little bit of value there. Completely different answer, really, to the opposite side when you look in the long end of the curve. The long end needs to build term premium. We got a savings glut that's turning into a savings deficit, particularly as we need to reshore, rebuild, reallocate in global savings around the implications of this Iran war. All at the same time as fiscal deficits are increasing the demand for that borrowing. I think there you see a different story, and that's less of a buying opportunity and more of something we're going to need to see increase in terms of term premium to bring investors back into the market.
Very curious.
Great answer. Jeffrey Rosenberg there at BlackRock, breaking down his views. Not because I think it's the right answer, just it's an important answer to a very difficult question right now. 2-year yields higher by 10 basis points, 10s at 441.
If you think that right now there's a great opportunity to buy in the 10-year, give us a call, because right now everyone who we ask seems to go right to the front end and saying that's where I'm going to get some yield. But right now on the long end, things
Okay.
ultimately we just can't get ahead of it, and that seems to be a theme again and again.
According to Milton Friedman, of course, inflation is always and everywhere a monetary phenomenon caused by the money supply, M2 growing faster than the economy's output. During COVID, of course, M2 supply grew by a historic 27%, which monetarists point to as the primary driver of subsequent inflation that we're dealing with right now. So tightening interest rates bring this under control by reversing the mechanisms that created the money supply in the first place. Loan contraction, most printing happens when commercial banks issue new loans, okay, which creates new deposits in the banking system, higher costs by raising the federal funds rate. The Fed makes borrowing more expensive for banks and by extension for consumers and businesses. That reduces demand, higher rates discouraging more higher rates discouraging new mortgages, car loans, and business investments. Fewer loans means less money is being printed into existence. Okay, so we got to drain the existing liquidity, quantitative tightening, asset sales alongside rate hikes, because the Fed didn't do anything. They just kept the rates the way they are. Didn't expect them to do anything. Alongside rate hikes, the Fed can use quantitative tightening by selling treasury bonds and mortgage-backed securities it bought during the pandemic, removing cash. When the Fed sells these assets into banks, it takes cash out of the private banking system and effectively deletes it from the money supply. So that's pretty cool when you think about how they do this, the mechanics of it. Increasing demand for holding money, incentivizing savings. Higher interest rates make saving more attractive. Investing also. When people move money into long-term CDs or savings accounts, it reduces the velocity of money, how fast it circulates through the economy to drive up prices. That also lowers demands as spending slows. Too many dollars chasing too few goods. Dynamic stabilizes. All right, so that's what we had for several months, several years since COVID. Too many dollars being printed, chasing too few goods. That increases the prices of everything. That dynamic is stabilizing, forces businesses to limit price increases to attract buyers. I've already seen that in something like, I like to buy, what you call it, Dunkin' Donuts coffee. I have a particular flavor I like. Fufu vanilla bean. And the prices just gotten ridiculous. Before, right after COVID, the prices were like $11.99 for a 20-ounce bag. Now it's $18.99. I stopped buying it. I started looking at it. I just noticed that the prices are coming down. It's $16.99. They're trying to get back to where I'll start buying again. So just something simple like that. Eggs. We can go to the farmer's market and get eggs for, farm-raised eggs for $5 instead of spending $6.99, $7.99, $8.99 for organic eggs in the store. All of this is starting to affect M2. M2 declined for the first time since the 1930s. The M2 supply actually began to decline in 22 and 23 as a direct result of this tightening. Okay, so all right, we've got 8 minutes to go. 8 minutes. Google back up to the highs. Let me see. Do I have money supply on here? Jobs. CPI, Consumer Price Index. University of Michigan Consumer Sentiment down there at 50, 49.80. That needs to turn back up. So consumer sentiment is very bearish. Okay, so if anything, this is going to get better before it gets worse, I would imagine. It's already at the bottom, so can it get any worse? Also, the AAII bull bear on the monthly time frame is starting to trickle higher. So this is another thing. When we talk about the S&P 500 potential for this to move higher, okay, for the S&P, we talked about this a little while ago. Let me show you the chart I was looking at. Okay. So I was talking about we're up 5 weeks. What's going to propel this higher? All right, we made a new all-time high. Same thing happened over here in April of last year into March. We made a new high. Did we roll over immediately? That first candle above 61.47. Okay, did we roll over here? Okay, I'm looking at this right here thinking, can we continue to move higher? Can we continue to move higher? Well, right here in 2025, we made a new high, that first bullish candle, and then we followed through and just kept trending above the 10 EMA. So we could pull back a little bit, but what would be a catalyst? Well, number one, everybody's bearish. Still, AAII bull bear is still somewhat bearish. It's below the zero line, could follow through. Okay, the Michigan consumer sentiment is at the low. The reason it's green is because it's telling you this could turn the opposite direction. Short term, yeah, there's an issue short term where we could see some consolidation. So just sit tight. This is probably going to start developing soon. Okay, equal weight index has pulled back. Okay, this is day 8. No, 1, 2, 3, 4. This is day 7. Okay, pulling back to the 9 and 21 day. The number of stocks above the 20-day have tapered off very briskly down to 50% from 80%. When it gets to the red zone, that's when we want to start taking profits off the table, we mentioned. 50-day, same thing, down to 50%. So we're ready to pivot. We're ready to pivot. Okay, maybe the catalyst is the earnings that come out tonight and tomorrow night. Okay, RSP. Okay, the equal weight. Advanced decline percent. VIX is still pretty low. Okay, all of these are turned down. All right, so you see what I'm saying here? Okay, we're moving lower. So do you want to buy puts into the lows? Or do you want to wait for this to hook back up? If it hooks back up in the next couple of days, that could be because of earnings. And if that does happen, we've already pulled back quite a bit on many things. Okay, the equal weight. All right, so number of stocks above the 20-day pulling back. So follow this with me. We're closer to potentially to a pivot, provided earnings are good from these names over here. Okay. Consumer sentiment, it's at the low. That's why it's green. Okay, so we could see some pivoting here shortly. So just keep that in mind. Let's see what the earnings come out like tonight. Microsoft trying to push back up. Apple just sitting here. Okay, so Robinhood, we got a bid in Robinhood. Okay, bid coming off the low. Robinhood. Okay, Robinhood with a doji. Excuse me. Robinhood. Okay, so it hit a low. Robinhood got down to 70, turned back up. RSI is rising. Let's look at the 60-minute. Okay, we're down here near previous support, so maybe we get a bounce, move back towards 77. It all depends. All depends on what we have going with the earnings. So AMD looks good. This could be up even more tomorrow. Okay, Oracle turning up. Oracle turning up. So looking for these to pivot back up. CoreWeave having a good day. CoreWeave a little profit taking at the end of the day. Looking for a follow through tomorrow. USAR, not much there. NXPI, NXP Semiconductor held its gains for the most part. Intel held its gains for the most part. It's at the high of the day. It's going to be $100 per share easily.
You rewind, and you think about where we were in terms of the conversation when it comes to February, a little bit in January too. There are a lot of existential concerns about software, about the private credit industry's exposure to software, and I mean that story is still playing out. So I wonder where you think we are in it.
So private credit has grown as an asset class over the last decade or so and has really come into the market where traditional banks have been constrained due to regulations coming out of the global financial crisis, and it played a very important role in helping finance. They also benefited from a low rate environment that the
Applied Materials.
Us to do. What happened in March of 22? The most aggressive tightening. And so companies that had been leveraged have found it harder to support their debt coverage ratio. With respect to private credit, there are a couple of nuances, which is they started out in the mid-market and their exposure has broadened into some larger transactions. They've also opened their investors into the retail base, which has perhaps a different risk appetite, and that has put some pressure. But to answer your question, which is kind of where we are, I would say the following. If you put aside the tricolor and first brand headlines and categorize them as idiosyncratic.
Chevron, let's see what Apache did today. Apache. All right, still on Apache for the last couple of weeks. We bounced at the 50-day. 30 seconds to go. 30 seconds.
Inherent modes, deal with proprietary data, and it's truly hard to rip out versus software which is more horizontal in nature and can be replaced by a bot. In terms of, so overall exposure is kind of call it 20-25% of the market. I do believe that it is manageable.
All right, that is a good place.
Okay, we're about to close.
Very busy day. That is Michal Kapshi, is head of investment and corporate banking over at Mizuho Americas. Meanwhile, of course, we do want to get a little bit back to that Fed decision that we got.
Okay, futures popping back up at the last second. Okay. All right, folks. I got a hard stop, so I'm going to take a break and stretch a little bit. I'm going to get off the mic, but I will be in the trading room. I'm your host, Cousin Benny, coming to you from theclosingprint.com. It's Wednesday, April the 29th. Okay. Have a great evening, everyone. I'll see you tomorrow. Ciao.
Potential hikes, that's kind of what the dissents were about, that we should go